Okay, my dear students, very good morning to all. Now we are going to discuss about GST marathon. That means in this GST marathon, we are going to discuss the most important areas you need to keep focus. Because not everything is that much important from the point of view of the exam. Okay, from the subject point of view, everything is important. But it is not that much important from the examination point of view. So hope this GST marathon session, what we are going to discuss in this video series, definitely it will be helpful to you to focus on the most important areas from the examination point of view. And in order to get at least some 30 to 35 marks in our GST portion at all, definitely this particular marathon session will be useful to you. That is the thing, what I believe. Okay. Now let's come to this particular session. So, but don't be confused with marathon will cover everything. In marathon, generally we will cover the most important areas which are required for the examination point of view. So, I will start chapter wise in which way our masterminds material was prepared. In that particular manner, I am going to taught you in the same sequence. Then it will be easy for you to understand which one you need to keep focus in chapter number 1 and which one there is a possibility to avoid it. Definitely you can go through all these things. Okay. So now I will start with this GST in India and introduction part. In olden days, that means in the year 2017 or in the year 2018, they are of much importance. But now I think there is a possibility that these areas can be asked only in the MCQs. Nowadays, in the descriptive question of paper, I think no questions can be asked. If at all there is a possibility, in which areas we need to keep focus, those things I am going to discuss now. So this is the introduction part. Generally, you can ignore them straight away. So the important areas in chapter number 1, we need to keep more focus will be features of identity, structure, all these things, legislative things, deficiencies, taxes subsumed. There is a possibility that this can be somewhat important from the examination point of view. What are the taxes that are subsumed in our GST? What is meant by the word subsumed? Merged. What are the taxes that are merged in GST? So let's say with respect to this particular scenario, let's say for example with respect to this one, how many types of GSTs are there? There are basically 3 types, generally CGST, SGST and IGST. Okay. With respect to this particular thing, CGST, Central GST, and second one is SGST, State GST, the next one is IGST, Integrated GST. Okay. In this, what are the taxes that are merged in this particular CGST? Like central excise duty, service tax, additional excise duties. Like this, so many number of taxes are merged in CGST. In the same way under SGST, VAT, purchase tax, entry tax, entertainment tax. Like that, so many taxes are also merged in SGST. And in IGST, CST, CVD, SAD, these are the taxes that are merged in IGST. Okay. See this? So these are the taxes that are merged in this particular in this our GST regime: excise duty, additional duty of excise, CVD, special CVD, customs duty, service tax, CST, and their relevant surcharge and cess are merged in CGST as well as IGST. That means these are the taxes that are merged in GST. And state level taxes, these are also merged in GST, like VAT, entertainment tax, luxury tax, advertisement tax, entry tax, purchase tax. All these taxes are also merged in our GST. The question is here, sir, that means each and every indirect tax is merged in GST? Answer is no, ma'am. Only the taxes that are part and parcel of supply chain. The taxes that are part and parcel of supply chain or the taxes that are merged in GST. Sir, what is meant by the word supply chain here? Supply chain means manufacturer to distributor, distributor to wholesaler, wholesaler to retailer, and retailer to consumer. This one is known as supply chain. The taxes that are part and parcel of supply chain or the taxes that are merged in GST. Okay. So, like what we discussed, excise duty, service tax, VAT, CST. So, like this, whatever the taxes that are part and parcel of this particular supply chain. This is merged in our GST. Sir, that means not every indirect tax is merged in GST. Answer is no. Not every indirect tax is merged in GST. Only the taxes that are part and parcel of supply chain are merged into GST. Sir, name any tax that is not merged into our GST regime, even though it is the indirect tax. Like what we can say is alcoholic liquor for human consumption, petroleum products, basic customs duty and exports duty, road and passenger tax, toll taxes, property tax, stamp duty, electricity duty. Okay, these are the taxes that are not merged into our GST. For example, alcoholic liquor for human consumption, petroleum products, basic customs, that means import duty and exports duty, road and passenger tax, toll taxes, property tax, stamp duty, electricity duty. These are the taxes that are not merged into our GST. That means the taxes which are part and parcel of supply chain or the taxes that are merged into GST. That is the thing we need to remember. Okay. So based on that, how many, next question is here that can be important from the examination point of view in this particular chapter number 1, GST models worldwide. How many models of GST are there worldwide? There are basically 4 models. National GST, state GST, non-concurrent dual GST and concurrent dual GST. Like that, 4 models are there. One is national GST, second one is state GST, third one non-concurrent dual GST, fourth one concurrent dual GST. Like that, 4 models are there. In national GST, there will be only CGST. There will be only CGST. That means center will levy the tax and it will share the revenue with the state. Generally, republic countries like China will follow this. And second model is state GST. In that, there will be, in this, there will be only SGST, and federal countries like United States of America will follow this. United States of America will follow this. Okay. Third model is non-concurrent dual GST. In this, center levies tax on GST on services, that is CGST will be levied, and on the goods SGST will be levied. On the services CGST will be levied, and on the goods SGST will be levied. But no country is following this non-concurrent dual GST model because it may lead to cascading effect. Okay. And the fourth one is concurrent dual GST model. In this, both center and state will levy the tax on both goods and services. And India follows this concurrent dual GST model. Sir, why India follows this concurrent dual GST model? Because it gives financial freedom to both the governments. Okay, that's why India follows this concurrent dual GST model. Okay, based on this concurrent dual GST model, there are 4 types of GSTs in India now. One is CGST, second one SGST, third one UTGST, fourth one IGST. Like that, based on this concurrent dual GST model, in India, 4 types of GSTs are there. Okay. So there are 4 types of GST are there: CGST, SGST, UTGST, and IGST. And supplies can be here divided into 2 types. One is intrastate supply. If at all it is a intrastate supply within state, intrastate supply within state, in that case, which type of GSTs will be levied? CGST plus SGST will be levied. If at all it is a intrastate supply within UT with state legislature, if at all it is the intrastate supply within the UT with state legislature, then what is needed to be levied, ma? CGST plus SGST then also. Okay. If at all it is the intrastate supply, this is 1, this is 2, and this is 3. If at all it is a intrastate supply within UT without state legislature, in that case, what is needed to be levied, ma? CGST plus UTGST. Okay. And fourth one is, if at all it is a interstate supply, it can be between UT to UT, or it can be between UT to state, or it can be between state to state. In all these 3 scenarios, definitely what is levied, ma? IGST will be levied. So based on this concurrent dual GST model, based on this concurrent dual GST model. So generally 4 types of GSTs are there, ma? CGST, SGST, UTGST, and IGST. If at all it is the intrastate supply within the UT, sorry, within the state, CGST plus SGST will be levied. If at all it is the intrastate supply within the UT with state legislature, CGST plus SGST will be levied. If at all it is the intrastate supply within the UT without state legislature, CGST plus UTGST will be levied. And if at all it is the interstate supply, it can be between UT to UT or between UT to state or between between the states. In all those cases, IGST will be levied. This is the concurrent dual GST model what India follows. Okay, and benefits of GST is not required here also. Now, constitutional aspects is also somewhat important from the examination point of view. Okay, generally, if you observe the constitutional aspects, so article number 246, initially we need to start not article number 246, we need to start from article number 265. Because in order to levy any tax, in order to levy any tax, what is needed? Constitutional authority is needed. In order to levy any tax, constitutional authority is needed. Okay. So, which article number? Generally, in Act, just like section numbers and subsection numbers are there, in the same way, in the Constitution, article numbers, entry numbers will be there. So, one of the article number is article number 265. As per article number 265, what does it say? No authority, no tax. What does the article number 265 says, No authority, no tax. That means without constitutional authority, no government is able to levy or no government is able to collect any type of tax. That means simply, in order to levy any tax, constitutional authority is needed. In order to levy any tax, constitutional authority is needed. Sir, how do the government knows whether it is having the authority to make any law, whether it is having the authority to levy any tax? For that, another article number is there, That article number is article number 245. What does article number 245 says? If the matter is of national importance, then Parliament will have the authority to make the law. If the matter is of state importance, then state legislature will have the authority to make the law. What is article number 245 says, If the matter is of national importance, Parliament will have the authority to make the law. If the matter is of state importance, state legislature will have the authority to make the law. Okay. If the matter is of national importance, generally central will have the authority to make the law. If the matter is of state importance, state legislature will have the authority to make the law. Okay. Now the question is here, sir, if at all both the governments feels that that particular activity is important to both of them, then definitely there is a possibility for the citizens that both the governments will levy the tax and the common man has to suffer. Generally, there is a possibility for the dispute also between the center and the state, because central will say it is of its importance, that is national importance, and state will say it is of its own. In those cases, there is always a possibility for the dispute. In order to avoid the dispute, another article number was created. That particular article number is known as article number 246. So, what does article number 246 says here? In order to avoid the dispute between center and the state, three types of lists are prepared. List 1, list 2 list 3. Okay. With respect to this list 1, list 2, list 3. List 1 is union list, list 2 is state list, list 3 is concurrent list. Okay. With respect to this list 1, union list, who is having the authority to make the law? Central government is having the authority to make the law. With respect to state list, state government or state legislature will have the authority to make the law. With respect to concurrent list, both the governments can make the law. Central government can make laws with respect to union list. Central government, state government can make the laws with respect to state list. Both governments can make the law with respect to this concurrent list. Sir, in that case, if at all the matter is covered in the concurrent list, then both the governments can levy the tax now? Answer is no. So just now you said that with respect to the concurrent list, both the governments can administrate the matter now. Yes, both the governments can administrate the matter. But it covers, okay, this concurrent list covers non-taxation matters only. This concurrent list covers non-taxation matters only. That means, as per article number 246, taxation matters are covered either under list 1 or list 2. So, list 3 covers non-taxation matters only. So, taxation matters are either covered under list 1 or list 2. That means list 3 covers non-taxation matters only. Got the point? That means based on article number 246, if you observe it clearly, in India, as per article number 246, at a time only one government can levy the tax. As per article number 246, only one government at a time can levy the tax. It can be either central government or it can be either state government. But both the governments cannot simultaneously levy the tax. Okay. But in our GST, not only central government taxes, but also state government taxes are merged into our GST. In that case, both the governments shall simultaneously able to levy the tax. But as per we know, article number 246 gives authority only to the one government at a time. That's why there is a need to amend the constitution. By using the Constitutional Amendment Act 101, a new article number was created, that is article number 246A. Why there is a need to amend the constitution by the Constitutional Amendment Act 101, and what is the need of introducing this particular article number 246A? The point is simple. With respect to this article number 246A, already I told you, as per article number 246, at a time only one government can levy the tax. But in order to levy the tax simultaneously by both the governments, to levy the tax simultaneously by both governments, article number 246A was created. Okay. As per article number 246A, already we know that two types of supplies are there. One is intrastate supply, Second one is interstate supply. Already we know these two. If at all it is the intrastate supply, CGST plus SGST will be levied. If at all it is the interstate supply, IGST will be levied. Okay. This is article number 246A. Okay. In order to levy the GST simultaneously by both the governments, article number 246A was created. And there is one explanation to this point also. That explanation is simple. On the 5 petroleum products, whenever GST Council approves from that particular date, GST will be levied. GST will be levied. So the government is not saying that on petrol there will not be any GST. Definitely there will be GST. When? Whenever GST Council approves, from that particular date, GST will be levied on these 5 petroleum products. That is the thing we need to remember. Okay. So first point, article number 265 was there, as per article number 265, no authority, no tax. But how the government will know it is having the authority? As per article number 245, if the matter is of national importance, Parliament will have the authority to make the law. If the matter is of state importance, state legislature will have the authority to make the law. But in order to avoid the dispute between center and the state, article number 246 was created. As per article number 246, 3 types of list are there. List 1 union list, list 2 state list, list 3 concurrent list. Union list, central can make the law. State list, state can make the law with respect to those items, and list 3 concurrent list, both the governments can administrate the matter. But it covers non-taxation matters only. That means taxation matters are covered either under list 1 or under list 2. Based on that, as per article number 246, only one government at a time can levy the tax. Okay. So definitely based on that, there is a need to amend the constitution. By using the power, article number 246A was created. As per article number 246A, it was created to levy the tax simultaneously by both the governments. In that, intrastate as well as interstate will be there. And there is explanatory clause also. As per this explanation clause, on the 5 petroleum products, whenever GST Council approves, from that particular date, GST will be levied. Okay. And sir, in this particular scenario, generally on interstate supplies, IGST will be levied. Who will levy this particular IGST? Central government. But in IGST, not only central taxes, but also state taxes are also matched. In that case, this IGST revenue shall be shared with the state government. Shall be shared with state government. In order to make it happen, article number 269A was created. As per article number 269A, IGST Act was created. Based on this IGST Act, the revenue from IGST will be divided between central government and the state government in the 1:1 ratio. That is 50-50. So in order to share the revenue with the state, some constitutional authority is also needed. For that, article number 269A was created. As per article number 269A, IGST Act was empowered, and by IGST Act, the revenue of the IGST will be shared between center and the state. At present, 50% of the revenue will be retained by the center, and the balance 50% will be shared with the state. And there is one explanation clause also here. Imports are deemed to be interstate supply. Imports are deemed to be interstate supply. Okay. Why ma? Because previously on the imports, CVD and SCD were levied. Now this particular CVD, countervailing duty, and SCD, special additional duty, both are actually merged into IGST. Therefore, on the imports, what is needed to be levied ma? IGST is needed to be levied. For that sake, imports are deemed to be interstate supply. Okay, this is article number 269A. You need to keep more focus. See. And another article number is also there, ma, that is establishing the GST Council. In that, nothing much more important is there. Article number 279A, which is constitutional authority. Which is the constitutional authority for establishing GST Council. It is the decision-making body of the GST's GST Council, ma, which is appointed by the President of India. And in this, the important one will be from the examination point of view is only this one. You need to keep focus on this one. Every decision of the GST Council is taken by the majority of not less than 3/4 of the weighted votes of the members present and voting. Simply, every decision that is going to take in the GST Council will be taken by majority rule. So, what is the majority that should be there in order to take a decision in the GST Council? The decision will be 3/4. 3/4 of the members who are presented and voted at that particular meeting. In that, 75% of the majority should be there. 75% of the majority should be there. So, in order to vote at that particular meeting, what is the voting power of central government and what is the voting power of state government? That point also we should remember. So, with respect to the voting power, the state government will have the voting power of 2/3. Central government will have the voting power of 1/3. That means the GST Council was designed in such a way that the central cannot dominate the state. In the same way, state cannot dominate the central. That means in order to take any decision at the GST Council, both the governments should be in a mutually cooperative manner in order to take any decision. So, this is important point from the constitutional aspects in chapter number 1. And rest of the things straight away you can ignore there. Advantages and all these things are not required with respect to this. Okay. Supply. This particular supply chapter is more of a analytical nature, more of a analytical nature. That means 99% of the cases, no direct theory question can be asked. 99% of the cases, practical oriented approach is needed with respect to this particular chapter. So, that is the thing we need to remember here. Okay. So, with respect to supply chapter, generally every act has its own taxable event. Every act has its own taxable event. Okay. That means the taxable event with respect to our GST is supply. Okay. In this particular supply, which section deals with this particular supply topic, Section 7 here deals with the topic of scope of supply. In that section 7.1 is there, 7 subsection 1A is there, 7.2 and 7.3 is there. Okay. But practically from the academic point of view, 7.3 is not there. So, there is no need to study 7.3. And with respect to 7 subsection 1, there are 4 clauses. 7(1)(a), 7(1)(b), 7(1)(c). Okay. And whereas the new one is 7(11)(a), which is needed to be here. Okay. There are 4 clauses under section 7(1). With respect to 7(1)(a), this deals with general meaning of supply. 7(1)(b) deals with import of service. 7(1)(c) deals with deemed supplies. And 7 subsection 1 clause A deals with AOP is equal to deemed to be distinct person. Okay. In this initially, and the 7 subsection 1 deals with classification, and 7(2) deals with negative list of GST. So this is the overview of the topic what we are going to discuss now. 7(1)(a) deals with general meaning of supply. 7(1)(b) deals with import of service. 7(1)(c) deals with deemed supplies. 7 subsection 1(a) deals with AOP is equal to DDP. 7 subsection 1(a) deals with classification. 7(2) deals with negative list of GST. Okay. These are the things we need to remember. In that initially we need to start with 7 subsection 1 clause A, which deals with general meaning of supply. As per section 7 subsection 1 clause A, which deals with general meaning of supply, there are 6 conditions that are needed to be satisfied in order to treat that particular activity taxable under the scope of GST. In that, the first one will be it should be a supply. Second one will be that supply should be of goods or services. Third one, it should be done for a consideration. Fourth one, it should be done in the course or furtherance of business, and it should be made by the taxable person, and it should be a taxable supply. If all these conditions are satisfied, then as per 7(1)(a), GST is needed to be paid. Okay. So in that, what is the first one, ma'am? Supply. Generally, the definition of supply is the inclusive definition, ma'am. That means there are 8 forms of supplies at present: sale, transfer, barter, exchange, license, lease, rentals, disposal. As per 7(1)(a), there are 8 forms of supply: sale, transfer, barter, exchange, license, lease, rentals, disposal. There are 8 forms of supplies at present. What is meant by the word sale? If the ownership is going to be transferred permanently, it is known as sale. Without transfer of ownership, only possession is going to be transferred, it is transfer. Generally, it covers branch transfer, hire purchase transactions. Okay. And barter, exchange. What is the difference between barter and exchange? If 2 parties exchanges non-monetary consideration, it is called as barter. At least some part of the consideration involved therein is in terms of money, it is known as exchange. Say mobile to mobile comes under barter. Mobile to mobile plus some money is equal to exchange. If 2 parties exchanges non-monetary consideration, it is called as barter. At least some part of the consideration involved therein is in terms of money, it is known as exchange. License. means permission to use the IPR. IPR means intellectual property rights like patents, copyrights, trademarks, royalties, etc. Okay. With respect to those licenses, it is also a form of supply. Lease rentals. If at all a movable property is given on a rent, it is known as lease. If at all it is the movable property, it will be treated as exchange. Sorry, it will be treated as rentals. Disposal. At the end of the lifetime, if it all it is sold as a scrap or something like that, it is known as disposal. With respect to 8 forms, in relation to goods, 5 forms are applicable: sale, transfer, barter, exchange, and disposal. With respect to services, 6 forms are applicable, like provision of service, transfer, barter, license, lease, rentals. What are the things that are not applicable with respect to services? One is exchange and second one is disposal. These two are not applicable to service. These are the 8 forms of supply. If this particular supply is in relation to goods or services, if at all it is in relation to goods or services, then definitely it can be treated as a taxable one as per 7 subsection 1A. The question is here, what is meant by the word goods? Goods means every kind of movable property. So what is meant by the word movable property? If the item can be shifted from one place to another place in the same condition, the item can be shifted from one place to another place in the same condition, it is movable. If at all it requires dismantling and re-erection, it is known as immovable. If the item can be shifted from one place to another place in the same condition, it is movable. If it requires dismantling and re-erection, it is known as immovable. Okay. Like let's say for example, mobile, it can be shifted from one place to another place. Pen, it can be shifted from one place to another place in the same condition. So keyboard, it can be shifted from one place to another place in the same condition. It is movable. What about the lift? Is it movable or immovable? What about the lift? Is it movable or immovable? Definitely the answer will be immovable. Why so? Lift is moving upside down like this, and it is movable. The one or the thing that is moving is known as cabin. It is not the lift. So cabin, cable and the wheel which will operate this together generally will be called as lift. If at all you want to install the lift at some other place, in that case, what is the thing you need to do? You need to dismantle it here and re-erect it at some other place. Re-erect it at some other place. Got the point? That's why it is known as immovable. So if the item can be shifted from one place to another place in the same condition, it is movable. If it requires dismantling and re-erection, it is known as immovable. And which ones are treated as goods? Movable ones or the immovable ones? Movable ones. Sir, is this definition is there under GST? No, ma. The word movable property was not defined under our GST. If at all a particular word was not defined under our GST, then we should go by not only under GST. If any particular word is not defined under our any particular act, we should go by the definition that is given by General Clauses Act. What does General Clauses Act here defines? Movable property. Movable property means which is not a immovable property. So, which is not immovable, automatically it will be treated as movable property. Now, what is meant by the word immovable? In order to shift a particular item from one place to another place, we need to dismantle it and re-erect it at some other place. It is known as immovable. Okay, that is known as immovable. So in order to treat any item as a good, it must be movable and includes actionable claim. Sir, what is meant by the word actionable claim? The claim on which we can take a legal action even though there is no security. The claim on which we can take legal action even though there is no security. Like a promissory note. Not only promissory note, every negotiable instrument is an actionable claim. Every negotiable instrument is a actionable claim. Apart from that, any other? Arrears of rent, insurance claims, lotteries, betting, gambling, all these things will be treated as actionable claims. So that means on every actionable claim, are we liable to pay the GST? Answer is no. Is every actionable claim is a good? Yes, every actionable claim is a good. But it is not necessary that on every actionable claim we are liable to pay the GST. Why, sir? Because as per section 7, subsection 2, actionable claims other than lotteries, betting, gambling, we are not liable to pay any GST. That's why only on the betting, gambling and lotteries we are liable to pay the GST. And on the rest of the actionable claims, we are not liable to pay any GST. Next one, growing crops, grass and the things attaching to or forming part of the land which can be separated before a supply or under a contract of supply, those things are also treated as goods. So that means simply whatever the things that can be separated, whatever the things that can be separated before making a supply, all those things can be treated as movable property and definitely they are treated as goods. So that means simply beetroot, carrot, onions, radish. So all these things are goods? Yes, ma. Obviously all these things are treated as goods. So that means on carrot, beetroot, radish, all these things, are we liable to pay any GST? Please no. Why, sir? Agriculture is exempt from GST. Agriculture is exempt from GST. That's why what is not needed, ma'am? There is no need to pay GST on agriculture. Apart from that, rest of the things like what we can say, platinum, gold, diamonds, other precious metals, because they will be available in the earth only, na? So that's why if at all we are able to separate them before making a supply, everything will be treated as goods only. That is the thing we need to remember. Okay. So goods means every kind of movable property and it includes actionable claims and the things which can be separated. Things which can be separated before making a supply. All those things are known as movable property. But it does not include money and securities. We will see later on. And second point is what is meant by the word service. Service means anything other than goods is a service. Anything other than goods is a service. What does this mean? Anything other than goods is a service. What does this mean? Technically, what we can say is it's not anything, ma. It is everything other than good. Everything other than good is a service. Sir, in which way it was tricky? Let's say, for example, a GST officer went to a shopkeeper and asked him, "Hey man, are you making any supply?" "Yes, sir, I'm making the supply." "Okay, is it a good?" "Yes, sir." "Then please pay GST." Then the shopkeeper replied, "No, sir, I'm just kidding. It is not a good at all." Then the GST officer replied, "Then also please pay GST." Then the shopkeeper shocks and the GST officer rocks. So why, sir? The shopkeeper actually asked in a shocking way. Because if at all it is not a good, as per the definition, automatically it is a service. If at all it is not a good, automatically it will be treated as service. That is a tricky definition of this service. So that means everything other than good is a service as per the definition. Yes, it is a service. Sir, that means land and buildings can also be treated as service. Is the land is a good? No. Is the building is a good? No. Then obviously as per the definition, this point will comes under the word service, land and buildings. So that means on the sale of the land, on the sale of the building, are we liable to pay any GST? Answer is no. Why, sir? Because as per 7 subsection 2, negative list of GST, on the sale of the land, on the sale of the building, the government exclusively provides that it is neither the supply of the good nor the supply of service. That's why there is no need to pay any GST on the sale of the land or sale of the building. Otherwise, it is within the scope of service definition. And the next point is here. Money and securities are neither the goods nor the service. Sir, what is meant by the word money? What is meant by the word money, ma? So, what is the definition of the word money, ma? The question is here. Is money and cash both are same, or is there any difference? Money and cash both are same, or is there any difference? Yes, there is a difference between the two words, money and the cash. Money means here, money is a much more wider term than the word cash. Cash means currency only. But whereas money means it includes cash, checks, letter of credit, bills of exchange, pay order, money order, account transfers, debit card payments, credit card payments, everything will be treated as money except the money which was held for its numismatic value. Sir, what is meant by the word numismatic value? Numismatic value means historical purpose. What is meant by this historical purpose? Old currency or old coins. This particular old currency or old coins can be treated as old currency or old coins can be treated as goods. Okay, except that rest of the things are treated as money. Therefore, the transactions in terms of money, there is no need to pay any GST. But keep it in mind. But keep it in mind. If at all it is use of money or conversion of money, in these two cases, definitely it is the supply of service and you are liable to pay the GST. So, what is this use of money here? We will see that. So, generally, what is the thing we discussed, Sidma? Money is neither a good nor a service. Okay. The question is here, but the use of money, definitely it will be treated as supply of service. So that means, let's say for example, one bank is there. This particular bank has lent some money to this fellow. Okay. Okay, ma'am. Bank has lent the money to this person of some 10 lakh rupees. And in return, after 1 month, let us assume that this person paid 10 lakh rupees plus 1 lakh for using the money. For that, he is paying some interest. Why this particular person is actually paying 1 lakh rupees in addition to the normal 10 lakhs? Because he is paying that 1 lakh for the use of banker's money. So this is called as consideration. And this interest comes under the word supply of service. Definitely we are liable to pay the GST. Definitely we are liable to pay the GST on that. Okay. But here, with respect to interest, you need to remember 2 points. One is interest on credit card, all other interest incomes. If at all it is with respect to credit card, it is taxable. With respect to all other interest incomes, it is exempted. That is the thing you need to remember. Interest on credit card taxable. All other interest incomes are exempted. Okay. So what is the point here, ma? With respect to the money, what we can say? Transactions in terms of money, like depositing the money in the bank, withdrawal of money from bank, giving loan, repayment of loan. Okay, like this. These points are there, ma. Or they, all these 4 activities are treated as transactions in terms of money. Therefore, on all these activities, no GST is payable. Depositing the money in the bank, withdrawal of money from the bank, giving the loan, repayment of the loan, all these things are treated as transactions in terms of money. For that, it is neither the supply of the good nor the supply of service. Therefore, there is no need to pay any GST. There is no need to pay any GST. That is the point we need to remember. Okay. But whereas, all the things we discussed, for use of money, definitely GST is payable. Like what we can say is here, interest, taxable. But already I told you, interest on credit card only taxable. All other interest incomes are exempted. And in the same way, processing fee, loan documentation charges, minimum balance charges, whatever the other things like loan processing fee, loan documentation charges, minimum balance charges, commission paid, all these things, definitely what is the position, ma? They are also taxable, because all these things comes under use of money, ma. Definitely they are taxable under GST. Only one exemption is there, that too with respect to interest. Interest on credit card only taxable. All other interest incomes other than credit card or exam. So this is the point. Generally, this point is important from the examination point of view. It can be asked in a tabular format that, okay, some housing loan was given, interest on housing loan, interest on credit card, minimum balance charges, Like that, those things can be there in the exam. There is a possibility this on this particular topic. There is a possibility that the question can be asked. That's why I taught you in a somewhat elaborated manner in comparison with general marathon. Even though it is marathon, I just want to keep focus on the most important areas, and that's why I'm actually explaining that concept in detail. More of a regular batch. Okay, even though not that much more of a regular, but with respect to marathon, it is more detailed explanation was given because it is the most important one. That is the thing you need to remember. And in the same way, another point is for conversion. With respect to conversion of money, that means from one currency to another currency, one form to another form, one denomination to another denomination, one currency to another currency, one form to another form, one denomination to another denomination, one currency to another currency, let's say rupee to dollar, dollars to rupee, or pound to rupee, something like that. For that, any consideration is charged, then it is a supply of service, GST is payable. Okay. In the same way, one form to another form, like cash to DD. For that, the bank will charge some DD charges. No? Therefore, consideration is charged. If at all consideration is charged, then it is a supply of service and GST is payable. Okay. And one denomination to another denomination, like that for some 100 rupees note, if it are getting 90 rupees only as a change, 10 rupees was taken as a commission. In those cases, definitely what is the position mark? For that also consideration is there. It is a supply of service and you are liable to pay the GST. But keep it in mind, with respect to this conversion, you need to remember one thing. Whatever these conversions that happens, whatever the conversions here happens, so whatever the conversions here happens, okay, these conversions happens between bank or authorized dealer to the customer, then it is taxable. But any transaction that happens between bank to the bank or bank to the authorized dealer or bank to the, authorized dealer to another authorized dealer, in all these cases, it is exempted. So, with respect to this conversion, if at all it happens between the bank and the customer or authorized dealer and the customer, it is taxable. If at all it is bank to bank or bank to the authorized dealer or one authorized dealer to another authorized dealer, in all these cases, definitely it is exempted. Definitely it is exempted. That is the point you need to remember. Okay, this is an important topic in the supply chapter with respect to this particular goods and service definition. Okay. And in the same way, securities are also neither the goods nor the service. Securities are also neither the goods nor the service. That means sale of the securities. Okay. Sale of the securities are neither the goods nor the service, but facilitating in securities Okay. Like facilitating can be divided, lending of shares, stock broking services, like that. So these two are definitely taxable. These two are definitely taxable. And this lending of securities is covered under RCA, reverse charge mechanism, and the borrower is liable to pay the GST, RCM, under section 9(3). Okay, that is the point you need to remember. Sale of securities is neither the goods nor the service, but facilitating in securities like lending of the shares, stock broking services, those are taxable and lending of securities is covered under RCM 9 subsection 3. Based on that, recipient is liable to pay the GST. That is the thing we need to remember. Okay. So this is the point what we should remember. See, first one, supply completed. First condition in 7(1)(a). Second condition, this goods or services is also completed. Now, what is the third condition we need to satisfy? Consideration. Supply should be done for a consideration. Sir, what is meant by the word consideration here? Consideration means something in return for something given. Okay. That consideration can be in money or otherwise. That means consideration can be divided into two types. One is monetary consideration and second one is non-monetary consideration. One is monetary consideration and the second one is non-monetary consideration. Both are treated as valid considerations. That is the first point. Second one, the monetary value of any act or forbearance. Sir, what is meant by the word act and what is meant by the word forbearance? Act means to do something, forbearance means not to do something. To do something is a valid consideration. In the same way, not to do something is also a valid consideration. Sir, we know that doing something is a consideration that is okay with us, but not doing something, how it can be a valid consideration? The best example for that is non-compete fee. Okay. So with respect to non-compete fee, what is the position? It is, what is the promise you will do? You will promise not to do the business in a certain area up to a certain period of time. That one is known as non-compete agreement. Here you promises the other party for not to do something. To do something is a valid consideration. In the same way, not to do something is also a valid consideration. Okay, both are treated as valid consideration. In the same way, another point is there, generally, subsidy the government will give you. Whatever the subsidy generally the government will gives you, it is not treated as consideration. In simple words, subsidy given by any person other than the government is treated as valid consideration. Subsidy given by any person other than government is a valid consideration. Okay, if at all subsidy is given by government, excludable. Subsidy is given by any person other than government, includable. Okay, same point will be applicable to security deposits also. Security deposit is not a consideration unless otherwise it is adjusted for the payment. That means while giving the security deposit, it is not a consideration. But whenever that security deposit was forfeited or whenever that security deposit was adjusted for a payment, in those cases, it will be treated as consideration. That's why simply what we can say is security deposit is not a consideration unless otherwise it is adjusted for the payment. That is the thing we need to remember. Okay. And in the same way, what about the donations? Generally, donations can be divided into two types. One is conditional donation. Second one is unconditional donation. What is meant by the word conditional donation? With respect to this conditional donation, there is an obligation on the part of the recipient who is receiving that particular donation to do something. It is known as conditional donation. For example, I have given some 10 crores to a research organization to find out the formula for a medicine. But I asked them to share the formula with me once it was successful. Here there is an obligation on the donee to do something for the donor. Okay, then it is known as conditional donation. If at all it is a conditional donation, what is the position, ma? Definitely it is a supply. If at all the donation is unconditional one, it is not a supply, there is no need to pay any GST. Okay, and the second point is, sometimes what happens is, even though there is no monetary consideration that is moving, but sometimes the donee, that means the person who is receiving the donation, will place a name board or a hoarding as a sign of gratitude. Okay. In that case, whether that amounts to any marketing activity or a business promotion, something like that. Yes, if at all there was one condition that is attached to that is satisfied, it will be treated as a supply whose name is going to be displayed at the place of business. If at all the name that is going to be displayed is a business name, definitely it is a supply, you are liable to pay the GST. If at all any individual name is displayed, it is not a supply. For example, donation was given in the name of Raj Educational Private Limited. It is a promotion of business name, it is a supply. If at all donation to a temple is given in the name of Mr. Raj, which is the individual name, in that case, it is not a supply. In the same way, with respect to artwork. With respect to artwork, that means here the painting is moving from artist to the art gallery and thereby to the person who is purchasing it. Okay. In this case, the movement of the painting between the art and the art gallery. Here there is no consideration that is moving from the art gallery. No? That's why it is not a supply. There is no need to pay any GST on it. In the same way, it is not every time necessary that consideration should be received from a recipient. Even it can be received from a third party also. That means every time it is not necessary that consideration should be moving from recipient only. Even though it is moving from some other party, but if at all it is in relation to a supply, then also it is treated as valid consideration. Sir, any example for that? Yes, ma, you, the students. Here, the service is received by the student, but the fee is paid by the parent. But still, it is treated as a valid consideration. In the same way, the next one is the amount already received or receivable. That means consideration can be divided into three types: past consideration, present consideration, and future consideration. Consideration, whether it is past, present, or future, in all the three cases, it is a valid one. That means consideration can be received at any point of time. It can be received before supply, it can be received during supply, or even it can be received even after supply also. Next one, already we know that consideration can be either in money or non-monetary form. Both are valid. Okay. So, first condition, supply was completed. Second condition, goods or services completed. Third condition, consideration was completed in 7(1)(a). And what is the fourth condition? It should be done in the course or furtherance of business. What is meant by the word business, ma'am? What is meant by the word business here? Business means any trade, commerce, manufacturing, profession. even there is no profit motive, but still it will be treated as business activity. Trade means buying and selling of the goods. If buying and selling happens in large scale, it is known as commerce. Converting raw materials into finished goods is known as manufacturing. Professional activity. Whatever the things you will do, even though there is no profit motive to you, but still it will be regarded as business activity. In the same way, it's supporting incidental or ancillary activities means its supporting activities are also treated as business activities. But keep it in mind, if the main activity is a business activity, then only its supporting activities are business activities. If the main activity is not a business activity, its supporting activities are not treated as business activities. Next one, even though there is no volume, that means even though there are no huge number of buyers, even though there is no continuity, even though it is not recurring nature, but still it will be treated as business activity. Okay. And in the same way, the activities in connection with commencement or closure of the business are also treated as business activities. In the same way, whatever the things the club or the association will do to its members for a consideration, then also it is a valid consideration and it is a business activity. Technically, whatever the things the club will do to its members, it is a self-service. It was a court judgment also. In order to nullify that only 7 subsection 1 AA, clause AA is there now, AOP is deemed to be a distinct person. That's why whatever the things the club or the association will do for its members for a consideration like some locker facility, swimming pool facility, some function hall facility, whatever the other things the club will do for a consideration, definitely it will be treated as business activity. Okay. And in the same way, so admission for consideration to any premises like Wonderla, Ramoji Film City, Zoo, museum, with respect to them, whenever there is any entrance fee, definitely what is the position, ma? Is it exempted or taxable? Definitely it is taxable as a business activity. And services as a holder of office. What is meant by the word holder of office, ma? Holder of office means place of profit. Place of profit means what is the position, ma? Holder of office means place of profit. Place of profit means what is the position, ma? Place of profit means getting some extra benefit or getting some extra amount because of the trade or profession. Like a chartered accountant is appointed as a nominee director in a company. In that case, because he is a chartered accountant, that's why he got that additional benefit or extra remuneration. That one is also treated as business income. In the same way, whatever the things the race club will do, okay, all those things are treated as business activities. And whatever the things generally the government will do will be treated at par with non-government. Just like non-governmental people, in which way they are liable to pay the GST. Government is also liable to pay the GST, except the activities that are covered under 7 subsection 2, that is negative list of GST, or if at all it is covered under exemption notification. If at all it is neither covered under 7 subsection 2, nor covered under exempted list, exemptions chapter, in those cases, government will be treated at par with non-government, then it is also liable to pay the GST. Next one, taxable person. What is meant by the word taxable person, ma'am? The person who is registered or liable to be registered. That person is known as taxable person. That means supply should be made by a taxable person. Then only GST will be attracted. And last but not the least, the supply should be a taxable supply. What is meant by the word taxable supply? Which is not a exempted supply. What is meant by the word exempted supply, ma'am? which is not a exempted supply. What is meant by the word exempted supply? 3 points are treated as exempted supplies. One is non-taxable supply, second one is 100% exempted supply, and third one is nil rated supply. Okay. In this case, what is meant by the word nil rated supply, ma? Levy at the rate of 0% is known as nil rated supply. 100% exempted supply means levy at a specified rate but no collection. It is known as 100% exempted supply. Non-taxable supply means no levy at all. It is known as non-taxable supply. Okay. Nil rated supply means the rate of tax that was specified in the act itself is 0. It is known as nil rated supply. 100% exempted supply means levy at a specified rate but no collection. Non-taxable supply means no levy at all. In all these three cases, what is the position, ma? It will be treated as exempted supply. If at all it is not exempted supply, it does not fall any of these three categories, then only it will be treated as taxable supply. Then only you are liable to pay the GST. Okay. These are the conditions that are needed to be satisfied in order to attract 7 subsection 1 clause A to pay the GST. Okay. Next thing is we need to see is 7 subsection 1 clause B, which deals with import of service. So here with respect to this import of service, which is covered under 7 subsection 1 clause B, छोटा section है. So with respect to import of service, sir, which purpose we need to import? Whether it is for personal use or for business purpose. Both are covered under 7(1)(b). Whether it is for business purpose or for personal use, in both cases, it is a supply. Okay. Whether the importation of service was done for personal use or for business purpose, in both cases, it will be treated as a supply as per 7(1)(b). Sir, which type of supply it is? Interstate supply. If at all it is the interstate supply, what is needed to be paid? IGST. Sir, under which case, which way we need to pay that? Under RCM. Why it is covered under RCM? What is meant by the word RCM? Reverse charge mechanism. There are two types of tax payment systems. One is FCM and second one is RCM. FCM means forward charge mechanism. RCM means reverse charge mechanism. Under FCM, forward charge mechanism, recipient will pay to the supplier. In return, supplier will pay to the government. RCM means recipient will pay GST directly to the government. Okay. Okay, ma? So here, where is the location of the supplier? Outside India. So practically it is difficult for the government to collect the tax from the supplier. That's why the recipient is liable to pay the GST under RCM. This is 7(1)(b). And here another important one, consideration is mandatory. For this, consideration is mandatory. That is the thing you need to remember. Okay. After the completion of 7(1)(b), we need to see 7(1)(c). With respect to 7(1)(c), what is the topic, ma, with respect to 7(1)(c)? What does 7(1)(c) deals with? If you observe 7(1)(a) or 7(1)(b), consideration is mandatory. But whereas with respect to the cases which are covered under 7(1)(c), read with Schedule 1. Even though there is no consideration, but still it is deemed to be a supply. Even though there is no consideration, but still it is deemed to be a supply. So that's why 7(1)(c) read with Schedule 1. 7(1)(c) read with Schedule 1. it is exception to the 7(1)(a) and 7(1)(b), because with respect to both these cases, consideration is mandatory. Okay, what are the cases that are covered under 7(1)(c)? We will see now. The first point will be in this case, see, this is the 4 exceptions 7(1)(c) to the consideration, which are there in Schedule 1. In that, the first point is permanent transfer or disposal of the business asset where ITC has been claimed. That means in order to be covered under 7(1)(c) first point, 3 conditions are required to be satisfied. First one, it should be a business asset. Second one, on that ITC was claimed. Third one, it should be permanently transferred. If at all these 3 conditions are satisfied, even though the transaction happens without consideration, but still it is a debit supply. What is the first condition, ma? It should be a business asset. Second one, on that ITC was claimed. Third one, it is permanently transferred. If at all these 3 conditions are satisfied, it is, even though it happens without consideration, but still it is a deemed supply. That is the point we need to remember. Okay. Sir, what is meant by the word business asset? Asset which is used or ready to be used for business is known as business asset. Sir, that means on every business asset, we are not eligible to claim the IDC? Answer is no, na. With respect to some cases which are covered under 17 subsection 5, blocked credits, even though it is a business asset, you cannot claim the IDC. That's why the second mandatory condition in this particular point number 1 is, first one, it should be a business asset. Second one, on that IDC was claimed. If at all these 2 conditions, and third one, it should be permanently transferred. Generally, transfer can be divided into 2 types, ma'am. One is revocable transfer and second one is irrevocable transfer. Revocable transfer means during the lifetime, if at all it is possible to get it back, it is known as revocable transfer. Irrevocable transfer means during the lifetime, it is not possible to get it back. So the transfer should be permanent in nature. If at all these 3 conditions are satisfied, even though it happens without consideration, but still it is a deemed supply. The example with respect to that is, let's say for example, Masterminds has given its old computer to a charitable organization for free. Whether this amounts to deemed supply or not is a question. In that case, this particular transaction needs to satisfy 3 conditions. First one, it should be a business asset. Second one, on that IDC was claimed. Third one, it is permanently transferred. First condition, is it a business asset for Masterminds? Yes. On that IDC was claimed? Yes. Is it permanently transferred? Yes. For all these 3 questions, answer is yes. In that case, even though it happens without consideration, but still it is a deemed supply. But still it is a deemed supply. That is the point we need to remember. Okay. And second one is, supply should be between related parties. So who are related parties? Who are treated as related parties? Common directors, partners, employer and employee, more than or equal to 25% of voting power, holding and subsidiary, third party controlling these two controlling a third party, same family members, sole selling agent. If any of these relations are there, the parties are treated as related parties. So any transaction that happens between the related parties in the course or furtherance of business, even though it happens without consideration, but still it is a deemed supply. Who are the related parties, ma? Common directors, partners, employer and employee, more than or equal to 25% of voting power, holding and subsidiary, third party controlling these two controlling a third party, same family members, sole selling agent. These are the treated as related parties. Any transaction that happens between them in the course or furtherance of business, even though it happens without consideration, but still it is a deemed supply. Okay. In this, employer-employee relation and same family members are important concepts. Sir, employer-employee relation is covered under income tax now. When it will be covered under our GST. Generally, whatever the things, whatever the gifts or whatever the benefits the employer will give to the employee, if at all, it is in the course of employment as per the terms and conditions of his employment agreement. In that case, what is the position, ma? Definitely it is taxable under your income from salaries, income tax. But whatever the benefits the employer gives to the employee, which is outside the scope of employment agreement, is taxable under GST. I'm repeating you once again. Whatever the benefits, whatever the gifts the employer gives to the employee, as per the employment agreement, as per the terms and conditions of the employer agreement, it is taxable under your income from salaries, income tax. Whatever the benefits the employer gives to the employee, which is outside the scope of employment agreement, then it is taxable under GST. But with respect to employer-employee relation, one relaxation is also there. Even though it is outside the scope of employment agreement, but the value is less than or equal to 50,000 rupees in a financial year, it is not a supply. There is no need to pay any GST. So, in order to attract this employer-employee relation, under the scope of GST, what is the position? What is the position, ma? It should be outside the scope of employment agreement. Second one, value should be more than 50,000. If at all these two conditions are satisfied, then what is the position, ma? Then what is the position? It is taxable under GST. Rest of the cases, it is not taxable under GST. Second point. Same family members. When the persons will be treated as same family members, spouse and children, whether financially dependent or not, they are treated as related parties. But whereas with respect to the parents, grandparents, brother, sister, if at all they are financially dependent on us, then only they are treated as related persons. Grandparents, parents, brother, sister. If at all they are financially dependent, then only they are treated as related parties. But whereas with respect to spouse and children, whether they are financially dependent or not, definitely what is the position, ma? Whether they are financially dependent or not, what is the position, ma? They are treated as related parties. These 2 points are important here. So, from the examination point of view, so any transaction that happens between related parties, which is in the course or furtherance of business, even though it happens without consideration, but still it is a deemed supply. Okay. Example for that is, let's take the example that Kalamandir showroom owner has gifted a 4 lakhs worth saree to his sister on the occasion of Raksha Bandhan, whether this amounts to supply or not. First question, are they related parties or not? Yes, let us assume that she is dependent on him. Second one, is it in the course or furtherance of business? Yes, with respect to Kalamandir showroom owner, this particular saree is a stock in trade, which is in the course or furtherance of business. So all the two conditions are satisfied. In that case, what is the position, ma? Even though it happens without consideration, but still it is deemed to be a supply. That is the point we need to remember. Okay. And second one is deemed to be distinct persons. So what is meant by this deemed to be distinct persons concept here? Generally, with respect to our GST, there is no concept of centralized registration. There is no concept of centralized registration. That means in how many number of states you are doing the business, that many number of registration certificates you are required to take. Okay, let's take the example in scenario 1. Head office is there in Andhra Pradesh and branch is there in Telangana. Same state or different states? Definitely both these organizations are there in different states. When you are having the place of businesses in different states, separate RC is mandatory. When separate RC was taken, even though they are part of same organization, even though they are part of same organization, what is the position, ma? Even though they are part of same organization, they are treated as deemed to be distinct persons. When they are treated as deemed to be distinct persons, whatever the stock transfer that happens between them is a deemed supply. Even though technically it is a stock transfer, but still it is a deemed supply, even though it happens without consideration, because they are distinct persons. Okay. And see scenario 2. Head office is there in Andhra Pradesh. Branch is also there in Andhra Pradesh. Same state or different states? Same state. If at all they are in the same state, separate RC is optional. If we did not take the separate RC registration certificate, then they are not distinct persons. Then they are not separate persons. When they are not separate persons, any transaction that happens between them is treated as stock transfer only. It is not a deemed supply. Okay. And with respect to scenario 3, where is head office ma? In AP. Where is branch ma? Also in AP. Already told you that it is optional. But one separate registration certificate was taken. Even though they are part of same state, even though they are part of same organization, they are deemed to be distinct persons. When they are deemed to be distinct persons, what is the position, ma? When they are deemed to be distinct persons, what is the position, ma? It is not a stock transfer, it is a deemed supply. Okay. So this is the point with respect to second point you need to remember. And third point is in deemed supplies, principal agent relation. Okay. This third point, ma, principal agent relation. Generally, the agents can be divided into two types. One is buying agent and second one is selling agent. Buying agent means the person who procures the goods on behalf of the principal. Selling agent means the person who sells the goods on behalf of the principal. Okay. So, with respect to that particular point, any transaction, let's say for example, buying agent procures the goods on behalf of the principal and send the goods to the principal. Here, generally, the transaction between the buying, while moving the goods from the buying agent to the principal, there is no consideration involved, except the commission is different story. For the goods, there is no consideration that was involved, but still, it is a deemed supply. In the same way, with respect to the selling agent, Principal send the goods to the selling agent. In return, selling agent will sell the goods. Here, while sending the goods by the principal to the selling agent, there is no consideration involved. But still, it is a deemed supply. But still, it is a deemed supply. That is the theme of 7.1c. But there is one relaxation that was given by a circular. While receiving the goods by the selling agent, while receiving the goods by the buying agent, or while selling the goods by the selling agent, if the invoice is in the name of the principal but not in the name of the agent, then the concept of deemed supply will not be applicable. See, agent issues invoice to the customer in his own name. See, in his own name means what the agent is doing, ma. Agent is issuing the invoice in his own name. In that case, when the goods are sent by this particular principal to the selling agent, and selling agent is selling the particular goods to the customer, the transaction between the principal and the selling agent is a deemed supply because invoice is issued in the agent's name. But while selling the goods by the selling agent to the customer, if the invoice is in the name of the principal but not in the name of the agent, then the transaction between the principal and the selling agent is not a deemed supply. And same point will be applicable to buying agent also. Agent receives the invoice from the supplier in his own name. If the invoice is in the name of the buying agent, then the transaction between principal and the buying agent, okay, definitely what is the position, ma? Is it a deemed supply or not? Yes, it is a deemed supply because the invoice is in the name of the agent. But if the invoice is in the name of the principal, then the transaction between the buying agent and the principal is not a deemed supply. This is the third one you need to remember. And fourth one is import of service. Import of service is there under 7.1c also and 7.1b also. Technically, first one need to understand what is 7.1c. Under 7.1c, for the 4 questions, answer is yes, then GST is attracted. Under 7.1c, deemed supplies, import of service, if at all answer to 4 questions is yes, then only GST is levied. For any question, any of those 4 questions, answer is no, then GST is not applicable. First question, is it the importation of service? Yes. Is it without consideration? Yes. Are they related parties? Yes. Is it for business purpose? Yes. For all these 4 questions, answer is yes. Then the concept of deemed supply will be applicable. What are the 4 questions, ma? First one, is it importation of service? Yes. Is it without consideration? Yes. Are they related parties? Yes. Is it for business purpose? Yes. For 4 questions, answer is yes. In that case, it is a deemed supply. Sir, what is the difference between 7.1b importation and 7.1c importation? With respect to 7.1b, with consideration. 7.1c, without consideration. 7.1b, from any person. 7.1c, only from related parties. 7.1b, for any purpose, business or non-business. 7.1c, only for business purpose. These are the 3 differences between 7.1b and 7.1c. Okay. 7.1b, with consideration. 7.1c, without consideration. 7.1b, from any person. 7.1c, only from related parties. 7.1b, for any purpose. 7.1c, only for business purpose. Okay. This is all about 7.1c. Import of service, there ends the deemed supplies concept, ma. Next one we need to keep focus on 7 subsection 1a read with schedule 2. That means this is nothing but classification. I'm not going to drill a total in 7-1A because it is not that much important from the examination point of view. But definitely we will have a overview of 7 subsection 1A, not a detailed explanation in 7-1A and 7-1C like that, but a short some 1 or 2 minutes concept explanation will be there for this. Okay, what is 7 subsection 1A deals with? 7 subsection 1A deals with classification. Once it is a supply as per section 7.1, whether it is a supply of the good or a supply of service will be taken care by 7 subsection 1A read with schedule 2. So that means 7 subsection 1A technically deals with classification, whether it is a supply of the good or a supply of service. Simply what I can say is, if at all the ownership is going to be transferred, it is a supply of the goods. Without transfer of ownership, only the possession or right to use is going to be transferred. It is a supply of service. As simple as that. Keep remembering only these 2 lines. If the ownership is going to be transferred permanently, okay, if the title is going to be transferred permanently, it is a supply of the good. Without transfer of ownership, only right in the goods or possession in the goods is going to be transferred. It is a supply of service. These 2 lines you can check with 7 subsection 1 in total. The answer remains the same. Where the ownership is going to be transferred permanently, it is the supply of the good. Where the ownership is not transferred, only possession or right in the goods is transferred, it is the supply of service. That is the point you need to remember. Okay. This is the story with respect to 7 subsection 1A. Next one is 7 subsection 2. Subsection 2. That is negative list of GST. That means it is neither the supply of the good nor the supply of service. First one is, whatever the services that are provided by the employee to the employer in the course of his employment. I already told you that. Whatever the things the employee will do to the employer as a part of employment agreement, it will be taxable under income from salaries, income tax. It is not taxable under GST. Same point will be applicable to court or tribunal. Generally, whatever the services that are provided by the court or tribunal, definitely what is the position? It is neither the supply of the goods nor the supply of service. But there is an amendment with respect to this particular point. Only the judicial functions are now covered under this negative list. Whatever the other commercial activities that are done by the court or tribunal, like renting the premises to an advocate or giving on a rental basis to cell phone tower, cell phone telecom company for installing its cell phone tower at the court premises, all those are not judicial functions. They are taxable under RCM. That is the amendment that is there. And in the same way, MPs, MLAs, Panchayat, ward members, simply the people elective members, whatever the things they will do in that particular capacity, it is neither the supply of the goods nor the supply of service. It is neither the supply of the goods nor the supply of service. That means whatever the things you will do as an MP, as an MLA, those things are neither the supply of the goods nor the supply of service. But if the MP purchases a BMW car, then he is liable to pay the GST. We are talking about in that capacity of MP, in that capacity of MLA. Whatever the things they will do, those things are neither the supply of the goods nor the supply of service. But whatever the other things they will do, that means not in the capacity of MP, MLA, they are taxable as usual. In the same way, constitutional post holders like President of India, Governor, CAG, Comptroller and Auditor General of India, Chief Justice of India, those people, those services in that capacity is neither the supply of the goods nor the supply of service. And in the same way, As a government regulatory body, as a chairman, as a member, as a director, whatever the things he will do, those are also neither the supply of the goods nor the supply of service. Government regulatory bodies means as a SEBI chairman, as a SEBI member, as a SEBI director, what we will do? Those things are neither the supply of the goods nor the supply of service. In the same way, funeral, burial, crematorium, mortuary, including the transportation of the deceased, that deals with the emotions of the people. That's why the government don't want to risk their seats. Seat means election seats. That's why no government has a dare to tax these ones, because they deals with the emotions of the people. Don't touch the people's emotion. That's why they are neither the supply of the goods nor the supply of service. And already I told you, sale of the land and buildings or sale of the land and buildings or neither the supply of the goods nor the supply of service. This point also already explained to you previously. Actionable claims other than betting, gambling and lotteries, we are not liable to pay any GST. This is 7 subsection 2 and next one is section 8, composite and mixed supply. With respect to this composite and mixed supply, if the item is going to be supplied individually, in those cases, section 7 is applicable. If the item is going to be supplied as a bundle, in those cases, section 8 will be applicable. If you purchase a dairy milk silk individually, section 7 is applicable. If you purchase a celebrations box, in that case, section 8 will come into C. Okay. As a bundle, section 8, individual, section 7. Under section 8, there are two supplies. One is composite supply, second one is mixed supply. When a supply can be treated as composite supply, if at all these conditions are satisfied. First one, minimum 2 or more taxable supply shall be there. Second one, they are naturally bundled. Third one of the supply should be a principal supply. If all these three conditions are satisfied, it is a composite supply. Example, mobile phone with charger. Minimum 2 or more supplies are there. Second one, it is a natural bundle. Third one of the supply is a principal supply. What is meant by the word natural bundle? There is no clear-cut formula with respect to natural bundle. But depending upon the facts of the case, what we can say is, there is a tradition in that particular business to supply them together, or the customers expect them in such a way as a bundle, or without the other, the total bundle will be purposeless. If all these 3 points are satisfied, okay, or any one of these points are satisfied, then it can be treated as natural bundle. Mobile phone with charger, customer will expect them in such a way, unless you are an Apple customer. Yes or no? With respect to Apple, nowadays, I think it is not supplying the chargers, no? Sorry, charging cable, I mean to say. Okay. So, except your Apple customer, all the people will expect them. They will provide the charger along with the mobile phone. This is a natural bundle. And third one of the supply should be a principal supply. What is meant by this principal supply? Purpose of the contract. For which purpose you are entering into the contract, it is known as composite supply. Sorry, principal supply. Let's say mobile phone with charger. In that case, what is the principal supply? Mobile phone. Because the customers will expect if you purchase a mobile, you will get a charger. But the customer will not expect that for purchasing a charger, you will get a mobile. Yes, sir. That's why what is the purpose of the contract? It is known as principal supply. If all these 3 conditions are satisfied, it is a composite supply. If at all it is a composite supply, what is the rate that is applicable, ma? Principal supply rate. What is the rate that is applicable, ma? Principal supply rate. That means what is the rate that is applicable to the mobile will be applicable to the charger also. Second one is mixed supply. First, in order to treat it as a mixed supply, these are the conditions that are to be satisfied. First one, minimum 2 or more supply shall be there. Second one, they are artificially bundled. Third one, they should be supplied for a single price. Take the example of celebrations box. Minimum 2 or more supplies are there, 5-star, gems, dairy milk, like that. Second one, It is an artificial bundle. It is a artificial bundle. And third one, single price is there. Miss celebrations box on that 125, 250, like that single price will be there now. If all these three conditions are satisfied, it is a mixed supply. If at all it is a mixed supply, what is the rate that is applicable? Highest rate. If at all it is a composite supply, what is the rate that is applicable, ma? Principal supply rate. If at all it is a mixed supply, what is the rate that is applicable, ma? Highest rate. Okay. This is end of chapter number 2, supply. Now the third chapter will be levy and collection of GST, ma. In that, our major focus will be section 9.3 RCM and 9.5 ECO and section 10 composition schema. So that's why I don't want to waste the time in scope and all these things. So straight away I am jumping to 9 subsection 3 RCM. Generally, what is meant by the word FCM and what is meant by the word RCM I already told you, but I am repeating you once again. So what is meant by the word FCM? Forward charge mechanism. Under the forward charge mechanism, recipient will pay to the supplier and supplier in return will pay to the government. This is called FCM. What is meant by the word RCM? Under RCM, recipient will pay the GST directly to the government. Why this RCM is followed, ma? Because whenever the government does not feel convenient to collect the tax from the supplier, in those cases, RCM concept is applicable. In those cases, a recipient is deemed to be the supplier and recipient is liable to pay the GST. Those things are notified under 9 subsection 3, ma. So we're talking about the services because with respect to goods is not in the syllabus of cainter. Okay. Services taxable under reverse charge mechanism. In that, what is the first one, ma'am? GTA services. With respect to GTA, if the supplier is GTA and recipient is any of these specified recipients, in that case, RCM is applicable. Who are those specified recipients? Factory, society, cooperative society, body corporate, partnership firm, casual taxable person, registered person. If at all these are the specified recipients, in those cases, what will be applicable, ma? RCM is applicable. But with respect to GTA, two options are there. One is GTA can follow FCM or GTA can follow RCM. If the GTA means Goods Transport Agency, wants to follow the FCM, again two options are there. One is 12%, second one is 5%. With respect to GTA, if they want to follow the 12% tax rate, then ITC can be claimed. If at all under FCM, GTA wants to follow 5% rate of tax, no ITC is allowed. With respect to GTA, if he wants to follow the FCM, two rates are there. One is 12% with ITC, second one is 5% without ITC. In two options, what the supplier or the GTA feels comfortable or convenient, he will follow that. If at all they want to follow the RCM, only one tax rate is there. That is 5% without ITC. FCM two options, 12% with ITC, 5% without ITC. But under RCM, there is only one option, ma, 5% without ITC. That is the point we need to remember. If at all the recipient is the specified category of people, then only the RCM is applicable. Rest of the cases, FCM is applicable. Second one is legal services. With respect to legal services, who can be the supplier? Advocate, individual advocate, senior advocate, or partnership firm of advocates. And if at all the recipient is this particular business entity, then only RCM is applicable. Rest of the cases, FCM will be applicable. Okay. If the supplier is advocate and recipient is business entity, then only RCM is applicable. Rest of the cases, FCM will be applicable. For example, A chartered accountant is providing legal service to a business entity. FCM or RCM? FCM. Because if the supplier is the advocate, then only RCM is applicable. If the supplier is other than advocate, in those cases FCM is applicable. Okay. In the same way, with respect to advocate, which services are covered under RCM? Only legal services. Other than legal services, whatever the other services he will do, definitely it is taxable under FCM. Next one. Supplier, arbitral tribunal, recipient, business entity, it is covered under RCM. What is meant by the word arbitration? Settlement of a civil case outside the court through a legal process, it is known as arbitration. And the panel which will do this particular arbitration is known as arbitral tribunal. If the arbitral tribunal provides this service to business entity, then only it is covered under RCM. If this arbitral tribunal provides the service to any person other than business entity, then FCM will be applicable. Next one, sponsorship services. Supplier, any person. Recipient is body corporate or partnership firm. In that case, what will be applicable? RCM is applicable. Recipient is liable to pay the GST. If the recipient is any person other than body corporate or partnership firm, in those cases, FCM will be applicable. Okay. Next one, any service who is a supplier, government. It can be central government, state government, or UT or local authority. And the recipient is business entity. Please ignore this for the time being. Then, what is the position? RCM is applicable. Recipient business entity is liable to pay the GST. And with respect to renting of immovable property, who can be the supplier? Government. Sir, what is the difference between these 2 points? One is renting of immovable property and second one is other services. That means other than renting of immovable property. Why there are 2 separate points here, ma? With respect to renting of immovable property by the government. Who is the supplier? Government. If the recipient is a registered person, then only RCM is applicable. But whereas with respect to this case, if the recipient is a business entity, that's enough to attract the GST under RCM. In case of renting of immovable property by the government, if the recipient is a registered person, then only RCM is applicable. If the services are provided to unregistered person, and if the recipient is a registered one, then RCM. If the recipient is an unregistered one, in those cases, FCM will be applicable. But whereas with respect to other than renting of immovable property, rest of the cases, what is the position, ma? If the recipient is a business entity, that's enough to attract the GST under RCM. Next one, this one is somewhat important, ma? Directorship. So with respect to directorship, directors can be divided into 2 types, executive directors, non-executive directors. With respect to executive directors, they are treated as employees of the company. That's why whatever the remuneration generally will be paid to these executive directors, it is taxable under salaries, not under GST, like whole-time director, managing director, like that. But whereas with respect to non-executive directors, one need to check whether they are treated or employees or not. How to find out whether they are employees or not? In that case, in the company's books of accounts, while paying the remuneration to them, under which section the TDS is going to be deducted? If the TDS is going to be deducted as per section 192, then it is taxable under salaries, it will be treated as employee, and no GST will be there. If the TDS is deducted as per section 194J, then the amount is not a salary, then he is not an employee. In those cases, GST is payable under RCM. Sir, what about the sitting fee that is paid to the director? It is not a salary, ma. It is taxable under RCM. Okay. If the TDS is going to be deducted as per section 192, then it is taxable under salaries, no GST, ma. If the TDS is deducted as per section 194J, in that case, it is a professional service, is not an employee. RCM concept will be applicable. That is the point you need to remember. And with respect to agency services, in that only two types of agents are covered under RCM. One is insurance agent and second one is recovery agent. So insurance agent do insurance company, recovery agent do bank, financial institution or NBFC. In these two cases, RCM concept is applicable. Recipient is liable to pay the GST. With respect to other agencies, FCM concept will be applicable. Let's say LIC agent to LIC company, RCM. LIC company is liable to pay the GST. Recovery agent to ICICI Bank. In that case, ICICI Bank is liable to pay the GST. Okay. Next one is music composer to the music company, photographer or artist to the producer. So, music composer to the music company, photographer or artist to the producer. In those cases, what is the position, ma? In those cases, RCM concept is applicable. And with respect to that, what is the point, ma? Recipient is liable to pay the GST. That is, let's say, Taman to Aditya Music. In that case, the music company Aditya Music is liable to pay the GST. And with respect to the photographer or artist to the producer, in those cases, what is the position, ma'am? The producer is liable to pay the GST. Let's take the famous movie of Triple R. In that case, the photographer, artist, all these people provided the services to the producer. Na? In that case, who is liable to pay the GST? Ma? Producer is liable to pay the GST under RCM. Next one, author to the publisher. This one is something tricky. With respect to the author to the publisher, just like GTA, here also two options are there. One is it can follow either FCM or it can follow either RCM, just like GTA. But in order to follow the FCM concept, these are the conditions that are required to be satisfied. First one is the author of the book should be a registered person. Second one, he should file a declaration. That is willing to pay the GST under FCM. Third one, once the option was selected, he shall not withdraw that particular scheme within a period of 1 year. Third one, he should indicate that particular matter in the invoice itself. If all these points are satisfied, then FCM is followed and author is liable to pay the GST. In rest of the cases, the RCM concept is applicable. Publisher is liable to pay the GST for that. Okay. With respect to author to the publisher, there are two options. One, it can follow either FCM or it can follow RCM. With respect to FCM case, in order to apply the FCM, 4 conditions are required to be satisfied. One, the author should be a registered person. Second one, he should file a declaration that is willing to pay the GST under FCM. Third one, he should not withdraw the option within a period of 1 year. And he should make a declaration on the invoice that is paying the GST under FCA. If all these conditions are satisfied, then FCM will be applicable. Author is liable to pay the GST. In the rest of the cases, publisher is liable to pay the GST. Rest of the cases, who is liable to pay the GST? Publisher is liable to pay the GST under RCM. That is the point we need to remember. Okay. Next point is naam ke vaste, who is the supplier members of overseeing committee, and who is the recipient RBI. In that case also he is liable to pay the GST RBI is liable to pay the GST. And next one is supplier, individual direct selling agent. Recipient is bank, NBFC. In that case also bank or NBFC is liable to pay the GST, and these things are not required. Next one, who is the supplier? Business facilitator. Who is the recipient? Bank. In that case, who is liable to pay the GST? Bank is liable to pay the GST. Next one, who is the supplier? Agent of business correspondent. And recipient, business correspondent. Then also RCM. Business correspondent is liable to pay the GST. Next one, security services. That means providing ATM security guards, bouncers, bodyguards, like that. Who is the supplier? Any person other than body corporate. And who is a recipient? A registered person. In that case, FCM or RCM? RCM. With respect to the RCM, what is the thing, ma'am? With respect to the RCM, recipient registered person is liable to pay the GST. If the supplier is a body corporate, ma'am, in that case FCM or RCM? If the supplier is a body corporate, then FCM or RCM? FCM. If the supplier is any person other than body corporate, then only RCM is applicable. If the body corporate is providing security services to any person, including a registered one, in those cases FCM will be applicable. Next point is renting of a motor vehicle designed to carry the passenger. Here also two options are there, ma. It can follow either FCM or it can follow either FCM or RCM. But who can be the supplier? Any person other than body corporate. And who shall be the recipient? Body corporate. In that case, supplier is any person other than body corporate. Recipient is body corporate. In those cases, RCM is applicable. Recipient body corporate is liable to pay the GST. Sir, what about the case if the supplier is a body corporate? If the body corporate is providing renting of motor vehicle service, in that case, FCM. Sir, if at all the recipient is other than body corporate, then what is your answer? Renting of motor vehicle to the person other than body corporate, then also FCM. So, supplier can be any person other than body corporate, and recipient is a body corporate, then only FCM is applicable. Sorry, then only RCM is applicable. Rest of the cases, FCM will be applicable. Okay. Sir, with respect to this case also, there are two options. They can follow either FCM or they can follow RCM. But with respect to FCM, the rate of tax is 12% and you can claim the IDC. If at all you want to follow the RCM, the rate of tax is 5%, and with respect to that 5% without IDC. FCM 12% with IDC, RCM 5% without IDC. So this is the point you need to remember with respect to renting of motor vehicle. Next one, lending of securities under securities lending scheme. So if at all any person who shorting the shares, like short selling, in that case the person will borrow the shares and will give the other party the shares. Whenever the price, what he thinks his target price reach, he will buy back the shares and give them to the lender. Who is the person that is giving those shares on rental basis? For that, he will charge some consideration. With those cases, who is the supplier? Lender. And who is the recipient? Borrower. In that case, RCM is applicable. Borrower is liable to pay the GST. Okay. Next one is services by way of renting of residential dwelling. Who is the supplier? Any person. Who is the recipient? Registered person. Then definitely RCM is applicable. Recipient registered person is liable to pay the GST. If the renting of residential dwelling to unregistered person, it is exempt. Take the example, Infosys has taken a apartment on a rental basis to give its employees as the staff quarters. In this case, who is taking the apartment on a rental basis? Infosys, which is a registered person. In that case, it is taxable under RCM. In that case, it is taxable under RCM. Okay. So, with respect to services by way of renting of residential house, with respect to, we are talking about the Infosys now. With respect to Infosys, what is the point, ma? If the Infosys has taken apartment on a rental basis to give it to them for its staff quarters, in that case, what is the position? Who is the recipient? Registered person. In those cases, what is the answer? Position, ma? Recipient is liable to pay the GST. If at all one apartment flat was taken on rent by the employee on his own, in his individual capacity, in that case, it comes under renting of residential dwelling to the unregistered person, which is exempt. Okay, that is the point you need to remember, ma. And after the end of 9 subsection 3, we need to see 9 subsection 4. Whereas with respect to 9 subsection 4, whereas with respect to 9 subsection 4, ma, here what is the difference between 9.3 and 9.4? With respect to 9.3, supplier can be registered or unregistered. Under 9.4, supplier will be always unregistered. That is the first point. And second one is, with respect to 9.4, it is applicable to notified supplies. Generally, majorly the focus will be on real estate sector. With respect to 9.4, see with respect to cement, whatever the purchases you will make in relation to a cement, all those purchases shall be made from a registered person. If at all the supplier is an unregistered person, in those cases a promoter is a registered person, then you need to pay the GST at the rate of 28%, okay, under RCA. That means whatever the cement you will purchase, always you should purchase from registered supplier. If at all you purchase it from unregistered supplier, in those cases, a recipient is liable to pay the GST under RCM. That means the registered promoter is liable to pay the GST under RCM at the rate of 28%. That is the point we need to remember. Second case, with respect to capital goods, even with respect to capital goods also, 100% of the purchases shall be made from the registered person. If at all, any capital goods are purchased from unregistered person, promoter is liable to pay the GST under RCM at their individual rates. But whereas except capital goods and cements, other inputs, the total purchases in that 80%, if at all more than or equal to 80% purchases are from registered person, then that is okay. That means 20% purchases can be made from unregistered persons. But if at all, in the total purchases, the registered person's purchases is less than 80%, then how much is the shortfall? With respect to that, you are liable to pay the GST under RCM at the rate of 18% per annum. Let's say, in the total purchases, only 70% of the purchases are there from registered person. What is the shortfall? 10%. For that 10%, definitely you need to pay the GST under RCM. at the rate of 18% per annum. At the rate of 18% per annum. That is the thing we need to remember. Okay. This is 9 subsection 4, a very small one. And another one is there with respect to 9.5. What is meant by the word ECO? First of all, e-commerce operator. Who is an e-commerce operator? He is neither the supplier nor the recipient, but brings both supplier and recipient onto a common platform, either by using mobile application or website. That particular person is known as ECO. Let's take the example of Ola. Ola cabs are there now. Ola is neither the driver nor the passenger, but brings both supplier, that is the driver, and the recipient, that is the passenger, onto a common platform by using either mobile application. Okay, in that case, definitely one is known as ECO. And another example for ECO is another, what we can say, Amazon is also another example for ECO. Amazon is neither the seller nor the buyer, but brings both supplier, that means the seller, and buyer onto a common platform by using either mobile application or website. That particular person is known as ECO. So that means every ECO is notified under 9.5. First of all, 9.5 covers ECO of services only, but not the ECO of goods. 9.5 covers ECO of services only, but not ECO of goods. That is the point. Second one. Not all the ECO of services are notified under 9 subsection 5. Only 4 types of ECOs are notified under 9 subsection 5. Only those type of ECOs are required to pay the GST if at all some conditions are satisfied. Okay. So with respect to first case, transportation of goods, this one from here onwards it is there. So with respect to this transportation of the passengers, with respect to transportation of passengers using ECO, that means Ola, Uber, Rapido, like that. So with respect to them, what is the position, ma? Who is the supplier? Driver. And who is the recipient? Any person. In that case, who is liable to pay the GST? ECO is liable to pay the GST as per 9 subsection 5. Okay. Driver is the supplier and recipient is any person. In those cases, 9.5 is applicable. ECO is liable to pay the GST. And the driver by radio taxi, motor cab, maxi cab, like that. What is meant by the word radio taxi, ma'am? Whenever there is a two-way GPS tracking is there, it is known as radio taxi. For example, you book a cab using Uber app, your location will be known to the driver as well as driver location is known to you. This one is known as two-way GPS tracking, that is radio taxi. And motor cab, up to 6 members capacity, it is called motor cab. Maxi cab means 6 to 12 members capacity, it is known as maxi cab. Okay, motorcycle means maximum of 2. With respect to them, any transportation of passengers service was provided by using ECO. In those cases, 9 subsection 5 will come into scene. As per 9.5, ECO is liable to pay the GST. So another point is providing accommodation in hotel, inn, guest house, club, campsite, etc. Okay, with respect to that, with respect to providing accommodation in hotel, inn, guest house, club, campsite, etc. With respect to them, what is the position? Definitely. If the supplier is an unregistered person, then only ECO is liable to pay the GST. If the supplier is a registered person, if the supplier is a registered person, In those cases, who is liable to pay the GST? Supplier himself is liable to pay the GST. Sir, what does this mean? Let's say for example, we just use it Make My Trip mobile app to book a hotel in Brady Bed 4th line. A small lodge is there, which is unregistered one. In that case, who is liable to pay the GST, ma'am? In that case, who is liable to pay the GST? Who is liable to pay the GST, ma'am, in that case? So with respect to hotel accommodation, in hotel, in guest house, club, campsite, etc., if the supplier is an unregistered person, then only ECO is liable to pay the GST. If the supplier is a registered person, then supplier himself will pay the GST. That is the thing you need to remember. Okay. Just now I told you example that we just booked a hotel by using Make My Trip. In that case, what is the position, ma? Definitely. With respect to the Make My Trip, what is the position, ma? With respect to the Make My Trip, it is actually we are booking a lodge by using hotel Make My Trip app. If the hotel person is the unregistered one, in that case, what is the position, ma? Hotel person is a unregistered one. In that case, what is the position? Definitely with respect to that, what is the position? Who is liable to pay the GST? Make My Trip is liable to pay the GST. And with respect to the second case, if the supplier is registered, let's take for example, by using Make My Trip mobile app, we just booked a hotel room in Hotel Taj. Just booked a room in Hotel Taj. With respect to the Hotel Taj, what is the position, ma? With respect to the Hotel Taj, is it registered or unregistered? Registered. In that case, what is the position, ma? In that case, what is the position? In that case, what is the position, ma? Definitely with respect to that case, who is liable to pay the GST? Hotel Taj, which is the registered one. That means if the supplier is a registered person, then who is liable to pay the GST, ma? Supplier himself. If the supplier is an unregistered person, then who is liable to pay the GST, ma? ECO is liable to pay the GST. Same concept will be applicable to housekeeping services also. Same concept is applicable to housekeeping services also. With respect to housekeeping services like plumbers, carpenters, electricians, etc. Plumbers, carpenters, electricians, etc. In that case, what is the position, ma? With respect to the plumbers, carpenters, electricians, let's take the example of urban company. If the supplier is an unregistered person, that means these carpenters, electricians, etc. If at all they are unregistered, then urban company is liable to pay the GST. If at all these people are registered, in those cases, the suppliers is liable to pay the GST. And apart from that, another new point is also there, food aggregators like Zomato, Swiggy. So with respect to the food aggregators like Zomato, Swiggy, if at all any restaurants are providing services through this Zomato or Swiggy, in that case, who is liable to pay the GST? In that case, who is liable to pay the GST? In that case, who is liable to pay the GST? Food aggregators like Zomato or Swiggy is liable to pay the GST. Second case, if they do, any hotels are actually making supplies through Zomato or Swiggy. In that case, what is the position? With respect to the Zomato or Swiggy, like what we can say is, if the hotel tariff is less than 7,500, in that case, who is liable to pay the GST? 7,500, who is liable to pay the GST? Zomato is liable to pay the GST. If the hotel tariff is more than 7,500, in that case, who is liable to pay the GST? Hotel itself is liable to pay the GST. In case of food aggregators like Zomato or Swiggy, okay, any restaurants are supplying the food through Zomato or Swiggy. In that case, with respect to those restaurants, Zomato or Swiggy is liable to pay the GST, if at all. Hotels are making food supplies through Zomato or Swiggy. In that case, what is the position, ma? Definitely with respect to them, what is the position? With respect to them, what is the position, ma? If the hotel room tariff is less than 7,500, then Zomato or Swiggy is liable to pay the GST. If the hotel tariff is more than 7,500, in that case, who is liable to pay the GST, ma? If the hotel tariff is more than 7,500, in that case, who is liable to pay the GST, ma? Hotel itself is liable to pay the GST. That is the point we need to remember. Okay. So, this is 9 subsection 5. In the case of 9 subsection 5, who is liable to pay the GST, ma? Generally ECO. But in few cases, if the supplier is a registered one, supplier himself will pay the GST. And if the supplier is an unregistered one, then only ECO is liable to pay the GST. This is all about 9 subsection 5. Now we need to proceed to section 10, composition scheme. Okay, now we are going to discuss about this composition scheme. What is the purpose of this composition scheme? Whereas with respect to few cases, so with respect to the why this particular composition scheme is needed. The purpose of composition scheme is in order to provide the small scale business people, to pay a lower rate of tax. That is the fundamental purpose of this composition scheme. In order to make the people to pay lower rate of tax, especially the people who are running the cottage industries. That is the thing we need to remember. Okay. And in the same way, with respect to this composition scheme, it can be divided into two types of schemes. One particular thing is normal composition scheme under section 10.1 and second one is concessional rate scheme under section 10.2a. There are two types of composition schemes. One is normal composition scheme under section 10.1. Second one is concessional rate scheme under section 10.2a. Whereas initially we will discuss about normal composition scheme under section 10.1. Who are the persons that are eligible for this normal composition scheme? Who are the persons that are eligible for this normal composition scheme? So, who are the persons that are eligible for this normal composition scheme? That means manufacturer, trader, service provider. Who are the persons that are eligible for this normal composition scheme? That means this normal composition scheme under section 10.1 is designed for the supplier of the goods only. This normal composition scheme under section 10.1 is designed for the supplier of the goods only. Supplier of the service is generally not eligible for this normal composition scheme. Okay. The one and only service that was eligible for this normal composition scheme will be restaurant service. Except restaurant service, no other exclusive service provider is eligible for normal composition scheme under section 10.1. Okay. Sir, that means supplier of the every good is eligible. Here, the supplier of the goods is divided into two parts. One is manufacturer and second one is trader. Manufacturer of notified goods, except the manufacturer of notified goods, the manufacturer of notified goods, remaining all the cases. In the remaining all the cases, the manufacturer is eligible. So, what are those notified goods which are not eligible for normal composition scheme under section 10(1)? Ice cream, pan masala, tobacco, aerated water, building bricks, fly ash bricks, roofing tiles. These people are generally not eligible for this normal composition scheme under section 10(1). Who are the people that are not eligible for this normal composition scheme under section 10(1) ma? Can you repeat it once again? Ice cream, pan masala, tobacco, aerated water, building bricks, fly ash bricks and roofing tiles. With respect to them, definitely what is the position ma? Those people are not eligible for this normal composition scheme. Sir, what about the traders of those goods? Traders of those goods are eligible. Only the people that are not eligible are manufacturer of those notified goods. But trader of those notified goods is eligible. Trader of those notified goods is eligible. Okay. Sir, the service providers are eligible? Yes, ma. Service providers are eligible. Which type of service providers are eligible for this composition scheme? The one and only service provider that was eligible for this normal composition scheme will be restaurant service. Except restaurant service, no other service provider is not eligible for this normal composition scheme under section 10(1). Okay. Sir, in order to be eligible, what are the conditions that are needed to be satisfied? The conditions that are needed to be satisfied here is with respect to the aggregate turnover. Who is the eligible person? Who is the eligible person here? So, who is the eligible person here, ma? In the preceding financial year, if at all your aggregate turnover is less than or equal to 1.5 crore, in the preceding financial year, if at all your aggregate turnover is less than or equal to 1.5 crore, in the current year, you are eligible for this composition scheme. Okay, that is the point you need to remember. So, who are the persons that are eligible ma? In the preceding financial year? In the preceding financial year, if the aggregate turnover is less than or equal to 1.5 crore, then in the current year we are eligible for this composition scheme. Okay. Sir, but whereas with respect to few states, instead of 1.5 crore, what is the limit that is applicable ma? 75 lakhs. What are those states? MMDS and Manu. See, where are those states ma? These are the states where instead of 1.5 crore limit, 75 lakhs limit will be applicable. First one. With respect to MMDS, Manipur, Mizoram, Tripura and Sikkim. Manu means Meghalaya, Arunachal Pradesh, Nagaland and Uttarakhand. With respect to those states, Manipur, Mizoram, Tripura, Sikkim, Meghalaya, Arunachal Pradesh, Nagaland and Uttarakhand. With respect to those states, what is the position ma? With respect to those states, what is the position? Instead of 1.5 crore limit, what is the limit that will be applicable ma? What is the limit that will be applicable? The limit that will be applicable there is 75 lakhs ma instead of 1.5 crore. Okay. So, in order to be eligible for normal composition scheme under section 10(1), in the preceding financial year, our turnover should be less than or equal to 1.5 crore. Then in the current year, we will be eligible. Sir, what are the benefit you will get in the current financial year? You will get a very lower rate of tax ma in comparison with normal rates. So, what are the composition rates that are applicable to What are the composition rates that are applicable to section 10(1)? If at all you are a manufacturer, 1% of aggregate turnover. If at all you are a trader, 1% of taxable turnover. If at all you are a restaurant service provider, 5% of aggregate turnover. 5% of aggregate turnover. Okay. Manufacturer, 1% of aggregate turnover. Trader, 1% of taxable turnover. Restaurant, 5% of aggregate turnover. These are the composition rates that are applicable for 10(1). Okay. The point is here. What is meant by the word aggregate turnover and what is meant by the word taxable turnover here? What is meant by the word aggregate turnover and what is meant by the word taxable turnover here? So one need to know what is meant by the word aggregate turnover, ma. So how to compute this aggregate turnover? All taxable supplies, exempted supplies, exports, interstate supplies, minus GST, minus RCM purchases. What is the amount we will get? It is known as aggregate turnover. What is meant by the word aggregate turnover, ma? All taxable supplies plus exempted supplies plus exports plus interstate supplies minus GST minus RCM purchases. What is the amount we will get? It is known as aggregate turnover. Manufacturer is liable to pay the GST on the aggregate turnover. Manufacturer is liable to pay the GST on the aggregate turnover. But whereas the trader is liable to pay the GST on taxable turnover only. Manufacturer is liable to pay the GST on the aggregate turnover, that 1%. But whereas with respect to the trader, he is liable to pay the GST on the taxable turnover only. Okay, that is the point, ma'am. So, what are the rates that are applicable, ma'am? What are the rates that are applicable? Manufacturer, 1% of aggregate turnover, trader, 1% of taxable turnover, and restaurant, 1% of aggregate, restaurant, 5% of aggregate turnover. Okay. The next question is here. Sir, with just now you said that 10(1) is applicable for supplier of the goods only. The one and only service that was eligible was restaurant service. Other than that, no other service provider is eligible for 10(1). So our doubt is, okay, exclusive service provider is not eligible. That is okay. But along with supply of the goods, is it possible to make supply of service? Yes. Along with supply of the goods, definitely it is possible. It is possible to do supply of service also, but up to a specified limit only. Sir, what is that specified limit? In the preceding financial year turnover 10% or 5 lakhs, whichever is higher. In the preceding financial year turnover 5%, in the preceding financial year turnover 10% or 5 lakhs, whichever is higher, ma'am. Whichever is higher. That is the point we need to remember. Whichever is higher. So along with supply of the goods, we can make supply of service also. But up to which extent we can make the supply of service, ma? Up to the specified limit. What is the specified limit? In the preceding financial year turnover 10% or 5 lakhs, whichever is higher. For example, in the preceding financial year, our turnover was 80 lakhs. In that case, in the current year, up to which extent we can make supply of service? In that 80 lakhs, 10% means 8 lakhs or 5 lakhs, whichever is higher. 8 lakhs. Up to 8 lakhs, we can make supply of service also. That is the point we need to remember. Okay. The next point is, sir, is there any conditions and restrictions that are needed to be satisfied? Yes. The first condition you need to fulfill is you cannot collect the tax from the customer. That means what is the composition tax that is payable? What is the composition tax that is payable? So, whatever the composition tax you are paying, that means that manufacturer 1% of aggregate turnover, trader 1% of taxable turnover, restaurant 5% of aggregate turnover. With respect to them, what is the position, ma? With respect to them, what is the position? Definitely those 1% or 5% is needed to be paid by the composition supplier out of his own pocket. He cannot collect the tax from the customer. And in the same way, the composition supplier is paying very much lower rate of tax now. Therefore, he is unable to claim any ITC. Okay. And in the same way, you need to pay the GST on a quarterly basis. Generally, if at all you follow section 9, you are liable to pay the GST on monthly basis. But whereas whenever you are liable to pay the GST under composition scheme, you are liable to pay the GST on quarterly basis. Quarter ending next month, 18th. And the form number will be CMP08. Okay. CMP08. So, let's say for example, with respect to first quarter, April, May, June, the date of payment of, the due date of payment of composition tax will be July 18th, like that. And you need to file two annual returns. One is GSTR4 and second one is GSTR9A. GSTR4 is needed to be filed next financial year, April 30th. And 9A, general annual return, it is needed to be filed next financial year, December 31st. In the same way, the composition supplier shall mention the words, I am a composition supplier, not eligible to collect the tax from the recipient, should mention in its bill of supply. And as well as, he should display that he is a composition taxpayer at his principal place of business, that is head office, as well as APOB, additional place of business. That means at the head office and the branch, definitely he need to, what we will say, specify a name board, signboard. That is the point we need to remember. Okay. So apart from that, who are the ineligible persons, ma'am? Already we know that manufacture of notified goods is not eligible. That means ice cream, pan masala, tobacco, aerated water, building bricks, fly ash bricks, roofing tiles, those manufacturers are not eligible. And along with that, CTP and NRDP is also not eligible. What is the full form of CTP? Casual taxable person. What is meant by the word NRDP? Non-resident taxable person. Generally, those two people will do the business for a very short span period of time. Okay, they will do the business for a short span of period. That's why, in order to get the revenue from them, CTP and NRDP are not eligible for composition. In the same way, if at all you are making exclusive non-taxable supplies, any one of the unit, keep it in mind. If at all you are having the two units, one unit is making the taxable supply, second unit is making the non-taxable supply, then automatically both the units will become ineligible for composition scheme. Both the units will become ineligible for composition scheme. Next one, supplier of the goods through ECO. That means whenever the person is making supplies through ECO, he will become ineligible for composition scheme. He will become ineligible for composition scheme. That means any person who is supplying the goods through Amazon, Flipkart, Snapdeal, then automatically those people will become ineligible for composition scheme. And last but not the least, the person who is making interstate sales is also not eligible for composition scheme. So all these points that are in relation to 10.1 and some points can be applicable to 10.2a also here. Okay. Next point is, what about 10.2a? With respect to 10.2a, who are the eligible persons? With respect to 10(2)(a), the eligible persons will be the service providers except restaurant service whose aggregate turnover in the preceding financial year is less than or equal to 50 lakhs. Okay. Sir, that means what is the point here, ma? What is the point here? The people who are not eligible for 10(1) can become eligible for 10(2)(a) if at all the conditions prescribed in 10(2)(a) are satisfied. Because the people who are making exclusive supply of service are not eligible for 10(1). They can become eligible as per 10(2)(a) concessional rate scheme if at all their aggregate turnover in the preceding financial year was less than or equal to 50 lakhs. That is the point we need to remember. Okay. So, what are the composition rates that are or concessional rates that can be applicable for 10(2)(a) 6%? That means CGST 3%, SGST 3%. In total, it will be 6%. So, this is a point you need to remember with respect to that. Okay. So, another point important from the examination point of view is these 2 points with respect to composition scheme. So, let's say for example, we are having 1 unit in Mizoram and 1 unit in Andhra Pradesh. In that case, what is the limit for the composition scheme? Because with respect to AP, the limit will be 1.5 crore. But whereas with respect to Mizoram, it will be 75 lakhs. In that case, which limit shall be considered? When if the person is operating from more than one state and one among those states falls in the special category for which the limit of 75 lakhs is applicable, in that case, automatically the total limit will be reduced to 75 lakhs. In that case, eligibility criteria will be 75 lakhs, not the 1.5 crore. Okay. So, in the same way, we are having multiple places of businesses in different states. In those cases, is it possible to opt for composition scheme in one state and opt for normal scheme in some other state? Answer is no. If you want to go for composition scheme, go for all or go for none. That means if at all you are having 2 units, one in AP, another one is in Telangana. In that case, if you want to go for composition scheme, you need to take it for both the units. Otherwise, for both units, you need to take normal registration. That is the point we need to remember. If you want to go for composition scheme, go for all the units or go for none. You can't take for 1 unit composition scheme and another unit normal scheme like that. That is the point we need to remember. Okay. In the same way, these composition rates are applicable when you are paying tax on outward supplies. But whenever you are liable to pay the GST on the inward supplies under RCA, in those cases, what is the position, In those cases, what is the position? You are liable to pay the GST at normal rates. Composition rates are applicable only when you are paying tax on outward supplies. Okay, but whenever you are liable to pay the GST on inward supplies under RCM, you should pay by normal rates. Composition rates are not applicable. That is another point you need to remember with respect to this composition scheme. Okay. So, these are the major points you need to keep focus with respect to composition scheme also. Okay. Now, there ends chapter number 3. So, the next chapter will be exemptions. Whereas with respect to exemption, what can be treated as exempted supplies first of all? 100% exempted supplies, non-taxable supplies, and nil-rated supplies are treated as exempted supplies. 100% exempted supplies means levy at a specified rate but no collection. Non-taxable supplies means no levy at all. Nil-rated supplies means levy at the rate of 0. In this, we are going to discuss about this point, 100% exempted supplies. Generally, central government is empowered either by way of notification or by way of special order. The exemptions can be absolute or conditional, full or partial, general or specific. So, in which way the exemption should be there depends upon the circumstances and the discretionary power of the government. Okay. In our syllabus, we are having the exempted services only. There are various services for which the exemption notification was given. We will see all those exemption notifications one by one. In that, the important one is legal service. Sir, what is meant by the word legal service first of all? What is meant by the word legal service first of all? Legal service means any advice, consultancy or assistance. In any branch of law, it is known as legal service. Who will provide the legal service generally? Advocates, whether it can be normal advocate or a senior advocate or partnership form of advocates, arbitral tribunals. All these people generally will provide the legal service. Okay. So, these people generally will provide the legal services. Junior advocates or partnership form of advocates other than senior advocate. Second one, senior advocate. Third one, arbitral tribunal. These people will provide the legal services. And second one will be, who are the service recipients? These people. Business entity whose aggregate turnover in the current or previous financial year is more than the registration limit, that is a registered person. Second one, business entity aggregate turnover in the preceding financial year is less than or equal to registration limit, unregistered person. Other than business entity, like individuals for personal use, government itself, individual or partnership form of advocates, these two are generally treated as that means among themselves. So, we will see one by one now. First one, individual advocate to registered person, exempted or taxable, taxable under RCA. Individual advocate to unregistered person, exempt. Individual advocate to individual for personal use, exempt. Individual advocate to government, exempt. Junior to junior, exempt. Junior to senior, exempt. Same point will be applicable to partnership form of advocates also. Partnership form of advocates to registered person, taxable under RCM. Partnership form of advocates to unregistered person, exempt. Individual for personal use, exempt. Partnership form of advocates to government, exempt. And partnership form to another partnership form of advocates, exempt. Okay. But whereas with respect to senior advocate to registered person, taxable under RCM. Senior advocate to unregistered person, exempt. Senior to individual for personal use, exempt. Senior to government, exempt. Senior to junior, taxable. Senior to senior, taxable. Okay. Sir, in which way, sir? See, senior advocate is providing service to junior or other senior advocate. In that case, in which case it is taxable and in which case it is exempted, ma? If the junior advocate or partnership form of the advocates aggregate turnover is more than the registration limit, that means if at all they are registered persons, it is taxable. If the junior advocate or the partnership firm of advocates aggregate turnover is less than or equal to registration limit, simply unregistered person. In that case, it is exempted. Senior to registered junior, taxable. Senior to unregistered junior, exempt. Same point will be applicable to arbitral tribunal also. Tribunal to registered person, taxable under RCM. Tribunal to unregistered person, exempt. Tribunal to individual for personal use, exempt. Tribunal to individual for personal use, exempt. To government, exempt. And junior lawyers or senior lawyers, if at all they are registered persons, then it is taxable, C. If at all they are unregistered persons, it is exempted. Okay. And other than advocates, any CS, CMAs and other professionals are providing legal services, is it exempted or taxable? Taxable. Here exemption is only with respect to legal services that are provided by the advocates. That is the point we need to remember. Okay. After the completion of the legal service, the next exemption we need to discuss is education services. Where what is meant by the educational institution, that was defined by the educational institution. Educational institution definition was given in the exemption notification. Only these three are treated as educational institutions. Sir, what are the educational institutions as per the exemption notification? Preschool education and education up to secondary high school. Education as a part of curriculum for obtaining the qualification recognized by any law. Education as a part of approved occasional educational courses. That means simply preschool and schools. If at all it is a state syllabus up to 10th standard, if at all it is a central syllabus up to 12th standard, will be treated as educational institution. In the same way, courses recognized by Indian law, like our ICA courses and occasional training centers. These three are treated as educational institutions. So the point is here, the three that are given, these are the outward supplies that are provided by educational institutions. Whatever the services that are provided by the educational institutions to the students, staff, faculty, for a consideration, definitely it is exempted. Definitely it is exempted. Okay. So that means whatever the fee that the students will pay, whatever the fee the student will pay, and whatever the amount that the staff will pay for the sake of some bus facility or something else, all those things are exempted. There is no need to pay any GST. And whereas with respect to entrance exam, that means any of these educational institutions are given as exam centers, or some entrance fees charged for any entrance exam. In those cases also, it is exempted. There is no need to pay any GST. In the same way, with respect to inward supplies, these five are exempted. That means this one is by educational institution and this one is two educational institutions. Okay. So with respect to two educational institutions, 5 points are given here, like transportation, food facility, security and housekeeping, admission test, online educational journals. 5 points are given here. Okay. What are the inward supplies that are covered here, ma? Transportation, food facility, security and housekeeping, admission test, online educational journals. With respect to these five, first three, that means transportation, food facility, security and housekeeping. These three are exempted only with respect to schools. These three are exempted only with respect to schools. And whereas admission test or conduct of exams, exemption is given to all the three educational institutions that are notified here. Whereas with respect to online educational journals, exemption is given only to the courses recognized by Indian law. I am repeating you once again. Transportation, food facility, security and housekeeping. These three are exempted only with respect to school. Whereas with respect to admission test, exemption is available to all the three educational institutions. Whereas with respect to online educational journals, exemption is restricted only to the courses recognized by Indian law. That is the point you need to remember. Okay. And apart from that, some other important points also can be there. This is an important one from the examination point of view. Boarding schools, accommodation in hostels are exempt. What is meant by this? Boarding schools, where the accommodation is mandatory there and it is a natural bundle. If at all it is a natural bundle, it will come under composite supply. If at all it is a composite supply, in that case, what is the position? If at all it is a composite supply, then what is the rate that is applicable to principal supply will be applicable to this, total composite supply. What is the principal supply here? Education. What is the rate of tax with respect to education here? It is exempted. Therefore, accommodation in hostel is also exempt. That is the point. Another important point you need to keep focus is private coaching in the professional courses like CA, CMA, CS are also taxable. I already told you that the courses recognized by Indian law means the person who are giving the certification. The persons who are giving the certification. Okay. So the persons who are giving the certification are covered under the exemption notification. But whereas the private coaching, only the coaching was given. In that case, definitely it is taxable. In the same way, courses recognized by Indian law is only exempted. Education as a part of curriculum obtained. A qualification recognized by foreign country, definitely it is taxable. Courses recognized by Indian law only exempted ma. If at all it is a foreign course, definitely it is taxable. This is also the important one. This is also the important one, ma. Catering services provided by anyone other than the educational institutions is taxable. That means here, if the educational institution provides any mess facility, then only it is exempted. If at all this mess facility or the catering service is provided by anyone other than educational institution, definitely it is taxable. In the same way, another important one, this one now. Central and state boards shall be treated as educational institutions for a limited period purpose of providing services by way of conduct of examination to the students. GST shall not apply to any fee or the amount charged by the board for conducting the exams, including the entrance exam. Simply, the SSC board or AP intermediate board will be there. Na? Those people will be treated as educational institutions for a limited purpose of conducting the exams. While conducting the exams or for the purpose of conducting the exams, these boards are treated as educational institutions. Therefore, GST is not applicable to them. Here, conducting the exam means whatever the input services that are required to conduct the examination, like online testing services, result publication, printing of notification for the exam, hall ticket printing, question paper preparation, printing of question paper, all these things are the supporting services for the conduct of exams. Okay. In those cases, definitely what is the position, ma'am? In those cases, definitely what is the position, ma'am? They are also exempted. There is no need to pay any GST. This is education service related exemption notification in short, and you need to keep focus on the important areas what we have discussed in this particular session. Next one will be passenger transportation services. So with respect to passenger transportation services, what is the position, ma? Transportation of passengers here, it can be done in four ways: roadways, railways, airways, and waterways. With respect to roadways, it can be divided into two types. One is stage carriage and second one is contract carriage. So what is meant by the word stage carriage and what it means by the word contract carriage? Stage carriage means in every stage the particular vehicle will stop. It is known as stage carriage. Like even villages, the buses named as Palle Velugu will be there. Na? Those type of buses are the examples for village buses. Those things are treated as stage carriage. And contract carriage means generally non-stop buses in practical scenario. With respect to stage carriage, if at all it is non-AC, exempted. AC, definitely it will be taxable. And with respect to contract carriage, in these cases, it is taxable. Like contract carriage, if at all it is AC, taxable. Radio taxi, even though non-AC, but still taxable. Hire basis, tourism or conducted tour. In these cases, the contract carriage is taxable. Radio taxi, what is meant by the word radio taxi, ma'am? What is meant by the word radio taxi? Already I told you. If at all there is a two-way GPS tracking is there, it is known as radio taxi. It is known as radio taxi. Like if you book a cab in Uber, your location will be known to the driver as well as driver location is known to you. This one is known as radio taxi. And in the same way, hire basis, let's take the example of marriage. For marriage, you have taken a bus on rental basis. It comes under charter or hire basis. And tourism, exclusively that particular vehicle is used for tourism purpose, then also it is taxable. Conducted tour, let's say 3-4 families gathered a place and they just arranged a travels for the sake of the tour, then it is known as conducted tour. In all these cases, the contract carriage is taxable. If at all it is non-AC, it is exempted. In the same way, autos and e-rickshaws are also exempted. There is no need to pay any GST on that. With respect to train, railways, AC as well as in non-AC, first class will be taxable. And in the non-AC, first class will be taxable. And with respect to non-AC, sleeper and second class are exempted. Sleeper and second class are exempted. And in the same way, metros, monorail, tramway, all these things are exempted. And if at all it is a cable car or aerial tramway, definitely it is taxable. In the same way, with respect to air transportation, if at all origin or destination is any one of these batsman places like Bagdogra, Arunachal Pradesh, Tripura, Sikkim, Manipur, Mizoram, Meghalaya, Assam, Nagaland. If at all the traveling is economy class, then it is exempted. Whereas rest of the cases, all other journeys are taxable. And whereas with respect to waterways, inland waterways, it is exempted. Inland waterways means within motherland. Within India, specified sea routes are exempted. Whereas other routes, if at all it is for tourism or transportation outside India, definitely it is taxable. And if at all it is a public transport, it is exempted. If at all it is a public transport, it is exempted. Okay. And that one is enough. And next one is with respect to admission to any premises. Like admission to any premises. Admission to any premises means any entry fees charged. In those cases, whether it is exempted or taxable, we need to see here. With respect to museum, national park, historical places visiting, zoo, tiger reserve, like that, without any limit. That means irrespective of the ticket price, it is exempted. But whereas with respect to circus, drama, dance shows, award functions, musical shows, planetarium, like that, or sports events, if the ticket price is less than or equal to 500, it is exempted. More than that, full amount will be taxable. So, with respect to circus, drama, dance shows, award functions, music shows, like that, if the ticket price is less than or equal to 500, it is exempted. More than that, full amount will be taxable. Okay. Whereas with respect to zoo, museum, tiger reserve, national park, etc., irrespective of the ticket price, they are exempted. And the next point will be performance of artist. With respect to artist performance, if at all it is a classical one or a folk one, classical or folk ones of music, drama, dance. In these cases, if the consideration is less than or equal to 1.5 lakhs, it is exempt. If the consideration is more than 1.5 lakhs, full amount will be taxable. Let's say, for example, it is a classical dance performance. The consideration is 1,70,000. In that case, how much amount is taxable? Is it the excess 20,000 or the total 1,70,000 will be taxable? Definitely the total 1,70,000 will be taxable. Okay. And next one is, if this particular classical or folk one performed as a brand ambassador, in that case, always full amount will be taxable. Let's take the example of Zakir Hussain, who is famous for tabla. If at all he conducts his own musical program, in that case, exemption is available up to 1.5 lakhs. If he performs a particular show on behalf of Taj Mahal tea, Wah Taj, in that case, definitely the total amount will be taxable. That is the point you need to remember. Except classical or folk ones, whatever the Western or Bollywood style dances and all these things will be there, always full amount will be taxable. Okay. The next point will be healthcare services. Generally, who are the people that will provide the healthcare service? Clinical establishments, authorized medical practitioners, paramedics. Generally, these people will provide the healthcare services. Clinical establishments means hospitals, nursing homes, like that. And authorized medical practitioners means generally Indian Medical Council approved doctors, or sometimes even the other than Indian Medical Council, like foreign doctors will be there. They can also be treated as authorized medical practitioners. And what is meant by the word paramedics? Paramedics means pre-hospitalization or post-hospitalization service providers. Pre-hospitalization or post-hospitalization service providers. Like nurses, physiotherapists, all these people will come under the category of paramedics. These people will provide the healthcare services much generally. What is meant by the word healthcare service here? Diagnosis, treatment, or care. All the three activities are covered under healthcare services. First, you need to diagnose the disease. After that, treatment will be given. After the treatment is over, care like counseling or something will be there. Na? All the three types of stages are covered under healthcare services. But in order to be exempted, definitely it should be in a recognized system of medicine. Then only it is exempted. It should be there in a recognized system of medicine. What is meant by this recognized system of medicine, like allopathy, yoga, Unani, Siddha, homeopathy, Ayurveda, naturopathy, all these activities which are recognized by the government of India are exempt. Okay. Sir, what are the cases where there is no recognition, like urine therapy, acupuncture, color therapy, gemstone therapy, like that? Pranic healing, they don't have the recognition. Definitely those type of activities are taxable. If at all it is a government recognized system of medicine in India, then only you will get the exemption. In rest of the cases, definitely it will be taxable. Okay. Sir, this healthcare service will include ambulance services also. Yes. Transportation of the patient to and fro from the clinic, definitely it is also treated as healthcare service. Ambulance services here includes air ambulance also. Ambulance services here includes air ambulance also. Okay. And sir, what about hair transplantation or cosmetic and plastic surgery? If at all this hair transplantation or cosmetic and plastic surgery has done for the sake of beautification, definitely it is taxable. If at all this hair transplantation or cosmetic or plastic surgery was done as a part of medical treatment, it is exempted. For the sake of beautification, it is taxable. As a part of medical treatment, it is exempted. In the same way, sir, hospital provided services are exempted because they will be treated as healthcare services. But sometimes super specialty hospitals will take the services of specialist doctors, general consultant doctors, we will call them as. They are not the full-time employees of the hospital. They will have the visiting hours in that particular hospital, or they will come for a critical surgery for which they are famous for. Whatever the amount that is paid to these doctors or consultants, whether this amount can be treated as healthcare service, yes, it is also exempted. Sir, what about the food facility that is provided at the hospital? Whether it is exempted or taxable? Food that is provided to the inpatients is only exempted. Other than inpatients, it is taxable, like attendants, helpers, that will be there. Definitely for them, any food is provided, it is taxable. Only food provided to inpatients, that is only exempted. Rest of the cases, it is taxable. Next one. Sir, what about the cases where the hospital space was given for renting of some shops or advertisement boards, like that? They are no way in relation to the healthcare service. Na? In those cases, renting of the shops by the hospital or advertisement, all these things will become taxable. Okay, next one. Sir, what about this IVF facility, test tube babies or surrogacy, something like that, whether it is exempted or taxable? They are also treated as healthcare services. They are also exempted. And what about the room rent? With respect to the room rent, if at all it is critical care like ICU, CCU, something like that, irrespective of the room rent, it is exempted. Other than them, rest of the cases, if the room rent to the inpatient is up to 5,000 rupees per day per patient, it is exempted. Rest of the cases, it is taxable. Okay. Critical care units are only exempted, whereas the other rooms per day per patient up to 5,000 rupees, it is exempted. And in excess of that, always full amount will be taxable. So, what is the critical cares here? ICU, CCU, ICCU, NICU, like that critical cares, my emergency wards, they are fully exempted irrespective of the amount charged there. And cord blood bank, stem cells, previously they are exempted, but now the exemption was withdrawn and preservation of stem cells is taxable. And what about the veterinary clinics? Whether they are exempted or taxable, exempted. Okay. Next one is with respect to agriculture. Whereas with respect to agriculture, so with respect to agriculture related activities, whatever the activities the cultivator will do, whatever the activities in relation to cultivation for food, fiber or raw material or agriculture produce, those are exempted. So here cultivation means not only the cultivation of the plants, but rearing of animals is also exempted except the horses, like silkworms, honeybees, fisheries. Okay, with respect to them, rearing of animals is exempt. That means the exemption here is not confined only to the cultivation of the plants, and rearing of animals except horses is also covered by the notification, and definitely they are also exempted. And in the same way, supply of farm labor, like with respect to few agricultural activities, farm labor was needed, but nowadays they are using the machinery also. So that one is also exempted. That is a different story. So supply of the farm labor, renting of the vacant land, or renting of the machinery for agriculture purpose. Okay. Job work in relation to cultivation, harvesting, threshing, plant protection, seed testing, soil testing, whatever the things you will do in relation to agricultural land or in agricultural land. Definitely those are agriculture related and it is exempted. Okay. And in the same way, whatever the process you will do at the farm, like trending, pruning, cutting, drying, cleaning, trimming, sun drying, all these activities are also exempted. That means simply up to which extent these processes are exempted. These processes are exempted until its basic nature was not changed. When its basic nature changes, automatically it is no more agricultural produce and exemption will not be available. So, until the basic nature of the agricultural produce does not changes, exemption will be there. But once the basic nature of the agricultural produce changes, exemption is not available. Like what we can say is, see, rearing of animals, examples we have given like dairy farm, livestock farming, forestry, fish breeding, poultry, rearing of silkworms, and cultivation means agriculture, horticulture, like that. Okay. And see, agriculture product versus non-agriculture product, we have just given there. Potatoes, agriculture. Potato chips, taxable, non-agriculture. tomatoes, agriculture, tomato ketchup, taxable, coffee beans, agriculture, exempted, processed coffee, non-agriculture, taxable, sugarcane, agriculture, exempted, jaggery, but specifically exemption is there, then it is exempted, otherwise it is taxable. Pulses, exempted, packed pulses, taxable, paddy, agriculture, exempt, rice, non-agriculture, taxable, corn, agriculture, corn flour, non-agriculture, like that. Okay. Until the basic nature changes, it will be treated as agriculture produce exempted. Once the basic nature changes, it is no more agriculture produce, definitely it is taxable. Okay. And see some, what about the warehousing of agriculture produce, ma? Even warehousing of agriculture produce, minor forest produce, all these things are also exempted. In the same way, agricultural extension services like agricultural supporting services are also exempted. And whatever the services that are provided by the market committee to the farmers, it is exempted, ma. Okay. And with respect to other cases like storage of rice is exempt, and preconditioning, pre-cooling, ripening, waxing, retail packing, which do not alter the essential features of agriculture produce, it is exempted. And transportation of the agriculture product through road, rail or ship, it is exempted. And the services of electricity distribution utilities like some bore wells are required for farming, all these things will further. Some education distribution facilities are provided, they are also exempted. There is no need to pay any GST with respect to them. Okay. So the next service will be goods transport service, ma. Whereas with respect to goods transport service, here the transportation can be done in four ways. Already you know that: roadways, railways, airways and waterways. With respect to roadways, courier. With respect to roadways, courier services are taxable. And with respect to GTA, that means other than courier and GTA, if at all anybody transport the goods by road, it is exempted. If at all the goods are transported either by the courier or by the GTA, then only it is taxable. Whereas with respect to courier, there are no relaxations. But whereas with respect to GTA, some relaxations are there. If at all they are random goods, it is exempted. So what is meant by random goods? These are the random goods like relief material, agriculture produce, newspapers, defense items, organic manure. Okay. Milk, salt, like the daily necessities. These are known as random goods. With respect to random goods, it is exempted. With respect to random goods, it is exempted. But whereas with respect to other than random goods, if the recipient is a factory, society, cooperative society, registered casual taxable person or a registered person, then only it is taxable. Rest of the cases it is exempt. With respect to GTA, random goods transportation is exempt. Other than random goods, if the recipient is factory, body corporate, society, cooperative society, casual taxable person and registered person, then it is taxable. Rest of the cases it is exempted. Okay. And whereas with respect to train, only random goods are exempted. Rest of the goods, if at all they are transported by train, they are taxable. And with respect to air transportation, whether it is domestic one or international one, in both cases it is taxable. whether it is a domestic one or an international one. In both cases, it is taxable. And with respect to sea route, if at all it is inland waterways, it is exempt. And other than inland waterways, then random goods are exempted. All other cases, it is taxable. So you need to keep the point, you need to keep that random goods actually in your mind, ma. R means relief material, A means agriculture produce, N means newspaper, D means defense, O means organics, and M means milk, salt, like the daily necessities. These random goods are transported through sea routes other than inland waterways, then they are exempted. Any other goods that are transported through other than inland waterways, it is taxable. That is the point we need to remember. Okay. Next point is charitable and religious services. With respect to charitable and religious services, if at all, any religious trust or a charitable trust given any premises on a rental basis, then this is exempted based on these criteria. If the room rent is less than 1000 rupees per day, it is exempted. With respect to community halls or open areas like that, per day rent is less than 10,000, it is exempted. With respect to the shops which are given for business purpose, per month less than 10,000, it is exempted. Any religious place, rooms are given on a rental basis and the room rent is less than 1000 rupees per day, it is exempted. With respect to community hall, per day rent is less than 10,000, it is exempted. Whereas with respect to shops, per month rent is less than 10,000, it is exempted. If at all it is more than or equal to 1000 in case of room, in case of community halls or shops, if at all it is more than or equal to 10,000, it is taxable. Full amount will be taxable. That is the point we need to remember. Okay. In the same way, this point is important from the examination point of view. Training in sports. If at all it is given by the charitable trust, then only it is exempted. If training in sports is given by any individual or other than charitable trust, definitely it is taxable. Training in the sports that is given by the charitable trust, then only it is exempted. Rest of the cases it is taxable. And in the same way, not all the activities that are done by the charitable trust are exempted. Only the charitable activities that are done by the trust are exempted. Sir, what are charitable activities that are defined in the exemption notification? Like promotion of the religion, spirituality, yoga, preservation of environment, preservation of public health, educational programs. All these things definitely comes under charitable activities, and definitely they are exempted. Okay. And in the same way, the process of conducting a religious ceremony, that means conduct of the marriage, definitely it is exempted. In the same way, any training or coaching in the recreational activities, arts, culture, etc., with respect to them, what is the position? They are exempted or taxable? They are exempted. In the same way, with respect to Hajj committee, now it was exemption was withdrawn. And with respect to Manas Sarovar, Kailash Manas Sarovar Yatra, definitely it is provided by the government now, majority cases. That's why it is also, yes, exempted. These are the charitable activities that are exempted, you need to keep it in mind. With respect to charitable trust, some another important points is hostel accommodation services provided by the trust to the students do not fall under the ambit of charitable activities, definitely it is taxable. It is not a charitable activity, providing the accommodation to the students. That's why it is taxable. Religious pilgrimages that are conducted by the trust are not exempt. Only by the government it is exempt. Any religious pilgrimage that is organized by any charitable trust, it is taxable. Okay. and services provided to charitable or religious trust are not squarely exempt. That means by charitable trust is exempt, to charitable trust is taxable. Okay. These are the important points you should remember with respect to charitable trust related activities. And in the same way, services provided by the government. Here, who is the service provider? Government is the service provider. Okay. So, with respect to services provided by the government, if the central government, state government, UT or local authorities providing service as a public authorities, it will be covered under 7 subsection 2 read with schedule 3 negative list. There is no need to pay any GST on it. But whereas with respect to other services, with respect to transportation of the goods or passengers, taxable as per the normal provisions. That means whatever the exemptions that are generally applicable to private people will be there for the government also. If it all one government to another government department, it is exempt. And whereas with respect to postal department, if it all postal department provided services to government, it is exempt. Other than government, these 4 are exempted. Rest of the cases they are taxable. Postal department to government, it is exempted. Okay. Postal department to non-government, 4 cases are exempted. Rest of the cases they are taxable. What are the things that are exempted? Postcard, inland letter, book post, ordinary post where weight is less than 10 grams. Only these 4 are exempted. Like other than that, like register post, speed post, distribution of mutual funds, collection of telephone bills, those items that are not specified in the exemption list, if at all they are provided by the postal department, they are taxable. Okay, that is the point you need to remember. And with respect to renting of immovable property by the government, if the consideration is less than or equal to 5,000, it is exempted. If the consideration is more than 5,000 rupees, full amount will be taxable. In the same way, whatever the services that are provided by the government in relation to flight or ship, definitely all those activities are taxable. And with respect to other services, if at all it is a non-business, and that means personal use, it is exempt. If at all it is a business unit, that means if at all the service is provided to the business entity, we need to check whether the aggregate turnover is more than the registration limit or less than the registration limit. If the aggregate turnover is more than the registration limit, then definitely that person is a registered one. And if the aggregate turnover is less than or equal to registration limit, it is an unregistered person. If at all the business entity is an unregistered person, it is exempt. If the business entity is a registered person, we need to check what is the consideration. If the consideration is less than or equal to 5,000, it is exempt. If the consideration is more than 5,000 rupees, full amount will be taxable. That means with respect to renting of immovable property, straight away, if the consideration is more than 5,000, it is taxable. With respect to other services, we need to check whether it is for business purpose or it is for personal use. If at all it is for personal use or non-business entity, it is exempt. If at all it is for business purpose, we need to check whether that particular person is registered or unregistered. If that particular person is unregistered, it is exempted. If that particular person is registered, in that case, we need to check what is the consideration. If the consideration is less than or equal to 5,000, it is exempted. If the consideration is more than 5,000, full amount will be taxable. That is the point we need to remember with respect to government. So these are the important areas from the examination point of view. You need to keep focus on these exemptions. So there ends chapter number 4, exemptions. Okay, ma, the next chapter will be chapter number 5, time and value of supply. Whereas with respect to time and value of supply, first question is, what is meant by the word time of supply? Nothing but point of taxation. At what point of time recipient is liable to pay the GST? That will be decided by time of supply. And whereas in our syllabus there are two sections, section 12 and 13. Whereas section 12 deals with time of supply with respect to goods, and section 13 deals with time of supply with respect to services. Okay. Under section 12, this is 12 subsection 2 which deals with FCA. 12 subsection 2 which deals with FCA. That means under FCA, with respect to goods, what is the time of supply will be decided by 12 subsection 2. As per 12 subsection 2, what is the time of supply? Date of invoice or last date for the issue of invoice, whichever is earlier. Date of invoice or last date for the issue of invoice, whichever is earlier, will be the time of supply. Date of invoice can be found out from the invoice itself. But how to find out the last date for the issue of invoice? As per section 31. As per section 31, there are 4 cases. When physical movement of the goods was involved, when physical movement of the goods was not involved, continuous supply of the goods, sale or return basis. Like that, 4 circumstances are covered under section 31. If there is a physical movement of the goods that was involved, in that case, what is the last date for the issue of invoice? What is the last date for the issue of invoice? On or before date of removal. On or before date of removal is last date for the issue of invoice. This last date is needed to be compared with date of invoice. In that, whichever is earlier will be the time of supply. And if at all there is no physical movement was involved, in those cases, what is the last date for the issue of invoice? On or before date of delivery, that is the last date for the issue of invoice. Let's say, for example, with respect to door delivery, which is going to happen in case of Amazon, Flipkart, etc. The goods are coming to us. We are not moving towards the goods. That's why it is a case of physical movement of the goods was involved. In that case, what is the last date for the issue of invoice? On or before removal of the goods from the factory, that is the last date for the issue of invoice. Okay. But whereas with respect to no physical movement like Reliance Fresh, Spencer's, we will go to the shop and purchase those things. In those cases, there is no physical movement involved. If at all there is no physical movement that was involved, in those cases, what is the time of supply? So what is the last date for the issue of invoice? On or before delivery. On or before delivery of the goods. Okay. And whereas with respect to continuous supply of the goods, the first question is here, what is meant by the word continuous supply of the goods? If at all 2 conditions are satisfied, they can be treated as continuous supply of the goods. First one, a recurring nature should be there. Second one, there is an obligation to make the periodic payment. If at all these 2 conditions are satisfied, then it will be treated as continuous supply of the goods. So with respect to continuous supply of the goods, what is the last date for the issue of invoice? Date of periodic statement or date of payment, whichever is earlier, that will be the last date for the issue of invoice. With respect to continuous supply of service, what is the last date for the issue of invoice? Date of periodic statement or date of payment, whichever is earlier. That is the last date. This last date of invoice will be compared with date of invoice In that, whichever is earlier will be the time of supply. And with respect to sale or return basis, what is the last date for the issue of invoice? With respect to sale or return basis, what we can say is, what is the last date for the issue of invoice? Date of approval or from the date of removal 6 months, whichever is earlier. Date of approval or from the date of removal 6 months, whichever is earlier. Okay. That is the point we need to remember. Date of approval or from the date of removal 6 months, whichever is earlier. That is the last date. Okay, this is all about 12.2. Okay, ma? And 12.3 deals with RCA. Under RCA, what is the time of supply with respect to goods that will be decided by 12 subsection 3? What does 12.3 deals with? Time of supply in relation to goods under RCA. With respect to that, 3 dates will be there, ma. Date of receipt of the goods, date of payment, from the date of invoice, 31st day. In these 3 dates, whichever is earlier, that will be the time of supply. What are the 3 dates, ma? Date of receipt of the goods. Second one, date of payment. Third one, from the date of invoice, 31st day. In these 3 dates, whichever is earlier, that will be the time of supply. Sir, with respect to date of payment, what shall be taken into account? The date when the payment is entered in the books of accounts, or the date when the money is debited from the bank account of the recipient. What shall be treated as date of payment? Whichever is earlier, ma. The date when the payment is entered in the books of accounts, or the date when the money is debited in the bank, whichever is earlier will be treated as date of payment. Okay, that is the point we need to remember. If at all these things does not works out, in that case, what is the position? The date when the supply is entered in the books of accounts of recipient, that will be the time of supply. As per 12.3, 3 dates will be there, ma. Date of receipt of the goods, date of payment, from the date of invoice, 31st day. In these 3 dates, whichever is earlier will be the time of supply. If at all these things does not works out, in those cases, what is the time of supply? The date when the supply is entered in the books of accounts, that particular date is the time of supply. Okay. Next one is 12.4, which deals with vouchers. Vouchers can be divided into 2 types, ma. Vouchers that can be exchanged for goods or services, or vouchers that can be exchanged only for money. Vouchers that can be exchanged only for money, GST is not applicable. Like Paytm cashback offers, Google scratch cards, Google Pay scratch cards, like that. For them, GST will not be applicable. Okay. But with respect to the vouchers that can be exchanged for goods or services, GST will be applicable. As per 12 subsection 4, in relation to the goods, with respect to the vouchers, what is the time of supply? At the time of issue of voucher, supply can be identified, issue of voucher. At the time of issue of voucher, supply can be identified, issue of voucher will be the time of supply. If at the time of issue of voucher, supply cannot be identified, redemption of voucher will be the time of supply. Let's take the example of Amazon gift coupons, ma. At the time of issue of voucher, is it possible to identify the supply? Answer is no. In that case, what is the time of supply? Redemption of voucher will be the time of supply. So, but sometimes Bata vouchers, something like that, specifically they are given to school shoes or something like that. At the time of issue of voucher, supply can be identified. If at the time of issue of voucher, supply was identified, in those cases, what is the time of supply? Issue of voucher will be the time of supply. If at the time of issue of voucher, supply cannot be identified, then redemption of voucher will be the time of supply. This is 12.4. And same point will be applicable to section 13 also, and 12.5 and 12.6 are there. I think both are common. That's why they are given elsewhere. Okay. So with respect to 12.5, what does 12.5 deals with? Residual cases, where it is not possible to apply 12.2, 12.3 and 12.4. In those cases, 12.5 will come into C. As per 12.5, what is the time of supply? If the GST return was filed, the date of filing of GST return will be the time of supply. If no GST return was filed, then date of payment will be the time of supply. 12.5 deals with residual cases, where it is not possible to apply 12.2, 12.3 and 12.4. In those cases, 12.5 will come into C. As per 12.5, if the GST return was filed, filing of GST return will be the time of supply. If no GST return was filed, date of payment will be the time of supply. And 12.6, which deals with additional consideration in the form of interest, penalty, late fee, etc. With respect to them, what is the time of supply? The date when the additional consideration is received, that will be the time of supply. The date when the additional consideration is received, that will be the time of supply. See this common point here. This is 12.5. Okay, ma'am. Next one is section 30. Whereas section 12 deals with time of supply with respect to goods, and section 13 deals with time of supply with respect to services. Here also 13.1 नाम के वास्ते मा. That means in 12.1 as well as 31 both are नाम के वास्ते. It simply says time of supply shall be determined as per the following provisions. So now this is 13 subsection 2, which deals with FCA. Under FCA, what is the time of supply with respect to services? As per section 31, from the date generally when the service was completed, within 30 days, invoice is needed to be issued. That means the time limit for the issue of invoice will be generally 30 days from the date of completion of service. But whereas with respect to the banks, insurance, NBFCs, this 30 days time period will be replaced by 45 days. That is different story. But what is the general time period? 30 days. From the date of completion of service, invoice is needed to be issued within 30 days. This is the statutory time period. If invoice is issued within the statutory time period, then what is the time of supply as per 13 subsection 2? Date of invoice or date of payment, whichever is earlier, will be the time of supply. When this point is applicable, from the date of completion of service, if invoice is issued within the statutory time limit of either 30 days or 45 days, in those cases, what is the time of supply? Date of invoice or date of payment, whichever is earlier. If invoice is not issued within 30 or 45 days, in that case, what is the time of supply? Date of completion of service or date of payment, whichever is earlier, will be the time of supply. If invoice is issued within 30 days, then date of invoice or date of payment, whichever is earlier, will be the time of supply. If invoice is not issued within 30 days, then date of service or date of payment, whichever is earlier, will be the time of supply. Next one is 13.3, which deals with RCM. Under RCM, in relation to services, only two dates will be there. Date of payment or from the date of invoice, 61st day, whichever is earlier, will be the time of supply. Under 13.3. As per section 13.3, what is the time of supply? Date of payment or from the date of invoice 61st day, whichever is earlier. And in the same way, with respect to associated enterprises, where the supplier is located outside India, in that case, what is the time of supply? Date of payment or the service when entered in the books of accounts, whichever is earlier. What is meant by associated enterprises? The organizations which are having the mutual interest in one another. Those type of organizations are known as associated enterprises, and the supplier is there in outside India. In that case, what is the time of supply? Date of payment or the date when the service entered in the books of accounts, whichever is earlier. And with respect to continuous supply of service, when a service can be treated as continuous supply of service, if at all three conditions are satisfied. First one, recurring nature shall be there. Second one, there is an obligation to make the periodic payment. Third one, the contract period shall be minimum 3 months. Recurring nature, periodic payment obligation, the contract period is minimum 3 months. If all the three conditions are satisfied, in that case, what is the position? Definitely it is a continuous supply of service. If at all it is a continuous supply of service, what is the position? Three cases will be there. If the due date can be ascertained, then what is the time of supply? The due date is the last date for the issue of invoice there. If at all due date cannot be ascertained, then date of payment will be the time of supply. And with respect to that, if at all the payment is linked with completion, in those cases, what is the position? Completion of that particular event will be the last date for the issue of invoice. Take the example of mobile postpaid bill. With respect to mobile postpaid bill, there will be a fixed due date. That's why what is the last date for the issue of invoice? On or before that particular due date. Sometimes, let's say for example, with respect to cable TV, when it was postpaid, there is no fixed due date for that. In that case, what is the date of invoice? The date when the payment is done. But whereas with respect to construction contracts, payment will be made in relation to the work certified or completed. In that case, what is the last date for the issue of invoice? Whenever that particular construction was completed. Let's say in the agreement it was like that, when the first 30% should be completed. When the first floor was completed, 30% payment will be done. Second floor was completed, another 30%, and remaining payment will be done after the total completion. In that case, payment is linked with completion. If at all payment is linked with completion, in those cases, what is the last date for the issue of invoice? On or before completion. Okay. And same point, this is 13.3 and 13.4, same as in section 12. At the time of issue of voucher, supply can be identified. Issue of voucher will be the time of supply. If at the time of issue of voucher, supply cannot be identified, redemption of voucher will be the time of supply. Same point 13.5 and 13.6 also, like 13.5, residual cases where it is not possible to apply 13.2, 13.3 and 13.4. In those cases, 13.5 will come into C. As per 13.5, what is the time of supply? If GST return was filed, filing of GST return will be the time of supply. When no return was filed, date of payment will be the time of supply. And 13.6, it is also same as in section 12. Additional consideration in the form of interest, penalty, late fee, etc. With respect to them, what is the time of supply? The date when that additional consideration is received, that will be the time of supply. And with respect to this point, small advance, where any amount that is paid in excess of the invoice value, but the amount is less than 1,000 rupees. In that case, there is no need to issue a separate invoice for that. Present bill cycle invoice date, next bill cycle invoice date, depending upon the supplier intention, it can be done. Let's take the example of Airtel. Let us assume that I am using Airtel postpaid mobile. My monthly bill is some 1600. But due to some reasons, I am unable to pay online. That's why I just went to the Airtel customer care center. I gave him some 2000 rupees. That particular customer care executive told me that, sir, this I will do one thing, sir. I will adjust this 400. I will take the total 2000, sir. I don't have the change. I will do one thing. This 400 will be adjusted in the next month bill, sir. Is it okay with you? I said yes. No issue with respect to that one now. Here, what is the invoice value? 1600. What is the amount that was paid? 2000. How much excess I paid? 400. For that 400, there is no need to issue any supplementary invoice. Present bill cycle invoice date or the next bill cycle invoice date, depending upon the supplier, that is Airtel intention, they can take into consideration. That is the point we need to remember with respect to small amount of advance. Okay. So, this is the topic with respect to section 12, time of supply, as well as section 13, time of supply. Now, we need to proceed to value of supply. Okay, ma? After the completion of time of supply, now we need to see value of supply. Ma? We need to see value of supply. So, value of supply here, section 15 deals with value of supply. Ma? So, the question is here, what is the need of computing this value of supply? In order to know how much tax you need to pay, that means the tax payable will be calculated. Tax payable is equal to value of the supply into rate of tax. Value of supply into rate of tax. So, the rate of tax can be found out by using time of supply. Now, we need to find out this value of supply. For that, section 15 is there. In that section 15, there are 5 subsections, 15.1, 15.2, 15.3, 15.4 and 15.5. But whereas in our syllabus, CA Inter, only 15.1, 15.2 and 15.3 are there. So, this is 15 subsection 1. As per 15 subsection 1, taxable value is equal to transaction value if 2 conditions are satisfied. First one, price is the sole consideration. Second one, parties are not related. If at all these 2 conditions are satisfied, then taxable value is equal to transaction value. As per 15 subsection 1, taxable value is equal to transaction value if at all 2 conditions are satisfied. What are the 2 conditions that are required to be satisfied? First one, price is the sole consideration. Second one, parties are not related. Sir, what is meant by this price is the sole consideration? Whatever the consideration that is moving from recipient to the supplier, it should be in monetary form. If at all it is there in non-monetary form, in those cases, 15.1 will not be applicable. So, in order to apply 15 subsection 1, price should be the sole consideration. Second one, parties should not be related. When the parties will be treated as related parties, already we discussed at this point in supply chapter. Common directors, partners, employer and employee, more than or equal to 25% of voting power, holding and subsidiary, third party controlling these two controlling a third party, same family members, sole selling agent. If any of these relations are attracted, then 15.1 will not be applicable. Instead of that, 15.4 will come into C valuation rules. Okay. So, in order to apply 15 subsection 1, 2 conditions are satisfied. First one is price is the sole consideration. Second one is Parties should not be related. If these two conditions are satisfied, taxable value is equal to transaction value. Sir, what is meant by the word transaction value? Transaction value means sale price plus 15 items are needed to be added to that, and 15 items are needed to be deducted. What is the amount we will get? It is known as transaction value, and GST is needed to be paid on transaction value. What is meant by the word transaction value, ma? Sale price plus 15 adjustments are needed to be added to that, and 15 items are needed to be deducted. What is the amount we will get? It is known as transaction value. On the transaction value, we are liable to pay the GST. So initially we need to know what are the inclusions as per 15.2. These are the inclusions in the value of supply as per 15 subsection 2. The first point is duties, taxes, cess or any fee charges separately other than those collected under GST Act. Simply, any taxes other than GST, if at all it is charged separately, is includable in the taxable value. Sir, any example? Let's take the example that has given a property, house property on rent to Masterminds Management for 50 lakhs per annum, 50, and asked them that along with that 50 lakhs, please pay municipal taxes also, which are of some 5 lakhs. In that case, what is the total consideration I received? What is the total consideration I received from Masterminds Management there? Is it 50 or 55? 55. 50 lakhs in the form of rent and 5 lakhs is charged separately from the recipient. Therefore, that 5 lakhs is also needed to be includable in the taxable value. Okay. So, any taxes other than GST that is paid by the recipient are charged to the recipient separately. All those amounts are needed to be added to the taxable value. But TCS will not be added, because TCS, that means tax collected at source, is the interim levy. It is not in the character of the tax, therefore the TCS amount will not be added to that. That is the first one. So what is the first inclusion, ma? Any taxes other than GST is includable. Any taxes other than GST is includable. Second one, any amount paid to a third party on behalf of the supplier by the recipient, such amount is not included in the price previously. That means if at all that amount is not included in the price previously, now it will be added to the transaction value. In simple sense, supplier obligation was met by the recipient. What is the second point, ma? Supplier obligation was met by the recipient. So what is meant by this? Let's say X supplied some goods to Y. For that, the contract price is some 100 rupees. In that, Y paid to X 80 rupees and paid to Z 20 rupees on behalf of Mr. X. Here, what is the total consideration that is paid by Mr. Y? Is it 80 rupees or is it 100 rupees? Answer is 100 rupees. The 20 rupees is paid by Mr. Y to Mr. Z on behalf of Mr. X. That means supplier obligation was met by the recipient. Whenever supplier obligation was met by the recipient, that amount is also needed to be includable in the taxable value. That amount is also needed to be includable in the taxable value. That is the second one. Okay. So here's when supplier obligation was met by the recipient, definitely that amount is also needed to be includable in the taxable value. Third one, incidental expenses up to the point of delivery of the goods or for the supply of service if charged to the recipient. That means simply incidental expenses up to the stage of delivery includable. Incidental expenses up to the stage of delivery includable. Like commission, packing charges. Packing charges can be primary, secondary or special. All the three packing charges are includable. Inspection or certification charges, installation charges, weighment charges, loading charges, freight, insurance. Okay. But whereas all these amounts are includable, whatever the expenditure the seller incurs up to the stage of delivery, all those amounts are needed to be added to the taxable value. Sir, that means, but whereas with respect to freight and insurance, that included only if at all the supplier incurs that expenditure as a contract of sale. If the contract is ex-factory basis, in that case, it is the obligation of the buyer to arrange the transport and insurance. In those cases, where the buyer pays the freight and insurance, that amount will not be added to the taxable value. The seller pays that amount, then only that is includable in the taxable value. Next, fourth one, late fee, interest, penalty for delayed payment of consideration. Simply, we will call them as contractual penalties. So, for the breach of contract or for the late payment, whatever the late fee, interest, penalty for delayed payment you will pay, all those amounts are also needed to be includable in the taxable value. But some extra caution you should take care is here. Whatever the contractual penalty you receive, law assumes that generally inclusive of tax. If at all it is inclusive of tax, in that case, how to bifurcate that? What is the formula for backward computation? The formula for backward computation will be taxable value is equal to amount received into 100 by 100 plus tax rate. Let us assume that the tax rate is some 18%. In that case, how to segregate the value there? Amount received into 100 by 118. Then we will get the taxable value. This is the fourth one. And fifth one, already you know that subsidy. Subsidy from government, excludable. Subsidy from any person other than government, includable. These are the 5 inclusions as per 15 subsection 2. What are the 5 points, ma'am? First one, any taxes other than GST. Second one, supplier obligation was met by the recipient. Third one, incidental expenses up to the stage of delivery. Fourth one, contractual penalties. Fifth one, subsidy from any person other than government. These are the 5 points we need to remember. These are the inclusions in the taxable value. Now we need to see exclusions from the transaction value. 15 subsection 3 deals with exclusions. The one and only exclusion as per 15 subsection 3 is discount. The one and only exclusion as per 15 subsection 3 is discount. Whereas with respect to discount, it can be divided into 2 types. One is before or at the time of supply discount. Second one is post supply discount. Before or at the time of supply. Before or at the time of supply. That means pre-supply discounts majorly. In order to allow that particular discount, the one and only condition is that particular discount is mentioned in the invoice. If that particular discount is mentioned in the invoice, it is allowed as a deduction. Which type of discount, ma? Before or at the time of supply, whatever the discounts you will give, those discounts are needed to be specified in the invoice. If those discounts are specified in the invoice, in those cases, definitely what is the position, ma? It is allowed as discount. It is allowed as deduction. But another type of discount is also there, that is called as post-supply discount. With respect to post-supply discounts, in order to allow that particular discount, 3 conditions are required to be satisfied. What are the three conditions that are required to be satisfied? First one, there should be agreement. Second one, it should be linked to the invoice. Third one, proportionate IDC is needed to be reversed. If all the three conditions are satisfied, then that discount value will be excluded from the taxable value. Otherwise, it will not be deducted from the taxable value. So, agreement okay, linking with the invoice is also okay, but what is this proportionate IDC is needed to be reversed? Generally, the post-supply discount, the example will be cash discount. Let us assume that the plant and machinery value is 1 lakh, rate of GST is 18%. Okay, if you pay the amount within 15 days, 5% cash discount is allowed. The transaction was made on January 1st. Okay, but the date when the invoice is generated, that is on January 1st, we don't know whether the recipient will pay within 15 days or not. In that case, for how much amount we will generate the invoice? For 1 lakh rupees or after deduction of that 5,000 rupees discount 95? Initially, we will generate the invoice for 1 lakh. On that, what is the rate of GST? 18%. Now, what is the ITC based on the document the recipient can claim? 18,000. So, let us assume that on a particular date when the invoice is generated, if the recipient takes the ITC, what is the ITC he can take? 18,000. Okay, on the 14th day, he paid the amount. That means within 15 days he paid the amount. Therefore, 5,000 rupees cash discount is allowed. Now, what is that particular plant and machinery value? 95,000. On the 95,000, 18% means 17,100. What is the ITC you need to take? 17,100. How much ITC that was taken previously? 18,000. How much excess that was claimed? 900. In order to get the discount of 5,000 rupees, this 900 is needed to be reversed. I am repeating the example once again. The plant and machinery value is 1 lakh. Rate of GST is 18%. If you pay the amount within 15 days, 5% cash discount is allowed. But the date when the invoice is generated, it will be generated for full value. Based on that, 1 lakh rupees is the invoice value. On that, the rate of GST will be 18%. That is 18,000. So, based on the document, what is the ITC can claim? 18,000. But later on, if he pays the amount within 15 days, 5% cash discount is allowed. Now, what is the plant and machinery value? 95,000. On the 95,000, 18% means how much ITC you need to claim? 17,100. But how much ITC you claimed previously? 18,000. How much excess you claimed? 900. In order to reverse, in order to get the discount of that 5,000 rupees, you need to reverse excess ITC that was claimed, that is 900 rupees. Okay. Then only you will get the discount. That is the point. And subsidy, already we know that. Subsidy received. If at all subsidy was credited to the account of recipient, whether the subsidy is from government or non-government, both cases it is includable. If the subsidy is credited to the account of recipient, whether the subsidy is given by government or non-government, in both cases it is includable. But if the subsidy is credited to the account of the supplier, in that case, if the subsidy is from government, it is excluded. If subsidy is from other than government, it is includable. That is the point you remember. And the next point will be circulars. In that only 2 points are important. Staggered discount. Staggered discount means nothing but where the rate of discount increases with increase in volume. Let's say if you purchases up to 5,000, 10% discount. If you purchases more than 5,000 up to some 20,000, extra 20% discount is there for you. These type of discounts are known as staggered discounts. Though discounts are allowed or not allowed, ma? Yes, definitely those type of discounts are allowed. Next one is secondary discounts. What is meant by this secondary discount? The discount that is not known at the time of making the supply are known as secondary discounts. Those type of discounts are not allowed. The discounts that are not known at the time of making the supply are known as secondary discounts. These type of secondary discounts are not allowed. That is the point we need to remember. Okay, ma'am. So within this, only the point you need to keep focus is subsidy. With respect to subsidy, the problem will be like this. Let's say, for example, the problem is like this. Let us assume that the problem says that subsidy amount was already adjusted. It will use the word subsidy amount was already adjusted. Let us take that government subsidy of some 10,000 is given in the problem. Non-government subsidy of some 25,000 is given in the problem. Okay. And as the adjustment, it was given that subsidy was already adjusted in the price. In this case, what is the treatment? Already adjusted means these two subsidies are already deducted from the sale price. In that case, government subsidy to be deducted or not to be deducted? To be deducted. It was already deducted. In that case, is there any adjustment? No adjustment is needed with respect to government subsidy. And what about the non-government subsidy? It should be deducted or not to be deducted? Not to be deducted. But it was deducted. Now what we should do? We should add back that. That's why now this 25,000 is needed to be added to the taxable value. Subsidy already adjusted means subsidy amount was already deducted. If subsidy amount was already deducted, that means both government subsidy as well as non-government subsidy, both are deducted. In that case, government subsidy is needed to be deducted and it was done. That's why no adjustment is needed. But whereas with respect to non-government subsidy, it should not be deducted. But it was deducted. Therefore, we need to add it back. Okay, this is the point. Another way it can be asked, subsidy was not adjusted in the price. In the exam, it was given like this. Subsidy was not adjusted in the price. One is government subsidy 10,000. Second one is non-government subsidy 25,000. In that case, what you should do? Subsidy was not reflected. Now government subsidy need to be excluded. Therefore, now this 10,000 is needed to be deducted from the transaction value. What about the non-government subsidy? Needed to be deducted or not needed to be deducted? Not needed to be deducted. That's why it was already there now. That's why no adjustment is needed. These 2 points the students generally will confuse. Subsidy not adjusted in the price. Then if at all it is a government subsidy, we need to deduct it. Non-government subsidy, there is no need to deduct. No adjustment is needed. Sir, if the problem says nothing, sir, the problem remains the silent, sir. In that case, what is the assumption we will take? What the assumption we can make? The assumption we can make is subsidy already adjusted in the price. If nothing was specified in the problem, then we can assume that, and it is the best thing to assume that the subsidy was already adjusted in the price. This is the one and only adjustment the students generally keep confusing. That's why I just took a little bit of time of you to explain that particular adjustment. So this is a overview of the chapter number 5, time and value of supply. There ends chapter number 5, time and value of supply. Okay, my dear students, now we are going to discuss about input tax credit. The question is here, what is meant by the word input tax credit? So, input tax credit means why generally input tax credit will be given? Input tax credit will be given to avoid the cascading effect. That means the tax on tax. Okay. So, generally, whatever the tax you paid on purchases, whatever the tax you paid on purchases, whatever the tax you paid on purchases, it can be used to set off the tax that is needed to be paid on sales. Let's say on the purchases you just paid some 10 rupees as tax, but on the sales you need to pay some 15 rupees. But while paying that 15 rupees, already the tax paid that was 10 rupees will be deducted and remaining 5 rupees will be paid in cash. This concept will be technically known as input tax credit. Okay. And the sections that deals with input tax credit is here. 3 sections, section 16, 17 and 18. Initially, we need to start with section 16. As per section 16, the first point is here. What is meant by the word input tax credit? The tax that is paid on inward supply. Simply in our simple terms, it is known as purchases. Sir, which type of tax can be taken as ITC? The tax paid under FCA or the tax paid under RCA? Tax paid under FCA or the tax paid under RCA? Which one can be taken as ITC? Both. The tax paid under forward charge mechanism or the tax paid under reverse charge mechanism. Both amounts can be claimed as ITC. Sir, which type of GST is eligible for ITC? All the four types of GSTs are eligible for ITC, where it may be CGST, SGST, UTGST or IGST. CGST, SGST, UTGST or IGST. Okay. Any type of GST is eligible for ITC except basic customs duty. Okay. So the next question is here. On the goods ITC is allowed or on the services ITC is allowed? On both goods and services ITC is allowed. On both goods and services ITC is allowed. Okay. On both goods and services, ITC is allowed. Here goods means inputs and capital goods and service means input service. That means ITC is allowed on inputs, capital goods and input services. The question is here, what is meant by the word capital goods? Simply, the items that are reflected in the balance sheet or the items that are capitalized in the books of accounts are known as capital goods. Simply, the items that are reflected in the balance sheet are known as capital goods. Second one, what is meant by the word inputs? Other than capital goods, in simple terms, the items that are reflected in or debited in P&L account, those items are treated as inputs. The items that are reflected in the balance sheet or capital goods, the items that are reflected in P&L account are known as inputs. And what is meant by the word input service? The service which is used for providing the outward supply is known as input service. The service which is used for providing the outward supply is known as input service. On all the three, definitely you can claim the ITC, whether it is input or whether it is capital good or whether it is input service, definitely we can claim the ITC. Next point is here. Sir, that means whatever the inputs, whatever the capital goods, whatever the input services we receive, definitely on every input, every capital good or every input service, is it possible to claim the ITC? Answer is no. If those items are purchased for personal use, they are not eligible for ITC. Okay. If those items are purchased for personal purpose, in those cases, ITC is not allowed. This is not eligible. If at all they are purchased for business purpose, then we need to check for which type of supply they are going to be used. If at all they are going to be used for taxable supplies, ITC is allowed. If at all they are used for exempted supplies, ITC not allowed. Let's say, for example, Masterminds has purchased 10 ACs in the name of invoices in the name of Masterminds. But in those 10 ACs, 7 ACs are used for business purpose and 3 ACs are used for their residential purpose. In that case, on how many number of ACs you can claim the ITC? For personal purpose, 3 ACs are used, ITC is not allowed. And whereas with respect to business purpose, 7 ACs are used, definitely they are eligible for ITC. But in those 7 ACs, let us assume that 4 ACs are used for college purpose and 3 ACs are used for school. Masterminds is also there in school. Let us assume like that. In that case, definitely what is the position? Even though 7 ACs are used for business purpose, but 4 ACs which are used for college are used for taxable supply. Therefore, with respect to 4 ACs, definitely you can claim the ITC. And the remaining 3 ACs, which are used for exempted supplies, ITC is not allowed because schooling is exempt from GST. So, you need to check those inputs, capital goods and input services. If at all they are used for exclusively for personal use, no ITC is allowed. If at all they are used for business purpose, then we need to check whether they are taxable ones or exempted ones they are used for. If at all they are used for exempted supply, ITC is not allowed. If at all they are used for taxable supplies, ITC is allowed. Okay. The next point is, sir, in order to claim the ITC on those inputs, capital goods or input services, what are the conditions that are required to be satisfied? In that, the first condition will be documentary evidence. In order to claim the ITC, the recipient should have the documentary evidence. In order to claim the ITC, recipient should have the documentary evidence. Then only the recipient can claim the ITC. Sir, what is meant by the word documentary evidence here? Documentary evidence shall be there. What are the documentary evidences that shall be there in order to claim the ITC? Tax invoice, debit note, bill of entry, reverse charge invoice, revised tax invoice, ISD invoice. Any of these documents can be submitted as evidence in order to claim the ITC. Okay, sir, we are having the documentary evidence. That one is sufficient to claim the ITC? Answer is no. Answer is no. Those goods or services shall be received. Then only we can claim the ITC. Then only we can claim the ITC. Okay, ma'am. The inward supplies of the goods or services should have been received. So you can claim the ITC only when the goods or services are received. When the goods or services are received, then only we can claim the ITC. Sir, if at all the goods are received in installments, or if the goods are received in lots, in those cases, when we can claim the ITC. That means on the receipt of first installment, or on the receipt of last installment, on a proportionate basis, in which way we can claim the ITC. If the goods are received in installment, you can claim the ITC only upon the receipt of last installment. You can claim the ITC only upon the receipt of last installment. Then only you can claim the ITC. Okay. Sir, if at all it is a bill to ship to model, in that case, who is able to claim the ITC? Sir, what is meant by the word bill to ship to model? Bill is given in the name of one person, but the goods are delivered to some other person. Bill is given in the name of one person, but the goods are delivered to some other person. This type of model is known as bill to ship to model. Let's say, for example, A has given an order to deliver the goods to Mr. C. In this case, invoice will be in the name of Mr. A, but the goods are delivered to Mr. C. The question arises here, who is eligible to claim the ITC here, Mr. A or Mr. C? Answer is Mr. A. When the goods are delivered to any other person on the direction of a recipient, in that case, the recipient is deemed to have been received those goods. That means upon whose direction the goods are delivered to some other party. Okay, then upon whose directions that particular was given, it is a bill to ship to model. In that case, who is able to claim the ITC? Sir, what is meant by the word bill to ship to model? Bill is given in the name of one person, but the goods are delivered to some other person. Bill is given in the name of one person, but the goods are delivered to some other person. This type of model is known as bill to ship to model. Let's say, for example, A has given an order to deliver the goods to Mr. C. In this case, invoice will be in the name of Mr. A, but the goods are delivered to Mr. C. The question arises here, who is eligible to claim the ITC here, Mr. A or Mr. C? Answer is Mr. A. When the goods are delivered to any other person on the direction of a recipient, in that case, the recipient is deemed to have been received those goods. That means upon whose direction the goods are delivered to some other party. Okay, then upon whose directions that particular was given. So, upon whose direction the goods are actually delivered, that person is deemed to have been received the goods. In our example, Mr. A can claim the ITC. Same point will be applicable to services also. If the services are delivered to any person upon the instruction of the recipient, then it is deemed that the recipient has received those services. That is the second condition. And what is the third one? Tax on such supplies has been paid by the supplier to the government. That means recipient should pay to the supplier. In return, supplier should pay the amount to the government. Then only the recipient can claim the ITC. Okay. then only the recipient can claim the ITC. Recipient should pay the GST to the supplier. In return, supplier should make the payment to the government. If all these points are satisfied, then only the recipient can claim the ITC. Last but not the least, the recipient should have been filed GSTR 3 BMA. So these are the major 4 conditions that are required to be satisfied in order to claim the ITC. First condition, documentary evidence shall be there. Second condition, goods or services shall be received. Third one, supplier has to make the payment to the government. Fourth one, recipient has filed GSTR 3B. If all these 4 conditions are satisfied, then only the recipient is able to claim the ITC. That is the point we need to remember. Okay. Sir, we are having the documentary evidence with us. We received those goods also, but we did not make payment to the seller. Is it possible to claim the ITC then? Repeating the question once again. We are having the documentary evidence with us. We are having the documentary evidence with us. Second one, we received those goods also. We received those goods also. But still, we did not make payment to the seller. Is it possible to claim the ITC? Yes, definitely we can claim the ITC. But there is a condition with respect to that. From the date of invoice, within 180 days, we should make the payment to the seller or supplier. If at all we did not make payment within 180 days from the date of invoice, in that case, whatever the ITC that was previously claimed, it shall be reversed along with interest at the rate of 18% per annum. That is the point we need to remember. What is the first one, ma? If at all you are having the documentary evidence and goods are received, even though you did not make any payment to the seller, but still you can claim the ITC. But from the date of invoice, within 180 days, you need to make the payment to the supplier. If at all you fail to make the payment to the supplier within that stipulated time period, whatever the ITC that was previously claimed by the recipient, it shall be reversed along with interest at the rate of 18% per annum. But there are 3 exceptions to the above rule. That means with respect to this 180 days rule, this rule is not applicable in those 3 circumstances. First one, supplies on which tax is payable on RCM. Second one, supplies without consideration. Third one, value of service incurred by the recipient on behalf of the supplier. In these 3 cases, the 180 days rule will not be applicable. What is the first case, ma? RCM purchases. With respect to RCM purchases, recipient need to make the payment to the government. Na? That's why whenever the recipient makes payments to the government, then only recipient is able to claim the ITC. Okay. Then only recipient is able to claim the ITC. Second one. So in those cases, if at all the recipient pays the amount to the government, then only recipient is able to claim the ITC. Then what is the logic of applying this 180 days rule to that point? That's why in case of RCM purchases, this 180 days rule will not be applicable. Second one, supplies without consideration means deemed supplies. So with respect to deemed supplies, there is no need to pay any consideration at all. That's why it is called as deemed supply. If at all there is no consideration was involved in the transaction, then where comes this particular payment should be made within 180 days? in that case also there is no logic in applying this 180 days rule. That's why in relation to deemed supplies, the concept of, in relation to deemed supplies, the concept of 180 days will not be applicable. Next one. Supplier obligation was met by the recipient. Whenever there is an obligation on the part of the supplier, if at all it was met by the recipient, in those cases, if at all it was met by the recipient, in those cases, already the amount was paid by the recipient to some third party on behalf of the supplier. Again, there is no need to make payment second time by the recipient there. That's why in that case also, this 180 days rule will not be applicable. So what is the general rule? This is important point, this fifth point. That's why I'm repeating you once again. If at all you are having the documentary evidence and those goods or services are received, even though the payment is not made to the supplier, but still we can claim the ITC. But from the date of invoice, we should make the payment within 180 days. Within 180 days. If at all we did not make payment within 180 days, whatever the ITC that was previously claimed by us, whatever the ITC that was previously claimed by us, it should be reversed along with the interest at the rate of 18% per annum. But this 180 days rule is not applicable in three circumstances. First one, RCM purchases. Second one, deemed supplies. Third one, supplier obligation was met by the recipient. In these three cases, this 180 days rule is not applicable. There is no need to reverse the ITC. That is the point we need to remember. Okay. Sir, we did not make the payment within 180 days. That's why whatever the ITC that was previously claimed, it was reversed. Previously claimed, what is the position, ma'am? It was reversed. But later on, we made the payment to the supplier. In that case, is it possible to reclaim the ITC? Is it possible to re-avail the ITC? Yes. Whatever the ITC reversed in the above circumstances, it can be reclaimed once the payment is made to the supplier. Sir, if at all the proportionate payment is done, ITC can also be taken proportionately. That means instead of making the total payment, you made the partial payment. Up to which extent you made the payment, up to that extent, definitely you can reavail the ITC. That is a point you need to remember. The next point is, sometimes what happens is, even though you are liable to pay the GST, but still you did not make the payment. But still you did not make the payment of that particular GST. Later on, department issued the show cause notice to you as per section 74, being a fraudulent intention is there, and based on the demand order that is issued there, now there is a need arises to pay the GST. The question is here, whatever the GST we pays under section 74, that means fraudulent cases, is it possible to claim the ITC? Answer is no. No ITC is available of any tax is paid as the result of any demand order on account of any fraud, willful misstatement or suppression of fact. Simply in fraudulent cases, if the department issues the demand order, whatever the tax you pays, it is not eligible for ITC. That is the point we need to remember. Okay. The next point is, sir, we purchased a capital asset. Let's say, for example, when you purchase a capital good, generally you pay the GST. The question is here, the GST that is paid on the capital good can be claimed as ITC or it can be claimed as depreciation. Any one of the option can be chosen by the registered person, but no double benefit is allowed. But no double benefit is allowed. Either you can claim the depreciation on the GST component or you can claim it as ITC. But you cannot get the benefit of both these options. Okay. Let's say, for example, cost of the asset is 100 rupees. 10 rupees was paid as input tax. So what is the total cost? 100 rupees plus 10, total 110. If at all you are claiming the depreciation on the total 110 rupees, that 10 rupees is not allowed as ITC. If at all you are claiming depreciation only on the 100 rupees, if at all you are claiming depreciation only on the 100 rupees, in those cases, that 10 rupees can be claimed as ITC. In simple scenario, if at all you are claiming the depreciation exclusive of GST, then ITC is allowed. If at all you are claiming the depreciation inclusive of GST, in that case, no ITC is allowed. Okay. The next point is, this is 16 subsection 3 generally. Now, this is 16 subsection 4. What is the maximum time limit to claim the ITC? What is the maximum time limit to claim the ITC? So, what is the maximum time limit to claim the ITC, ma'am? What is the last date for claiming the ITC, ma'am? Next financial year, November 30th, or date of annual return, whichever is earlier. That is the point we need to remember. Okay. Let's say, what is the present running financial year, ma'am? 22, 23, or 23, 24? Oh, sorry. We are there in September 2023 now. Therefore, 23, 24 financially we are there. So, with respect to 23, 24 financial year, what is the cutoff date for claiming the ITC? Next financial year, November 30th. That means 30th November 2024, or date of annual return, whichever is earlier. This is the cutoff date for claiming the ITC with respect to the financial year 23-24. So, with respect to the financial year 23-24, what is the cutoff date to claim the ITC, ma? November 30th, 2024, or date of annual return, whichever is earlier, that is the cutoff date to claim the ITC. Okay, ma. And along with the above conditions which are discussed in 16 subsection 2, this is 16 subsection 4, ma. So, we just discussed 4 conditions, na? Here, if you observe. These 4 conditions are prescribed in 16 subsection 2. Okay. If at all these 4 conditions are satisfied, then only you can claim the ITC. First one, documentary evidence should be there. Goods or services shall be received. Supplier has to make the payment to the government. Recipient has to file the GSTR 3B. These are the 4 conditions that are required to be satisfied in order to claim the ITC. Okay. And this is another condition that is as per rule number 36.4. As per rule number 36.4, this is also one of the additional condition that is needed to be satisfied in order to claim the ITC. In order to claim the ITC. So, what is this condition? ITC can be availed by the registered person only of the invoices or debit notes which are furnished by the supplier in his GSTR 1. What is this point? Generally, supplier will file GSTR1 month. Generally, GSTR1 will be filed by the supplier on a monthly basis on next month 11th. So whatever the supplies he will make in this particular month, those details will be uploaded by the supplier in the form of a statement, that is GSTR1, on the GST common portal. When the supplier files this GSTR1, the data will be auto-populated in recipient account in GSTR2A as well as GSTR2B. If the data is auto-populated in GSTR2B, then only the recipient is eligible to claim the ITC. That is what rule number 36.4 is saying. That means, let us assume that total 10 supplies are made by the supplier in that particular month to a recipient. But in those 10 supplies, only 8 supplies details are uploaded by the supplier in his GSTR1. So, let us assume that each invoice containing 1000 rupees as input tax. In that case, how many invoices are uploaded, ma'am? 8 invoices are uploaded. When 8 invoices are uploaded, 8 into 1000, it will be 8000 will be reflected in GSTR 2A and 2B of the recipient. Thereby, that 8000 is eligible for full ITC. That 8000 is eligible for full ITC. Okay. If at all, those details are not furnished in GSTR1 in our example 2 supplies, with respect to them, ITC is not allowed. That means in the total input tax paid, total 10,000, only 8 supplies are reported in GSTR1. With respect to those reported supplies in GSTR1, that is 8,000 can be claimed as ITC. But whereas the supplies that are not reported in GSTR1, in our example 2 supplies, in relation to them, the 2000 rupees is not allowed as ITC. The 2000 is not allowed as ITC. Okay. This is a point you need to remember, ma'am. Sir, with respect to the supplies, in our example, 2 supplies are not uploaded by the supplier in GSTR1. That's why with respect to those 2 supplies, ITC was disallowed. Later on, if the supplier uploads those 2 invoices in the next month or subsequent months, is it possible to claim the ITC then? Yes. ITC not taken above can be taken at a future date once the supplier upload those details in GSTR1. That is the point we need to remember. Okay. This is all about section 16 related topics. The next point is from the examination point of view, important one is rule 86B. What does rule 86B deals with? Generally, let us assume that the output tax payable is 100 rupees. We are having the ITC of 105 rupees. The output tax payable is 100 rupees and ITC we are having is 105 rupees. In that case, how much amount is needed to be paid in cash? In that case, how much amount is needed to be paid in cash? The amount that is needed to be paid in cash is 0. Because output tax payable is 100, we are having the surplus ITC with it. But the cases where rule number 86B is applicable, in those cases, the recipient cannot utilize 100% ITC. He can utilize ITC only up to the extent of 99% of the output tax liability. Rest of the 1% is needed to be paid in cash. That is the point we need to remember. Okay. What is the point here, ma'am? To whom this rule number 86B is applicable? Those persons can utilize the ITC to a maximum of 99% of the output tax liability. Remaining 1% is needed to be paid in cash. Remaining 1% is needed to be paid in cash. That is the point we need to remember. Okay. So to whom this rule number 86B is applicable, ma? The person to whom the taxable supplies is more than 50 lakhs in a month. In those cases, the concept of this rule 86B is applicable. Wait a minute. Okay, to whom this particular rule number 86B is applicable, ma? Whose taxable supplies in a particular month exceeds 50 lakhs. To those people, only rule number 86B is applicable. So, with respect to whom this particular rule number 86B is applicable, they can utilize only 99% of their output tax liability. 99% of their output tax liability. And remaining 1% is needed to be paid in cash. But whom this the taxable supplies value is less than or equal to 50 lakhs, they can utilize 100% of their output tax liability, or they can discharge 100% of their output tax liability by using the ITC. Okay. But keep it in mind, while computing the taxable supplies, zero rated supplies as well as exempted supplies shall be excluded. Okay. And in the same way, there are some exceptions to the above rule. What is meant by the word exception here? Even though your taxable supplies value is more than 50 lakhs in a particular month, but still rule number 86B is not applicable. The cases are, first one, in last 2 financial years, whether the registered person or key managerial persons of the registered person has made the payment of income tax more than 1 lakh, in those cases, rule number 86B will not be applicable. In the same way, in the preceding financial year, the recipient has received a refund of IDC of more than 1 lakh, then also for them, in the current year, what is not applicable? Rule 86B is not applicable. In the same way, third one is the cumulative. What is the cumulative total output tax liability? In that, already we paid in excess of 1% in cash. In those cases also, what is the position? In those cases also, what is the position? Rule number 86B will not be applicable. Let's say, for example, we are, let's say, in the month of September, we are there in, let us assume that, in that case, from April to August, let us assume that the total tax liability is 10 lakhs. In that, 1 lakh was paid in cash. So, what is the cumulative total tax liability till now? 10 lakhs. In the 10 lakhs, 1% means, I think, some 10,000. But already we paid 1 lakh. In excess of 1% of the total tax liability, we just paid in cash. In that case, what is the position? With respect to the current month, there is no need to apply. In the current month, there is no need to apply. What? There is no need to apply rule number 86B. That means whatever the cumulative output tax liability, in that already the cumulative tax paid in cash is more than 1%, then also rule number 86B is not applicable. In the same way, if the specified registered person is government department or PSUs or local authority or statutory bodies, in those cases also rule number 86B is not applicable, even though your taxable supplies value is more than, 50 lakhs in a particular month. Next one. Already we know this one. Next point is from the examination point of view, is this point. What is the general rule, ma? As per section 17, subsection 1, already we know the topic, but we don't know the section number there. With respect to that particular point, as per 17, subsection 1, if the goods or services are used for business purpose, then only is IDC allowed. If at all they are used for personal use, no IDC is allowed. This is 17.1, already we know. And 17.2, that means 17 subsection 2. In the business purpose also, if at all they are used for, taxable supplies, then only we can claim the IDC. If at all we used it for exempted supplies, then we cannot claim the ITC. This is 17.2. And now 17.4 is this point is 17 subsection 4 mark. This point is exclusively designed for banks, NBFCs, financial institutions. For them, you are having two options. Option 1, if at all you are able to segregate which ones are used for taxable supplies and which ones are used for exempted supplies, which ones are used for taxable supplies and which ones are used for exempted supplies. In those cases, happily you can follow 17 subsection 2. As per 17 subsection 2, proportionate IDC can be claimed. As per 17 subsection 2, proportionate IDC can be claimed. But if the banker is unable to segregate which ones are used for taxable supplies and which ones are used for exempted supplies, in those cases, what is the position, ma'am? Definitely in those cases, you can follow 17 subsection 4. As per 17 subsection 4, in the total available IDC, you can claim 50% as IDC, ma'am, and ignore the balance 50%. I'm repeating once again. With respect to banks, you are having the two options. Option 1, if at all the banker is able to segregate which ones are used for taxable ones and which ones are used for exempted ones, happily the banker can follow 17 subsection 2 and he can take proportionate IDC as per 17 subsection 2. If the banker is unable to segregate, there is another option for him which is specified under 17 subsection 4. In the total eligible IDC, you can claim 50% and the balance 50% you need to ignore. But how to compute this eligible IDC here? While computing the eligible IDC, non-business purpose IDCs, as well as blocked credits related IDC, those amounts are needed to be excluded. Simply, from the total input tax paid minus exclusively used for non-business purpose minus blocked credits. What is the amount we will get? It is known as eligible IDC. In that eligible IDC, you can claim the 50% and you need to ignore the balance 50%. Okay, that is the point you need to remember. Okay, ma? The next question is here. Sir, what is the difference between zero-rated supplies and exempted supplies? Zero-rated supplies are exports and deemed exports, ma. Zero-rated supplies covers exports and deemed exports. These exports and deemed exports are deemed to be taxable supplies. Therefore, even though there is no output tax payable, but still, in relation to zero-rated supplies, we can claim the ITC. But whereas, with respect to exempted supplies, you cannot claim the ITC. That is the difference between zero-rated supplies and nil-rated or exempted supplies. In case of exempted supplies or nil-rated supplies, there is no output tax payable. Therefore, you cannot claim the ITC. But whereas with respect to zero-rated supplies, even though there is no need to pay any output tax payable, but still, in relation to zero-rated supplies, we can claim the ITC. Okay, ma'am. Next point is, sir, what is the manner of utilizing the IDC here? That means you are having the IGST IDC. Then IGST IDC, first it shall be used for the payment of IGST output tax payable. After payment of IGST output tax, still any surplus IGST IDC was there, it can be used to pay CGST or SGST or UDGST in any ratio, in any sequence. Second one, CGST IDC. CGST IDC, first it will be used to pay CGST output tax. Still any surplus CGST IDC was there, it can be used to pay IGST, but it can't be used to pay SGST. In the same way, SGST IDC, first it will be used to pay SGST, but still any surplus SGST IDC was there, it can be used to pay IGST. Here also SGST IDC cannot be used to pay CGST. That means cross-sectional credit between CGST and SGST is not allowed. That is the point we need to remember with respect to manner of utilization of ITC. But keep it in mind, ITC of SGST shall be utilized for the payment of IGST only after ITC of CGST has been utilized fully. That means for the payment of IGST, order of priority will be for the payment of IGST output tax. For the payment of IGST output tax. First one. What is the first one, ma'am? For the payment of IGST output tax, the first priority will be IGST ITC. After IGST IDC was utilized 100%, then we should use the second priority goes to CGST IDC. If CGST IDC also fully exhausted, then only SGST IDC can be used to pay IGST. For the payment of IGST output tax, first one IGST IDC shall be 100% utilized. If at all it is not sufficient, then we should go by CGST IDC. With respect to CGST IDC, what is the point, ma'am? With respect to CGST IDC, if at all it is also 100% utilized, still anything is needed to be paid, then only SGST IDC or UDGST IDC can be used. In the same way, cross utilization is allowed between CGST and IGST, SGST or UDGST and IGST. But cross-sectional credit between CGST and SGST or SGST and UDGST or CGST and UDGST is not allowed. That means CGST can be used to pay IGST. In the same way, SGST or UDGST can be used to pay IGST. That's it. Apart from that, rest of the cases, cross-sectional credit is not allowed. That is the point we need to remember. Okay. So just now previously you said that in order to claim the IDC, documentary evidence shall be there now. So in the documentary evidence, what are the mandatory particulars that are required in order to claim the IDC? So these are the mandatory particulars or mandatory details that should be there in order to claim the IDC. What is the tax amount, description, total value, supplier GST number, recipient GST number, if at all it is the interstate supply, place of supply. All these details shall be there in the particular document in order to claim the ITC. This is the point. Okay, ma. The next condition is, sir, just now under section 17, you just tell us that as per section 17, subsection 1, if at all it is used for business purpose, then only IDC is allowed. As per 17, subsection 2, if at all it is used for taxable supplies, then only IDC is allowed. So there are any such cases where even though it is used for business purpose, even though it is used for taxable supplies, but still you cannot claim the ITC. Yes, there are such circumstances like that. Those circumstances are prescribed under 17 subsection 5, negative list of ITC or blocked credits. We will see what are they. So 17 subsection 5, what does it deals with? Blocked credits. That means even though it is used for business purpose, even though it is used for taxable supplies, but still we cannot claim the ITC. In that, the first one will be motor vehicles. With respect to motor vehicles, vessels and aircraft. If it all these motor vehicles, vessel and aircraft. Initially, I will start with motor vehicle. With respect to the motor vehicle or vessel or aircraft, if at all, these motor vehicles or vessels or aircrafts are used for transportation of the goods, 100% ITC is allowed. If the vessel, aircraft or motor vehicle is used for transportation of the goods, 100% ITC is allowed. If at all, those motor vehicles, vessels or aircrafts, initially we will start with motor vehicle. If at all that particular motor vehicle is used for transportation of persons, if that motor vehicle is used for transportation of persons, then we need to check with respect to the motor vehicle the seating capacity. If the seating capacity is more than 13, 100% ITC is allowed. If the seating capacity is less than or equal to 13, ITC is allowed. What is the point, ma? With respect to the motor vehicle, if at all that particular motor vehicle is designed to transport the goods, 100% ITC is allowed. If at all that particular motor vehicle is designed to carry the persons, we need to check the seating capacity, including the driver. If the seating capacity is more than 13, 100% ITC is allowed. If the seating capacity is less than or equal to 13, generally ITC is not allowed. Generally, ITC is not allowed except 3 cases. I am repeating you once again. We are talking about motor vehicle. With respect to motor vehicles, if the motor vehicle is designed to transport the goods, 100% ITC is allowed. If the motor vehicle is designed to carry the persons, we need to check the seating capacity. If the seating capacity is more than 13, 100% ITC is allowed. If the seating capacity is less than or equal to 13, then ITC is not allowed generally. But there are 3 exceptional cases with respect to that. What are the 3 exceptional cases there? First one, inward supply, outward supply is the same. Second one, whether they are in the business of transportation of passengers. Third one, driving school. In all these 3 cases, even though the motor vehicle seating capacity is less than or equal to 30, but still ITC is allowed. What are the 3 cases, ma? First one, inward supply, outward supply is the same. Second one, if at all they are in the business of transportation of passengers. Third one, driving school. In all these 3 cases, what is the position, ma? ITC is allowed or not allowed? Allowed. First one, inward supply, outward supply is the same. That means what is the position, ma'am? Let's say, for example, in that case, let's take the example of car showroom. With respect to a car showroom, what is the position, ma'am? What is inward supply? Car. What is outward supply? Car. In that case, even though the seating capacity is less than or equal to 13, IDC is allowed. Second one, if at all they are in the business of transportation of passengers, what does this mean? That means Ola, Uber, car travels with respect to them. What is the main business ma? They are in the business of transportation of passengers. In those cases, IDC is allowed or not allowed? Definitely IDC is allowed. Next one, driving school. Without actually importing the driving, without the motor vehicle, we can't actually train a particular person properly. It is essential one to give a training with respect to the motor vehicle. That's why in all these three cases, even though the seating capacity is less than or equal to 13, IDC is allowed. Okay, ma'am. Sir, what about the vessel and aircraft? For them also the point remains the same. With respect to the vessel or aircraft, which is designed for supplier of the goods, that is cargo flights and cargo ships, 100% IDC is allowed. With respect to the vessel or aircraft, which is designed to carry the persons, in three cases, IDC is allowed. First one, inward supply, outward supply is the same. Second one, whether their main business is itself transportation of passengers. Third one, with respect to the vessel, navigation school. With respect to the aircraft, flying school. In those cases, IDC is allowed. This is the first point. Okay. Now we are moving to the second point now. Sir, what about the services, repairs and maintenance, insurance in relation to a motor vehicle or a vessel or an aircraft? Whether they are allowed as IDC or not is the question mark. The answer is simple. If on that motor vehicle IDC is allowed, then on the services also IDC is allowed. If on the motor vehicle IDC is not allowed, then on the services also IDC not allowed. I am repeating you once again. If on that motor vehicle IDC is allowed, then the services in relation to those motor vehicles IDC is allowed. If on that motor vehicle IDC is not allowed, in those cases the repairs and maintenance also IDC not allowed. Take the example of Masterminds. Masterminds bus facility is there. Bus seating capacity is more than 13, less than 13, more than 13. Therefore, on the bus, IDC is allowed to Masterminds. When IDC is allowed on that particular bus, in that case, with respect to repairs and maintenance also on that bus, IDC is allowed. Same point will be applicable to vessel and aircraft also. If on those motor vehicles IDC is allowed, then IDC is allowed on their respective services also. This is the second point. And what is the third one, ma? Food and beverages, outdoor catering, beauty treatment, health services, cosmetic and plastic surgery. Generally, IDC is not allowed. Generally, IDC is not allowed. But further, there is exception, ma. Inward supply, outward supply is the same. Okay, in those cases, definitely IDC is allowed. What does this mean? Let's say, for example, Masterminds has taken you on a picnic. Further, it just given a catering service to some hotel. In that case, MM is able to claim the IDC? Answer is no. Because with respect to food and beverages, outdoor catering, in order to allow the IDC, inward supply, outward supply shall be the same. What is the outward supply of the Masterminds? Coaching service. What is inward supply? Food facility or outdoor catering. In that case, IDC is allowed or not allowed? IDC is not allowed. Let's say, for example, in Guntur, Hotel Sinduri is there. It is conducting a food festival. For that, it gathered different items from different places. In that case, IDC is allowed or not allowed? Definitely IDC is allowed. Second one, renting a motor vehicle, rent a cab, and life insurance and health insurance services. These are also majorly personal in nature. That's why IDC is not allowed. If at all inward supply, outward supply is the same, or if at all there is a statutory obligation, In those two cases, IDC is allowed. And with respect to club membership, health and fitness center, leave travel benefits to employees, they are also majorly personal in nature. That's why IDC is not allowed. But if at all it is a statutory obligation, then IDC is allowed. And next one is with respect to works contract. So in relation to works contract, what is the position? What is meant by the word works contract? Construction of the immovable property is known as works contract. That means the end result will be, in this case, works contract. That's why the end result is immovable property. Therefore, no IDC is allowed. But there are three exceptions to that. First one, if the immovable property is plant and machinery, even though the plant and machinery is immovable, but still we can claim the ITC. In the same way, further works contract service, that means inward supply, outward supply is the same. That means let's take the example. I just got a contract for construction of the road from Guntur to Vijayawada, which is of some 30 kilometers. In that road construction contract, I have given a subcontract to somebody else for some 10 kilometers. Now, what is my outward supply? Road construction. What is my inward supply? Road construction. My outward supply is works contract. My inward supply is also works contract. In those cases, IDC is allowed. Third one, the amount is not capitalized in the books of accounts, where the cost of those repairs or cost of that particular work is debited to P&L account. It is revenue nature. In those cases, definitely IDC is allowed. So generally with respect to works contract, IDC is not allowed. But if the end result is plant and machinery, even though the plant and machinery is immovable, but still we can claim the ITC. And in the same way, inward supply, outward supply is the same. That means subcontracting the works contract. In those cases also IDC is allowed. And works contract expenditure is not capitalized. That means it was debited to the P&L account. In those cases also definitely IDC is allowed. And apart from that, next cases like composition tax, the tax paid under composition, IDC is not allowed. And goods or services received by NRDP except imported goods. That means NRDP, whatever the things he imports, on them he can claim the ITC. But whatever the local purchases that are done by the NRDP, on them definitely cannot claim the ITC. In the same way, goods used for personal purpose, no ITC. Goods lost, stolen, destroyed, written off in the books of accounts, with respect to them also, we cannot claim the ITC. In the same way, tax paid under section 74, 129, 130, they are more of a penal nature. That's why with respect to them also, you cannot claim the ITC. So in all these cases, even though those things are used for business, as well as taxable purposes, but still we cannot claim the ITC. So this is the topic, the important points with respect to 17 subsection 5 blocked credits. Okay, ma'am. After completion of 17 subsection 5 blocked credits, the next section we need to see is section 18, ma'am. Whereas with respect to section 18, what does section 18 here deals with? What does section 18 here deals with? Section 18 here deals with special circumstances. In that we need to start with 18 subsection 1, entitlement of IDC in special circumstances. We will see it now. 18 subsection 1. As per 18 subsection 1, there are few circumstances. There are few circumstances where you can claim the ITC. There are few circumstances where you can claim the ITC based on some special circumstances. Okay, the point is here. First one, registered person switching from composition levy to regular scheme of payment of taxes, simply composition scheme to normal scheme. Second one, registered person exempts the supplies. Registered persons exempted supplies becoming taxable. That means exempted supply to taxable supply. What is the third case, ma? Person applying for registration within 30 days of becoming liable for registration. This is called normal registration. This is called normal registration. Next one is voluntary registration. Person obtaining voluntary registration. In these four cases, what is the position, ma? Definitely we can claim the ITC. So what are the four circumstances, ma? Composition scheme to normal scheme, exempted supply to taxable supply, normal registration, and voluntary registration. In these cases, what is the position, ma? In these cases, what is the position? Definitely we can claim the ITC. But whereas there is a difference between first two cases and rest of the two cases, ma? Whereas with respect to first two cases, composition scheme to normal scheme, previously we are there in composition scheme, therefore we are unable to get the ITC. Now we shifted to normal scheme, definitely we can claim the ITC here. In the same way, exempted supply to taxable supply. Previously it is exempted supply, but now it was converted to taxable supply. Therefore we are eligible to get the ITC there. Therefore we are eligible to get the ITC. Next one is normal registration. So what is meant by this normal registration? The date when you become liable for registration, you need to apply to the RC within 30 days. If you applied for RC, then what is the position, ma? Then also definitely we can claim the ITC. Okay. In the same way, and next one is person obtaining voluntary registration. That means even though he is not liable to get the registration, but still he applied for RC. In those cases also, definitely we can claim the ITC. But whereas with respect to first two cases, composition scheme to normal scheme or exempted supply to taxable supply, along with the inputs, even on capital goods also, definitely we can claim the ITC. Even on capital goods also, definitely we can claim the ITC. Okay. Sir, see this. Inputs held in stock, that is closing stock of raw materials, semi-finished goods, finished goods, along with them. Even on capital goods also, we can claim the ITC in first two cases. But whereas with respect to next two, normal registration and voluntary registration, only on the inputs we can claim the ITC. Inputs held in stock, inputs held in semi-finished goods, or inputs finished goods. With respect to them, definitely we can claim the ITC. That is the point we need to remember. Okay. Sir, on capital goods, in which way we can claim the ITC, sir? On capital goods, in which way we can claim the ITC? With respect to capital goods, in which way we can claim the ITC, ma'am? In this, there is a formula with respect to that. How much tax you paid from that per quarter or part thereof, 5% will be reduced and the remaining amount will be allowed as ITC. Say for example, the plant and machinery value is 1 lakh rupees. Rate of GST 18%. Let us assume that the plant and machinery is 1 lakh rupees, rate of GST 18%. After using it for composition scheme 1 year, 6 months, now we shifted to normal scheme. How much ITC we can claim now? That is the question mark. How much ITC we can claim now? How much ITC we can claim? So what is the input tax that was previously paid on 1 lakh? 18% means, 18,000 is the tax paid. From that, per quarter or part thereof, 5% is needed to be reduced. Per quarter or part thereof, 5% is needed to be reduced. 1 year, 6 months means, what is the time period here? 1 year, 6 months means, what is the time period? Okay, ma'am, in this particular 18,000, how much period it was used for composition scheme? For that period, per quarter or part thereof, 5% is needed to be reduced and the remaining amount is allowed as ITC. That is the point we need to remember now. Okay. So with respect to that, what is the point here, ma'am? 1 year, 6 months. 1 year means 4 quarters, 6 months means 2 quarters. In total, it will be 6 quarters. 6 into 5%, it will be 30%. Per quarter or the part thereof 5% is needed to be reduced in 6 into 5, 30%. 30% means in 18,000, 5,400. After reducing it, remaining 12,600 is allowed as ITC. Remaining 12,600 is allowed as ITC. Okay. So this is the way how it will be computed. Okay. So the next point is, sir, on which date this particular closing stock of raw materials, semi-finished goods or finished goods shall be taken into consideration? The point is here, on the day immediately preceding the day on which it becomes liable to pay under regular tax. That means the date when this particular composition scheme converted to normal scheme, on the preceding day, whatever the closing stock of raw materials, semi-finished goods, finished goods were there, in that particular proportion, we need to claim the ITC. Same point will be applicable here also. The date when the exempted supply becomes a taxable supply, on the preceding day, whatever the closing stock of raw materials, semi-finished goods, finished goods that were there, in that particular proportion, definitely we can claim the ITC. Okay. Same, the date when the RC was granted to you. Whether it is a normal registration or a voluntary registration, in both cases, definitely ITC is allowed. Okay. Sir, but for claiming the ITC, there are certain conditions that are required to be satisfied. What are the conditions that are required to be satisfied here? What are the conditions that are required to be satisfied here? The conditions that are required to be satisfied here will be, you need to file a declaration in form number ITC, I think 02, and the time limit to file the declaration will be 30 days from the date of becoming eligible for ITC. When you become eligible for ITC, okay. So you need to file a declaration with respect to that. So within 30 days of that particular becoming eligible for ITC. If at all ITC you are claiming is more than 2 lakhs, it should be certified by a CRA CME, where the aggregate claim of CGST, SGST or IGST is more than 2 lakhs. The question is here, sir, if at all whatever the closing stock that was available on that particular day, ITC is allowed, definitely the people will try to show more closing stock now. Yes. In order to have a check with respect to that, 18 subsection 2 was designed as per 18 subsection 2. ITC in all the above cases, to be availed within 1 year from the date of invoice by the supplier. To be availed within 1 year from the date of issue of invoice by the supplier. Okay. Okay, ma. What is the time limit? From the date of, that means, let's say, for example, the RC was granted to you on this particular day in September 1st. Okay, when RC out September 15th. So, from the date when RC was granted, if the date of invoice is in preceding 1 year, let's say on September 15th, you got the registration certificate. In the preceding 1 year, if the date of invoice falls in between those two dates, let's say September 15, 2023, that means previous 1 year means from September 16th, 2022 up to September 15th, 2023. If the date of invoice falls between in these two dates, then only IDC is allowed. Rest of the cases, IDC is not allowed. That is the point we need to remember. Okay, ma'am. That is the point we need to remember. Okay. So this is 18.2. Our next point is 18.3. Naam ke vaste this point is also simply what we can say is 18.3 generally deals with transfer of IDC in special circumstances. I will explain you in a very simplified manner. Whenever there is any change in the constitution happens, like merger, amalgamation, demerger, okay, a sale of the business, in all these cases, whatever the unutilized IDC that is there in the transferor account, is it possible to shift it to the transferee is the question here. Yes, definitely there is a possibility for that. For that, you need to follow the procedure that was prescribed under 18 subsection 3. As per 18 subsection 3, the transferor needs to fill a document to transfer the IDC. Okay. Along with the application, the transferor need to submit a certified copy of a CA or a CMA that not only assets are transferred, but also liabilities are transferred. Not only assets are transferred, but also 100% liabilities are transferred. If these two documents are uploaded by the transferor on the GST common portal, transferee has to accept it. In that case, whatever the unutilized IDC that was there in the account of the transferor, now it will be shifted to the recipient, that is the transferee account. That means upon the acceptance of those details by the transferee on the common portal, the unutilized IDC that was there in the transferor account, now it will be credited to the electronic credit ledger of transferee account. As simple as that. Transferor need to upload two documents. One is application. Second one is a certified copy of a CA or a CMA that not only assets but also 100% liabilities are transferred. And the transferee has to accept those details. Then whatever the unutilized IDC that was there in the transferor account, now it will be shifted to the transferee account. That is the point we need to remember now. Okay. Next one is 18.4. So what does 18.4 deals with? Reversal of IDC in special circumstances. So these two topics boxes deals with 18 subsection 4 here. So with respect to 18 subsection 4, what is the point, As per 18 subsection 4, what a registered person who has availed the IDC, switching from regular scheme to composition levy. Simply, now you are shifting from normal scheme to composition scheme. Because you are there in normal scheme, you are eligible to take the IDC. But now, what happened, You are shifting from normal scheme to composition scheme. You are shifting from normal scheme to composition scheme. That's why IDC is needed to be reversed now. In the same way, supplies of the registered person getting wholly exempted from GST. That is taxable supply to exempted supply. Previously, it is a taxable supply. Therefore, ITC is allowed to you. Now that particular taxable supply is converted into exempted supply. Therefore, you need to reverse the ITC. So, the date when these conversions happens, normal scheme to composition scheme or taxable supply to exempted supply, on the preceding day, whatever the closing stock of raw materials, semi-finished goods, finished goods that were there, along with them, along with them, okay, along with them, even on capital goods also, you need to reverse the ITC. When you are shifting from a normal scheme to composition scheme or a taxable supply to exempted supply, along with the inputs, that means closing stock of raw materials, semi-finished goods, finished goods, even you are required to reverse ITC even on capital goods also. That is the point we need to remember. Okay. So the next question is here, sir, in which way we can reverse the ITC? With respect to the inputs, proportionate reversal will be based on the corresponding invoices. If invoices are not available, the market price that was prevailing on the particular effective date of that switchover or the exemption, that will be taken into consideration here. That is the point we need to remember. Okay, ma'am. Sir, what about the capital goods? This is important. With respect to capital goods, how to reverse the ITC? With respect to capital goods, how to reverse the ITC, ma'am? With respect to the capital goods, you can take the estimated life of the capital good as 5 years. That means in terms of months, it will be 60 months. In that, how much period it was unutilized? How much period it was unutilized? For that particular period, you need to reverse the ITC. For that period, you need to reverse the ITC. For that period, you need to reverse the ITC. Say for example, same point, the plant and machinery value is 1 lakh, rate of GST is 18%. After using it for 1 year, 6 months in the normal scheme, now we just shifted to composition scheme. How much ITC that is needed to be reversed now? GST law assumes that the estimated life of the capital asset will be 5 years, that is in terms of months, 60 months. In the time period, how much period it was used for business, that means normal scheme, 1 year, 6 months means 18 months. After deducting those 18 months, what is the remaining period? 42. For these 42 months, a proportionate basis, you need to reverse the ITC. Therefore, 18,000 into 42 divided by 60. How much amount we will get? Definitely we can claim the, we need to reverse the ITC with respect to that. Let's say for example, 18,000 into 42 divided by 60. 12,600. So 12,600. This is ITC that is needed to be reversed. So with respect to capital good, as per 18 subsection 4, for the reversal of ITC, you need to follow a special procedure. What is the special procedure you need to follow? What is the special procedure you need to follow? Okay. What is the special procedure you need to follow, Estimated life of the capital asset is 5 years. In terms of months, it will be 60 months. For how much period it was unutilized, in that particular proportion, we need to reverse the ITC. That is the point we need to remember. Okay. Sir, once the amount is reversed, if at all there is any surplus balance in the electronic credit ledger, will it lapse? Yes. The date when you opted for composition scheme The date when your supplies becomes exempted supplies. In all those cases, after the reversal of ITC, any surplus ITC balance that was there in the electronic credit ledger, it will lapse. That is the point you need to remember. Same procedure will be applicable to cancellation of registration, section 29.5, I think. The same procedure that was there in 18.4 will be applicable for the reversal of ITC in case of whenever your RC is cancelled. The next one is supply of the capital goods or plant and machinery on which ITC was taken. This is 18 subsection 6. As per 18.6, what is the point here? Simply, when a plant and machinery or a capital good is sold as second-hand plant and machinery, in those cases, what is the position? In those cases, what is the position, How much ITC that is needed to be reversed? We need to calculate that. How much ITC that is needed to be reversed? Sir, how much ITC that is needed to be reversed, sir? How much ITC that is needed to be reversed? How much ITC that is needed to be reversed, How much input tax you claimed previously? How much input tax you claimed previously? From that, per quarter or part thereof, 5% will be reduced. And what is the remaining amount that will be there? What is the remaining amount that will be there? That amount will be compared with GST is needed to be paid on the sale value or the transaction value. In that, whichever is higher, that amount is needed to be reversed. See this. Amount to be paid is equivalent to higher of the following. ITC on the capital goods or plant and machinery minus 5% per quarter or part thereof from the date of invoice. It will be compared with the GST to be paid on transaction value. In that, whichever is higher is needed to be reversed or paid. Take the example. Let us assume that the plant and machinery value is 10 lakhs. Rate of GST is 18%. After using it for 1 year 6 months, we sold it for some 5 lakhs. In that case, how much ITC that is needed to be reversed now? So, how much ITC you claimed previously? 10 lakhs into 18%, 1,80,000. From that, per quarter or part thereof, 5% is needed to be reduced. 1 year 6 months means total 6 quarters. 6 into 5, 30%. So 30% is needed to be reduced from this 1,80,000. It will be 54,000. After reducing it, what is the amount we will get? I think 1,26,000. It will be compared with GST to be paid on sale value. What is the sale value? 5 lakhs. Into what is the rate of GST? 18%. How much amount we will get? I think 90,000. In that, whichever is higher, this amount is needed to be reversed. This amount is needed to be reversed. So, whenever a plant and machinery is sold as a second-hand plant and machinery, in those cases, from the date of invoice, first point you need to see is how much ITC you claimed. From that, per quarter or part thereof, 5% is needed to be reduced from the date of invoice. And what is the remaining amount that will be there? Okay, that amount shall be compared with GST to be paid on sale value. GST to be paid on sale value. Okay. In that, whichever is higher, you need to reverse the ITC. So, this is the total important concepts of your ITC. So, these are the important areas you need to keep focus. There ends chapter number 6, ITC. Okay, now we are going to see the chapter number 7, registration. So, whereas with respect to registration chapter, we need to keep focus on the important sections like section 22, 23 and 24. So, what does section 22 here deals with? Section 22 here deals with the persons liable for registration on meeting a criteria. In simple sense, what we can say is here, In simple sense, what we can say is here, ma'am, whenever your turnover crossed the specified limits, whenever your turnover crossed the specified limits, in those cases, what is the position, ma'am? Definitely you are required to take the registration. But in which state you are operating will decide the turnover criteria for the registration limit, ma'am. Take the for example of MMDN. That means Manipur, Mizoram, Tripura, Nagaland. With respect to these four states, what is the registration limit, ma'am? If the aggregate turnover is more than 10 lakhs, if the aggregate turnover is more than 10 lakhs, then definitely what is the position, ma'am? You are required to take the registration. Sir, this limit is applicable to the goods or to the service? Both, ma'am. This 10 lakhs limit is for both goods and services. Whether you are making the supply of the goods or whether you are making the supply of service, in both cases, with respect to those four states, Manipur, Mizoram, Tripura, Nagaland. Generally, what is required, ma? You are required to take the registration only when your aggregate turnover exceeds 10 lakhs. Next one, T sample. That means T denotes Telangana, S Sikkim, A Arunachal Pradesh, M Meghalaya, P Puducherry, U Uttarakhand. With respect to those six states, ma, if the aggregate turnover is more than 20 lakhs, then only you are liable to get the registration. So the limit is applicable to both goods and services? Yes, the limit is applicable to both goods and services. That is the point we need to remember. Okay. And with respect to the other states, ma, with respect to the other states, like what we can say, with respect to the other states, if at all you are exclusive supplier of the goods, if at all you are exclusive supplier of the goods, then you are liable to get the registration. Then you are liable to get the registration when, ma, your aggregate turnover is more than 40 lakhs. If at all you are dealing in goods plus service or exclusively in the service, you are liable to get the registration only if your aggregate turnover is more than 20 lakhs. That is the point we need to remember. Okay. That is the point we need to remember, ma'am. Got it? So, if at all you are there in MMDA, the registration limit will be 10 lakhs, whether it is supply of the goods or supply of service. But whereas, if at all you are there in T sample, that means those six states. In that case, whether you are a supplier of the goods or a supplier of service, the registration limit will be 20 lakhs. Except those 10, 4 plus 6, rest of the states, if at all you are exclusive supplier of the goods, if at all you are exclusive supplier of the goods, then what is the position, ma? If at all you are exclusive supplier of the goods, then the registration limit will be 40 lakhs, ma. If at all you are exclusive supplier of service or goods plus service you are making, in those cases, the registration limit will be reduced to, the registration limit will be reduced to 20 lakhs. But whereas with respect to these notified goods like ice cream, pan masala, tobacco, fly ash bricks, building bricks, roofing tiles, like that. With respect to them, what is the position, ma? With respect to them, what is the position? Even though you are exclusive supplier of the goods, even though you are exclusive supplier of the goods, instead of 40 lakhs, what is the limit that will be applicable, ma? 20 lakhs limit will be applicable. What is the general rule? If at all you are exclusive supplier of the goods, in those cases, the registration limit for you will be 40 lakhs. But in case of these notified goods, But in case of these notified goods, instead of 40 lakhs limit, what is the limit that will be applicable, ma? 20 lakhs is the limit that will be applicable. The question is here, sir, what is meant by the word? Whether this aggregate turnover is needed to be computed. Whether this aggregate turnover is needed to be computed state-wise or country-wise. That means this 10 lakhs, 20 lakhs, 40 lakhs limits will be there now. Those limits are needed to be computed on all India basis or on state-wise. Definitely those are needed to be computed on the basis of all India. That means for the same path, wherever you are having the place of businesses, in all these places, what is the position, ma? In all these places, what is the position? All these places, aggregate turnover shall be considered. So the question is here, what is meant by the word aggregate turnover? What is meant by the word aggregate turnover, ma? All taxable supplies, exempted supplies, exports, interstate supplies, minus GST, minus RCM purchases. What is the amount we will get? It is known as aggregate turnover. All taxable supplies, exempted supplies, exports, interstate supplies, minus GST, minus RCM purchases. What is the amount we will get? It is known as aggregate turnover. If this aggregate turnover exceeds 10 lakhs, 20 lakhs, 40 lakhs, in those cases only, what is the position, ma? In those cases only, what is the position? In those cases only, you are required to take the registration. So let's take the example of Masterminds, sir. Masterminds is there in 2 states now. How many number of RCs Masterminds is required to take? Generally, ma, there is no concept of centralized registration in our GST. In how many number of states you are having the place of business, that many number of RCs you are required to take. That many number of RCs you are required to take. Got the point? Yes. So that means based on that MM is there in 2 states now, therefore MM is required to take 2 registrations. The question is here, the registration that was taken by MM in Guntur, that is in Andhra Pradesh, whether it is a CGST registration or a SGST registration, it is called GST registration. There is no specific concept of tax specific registration in our GST. Okay. So that means whatever the registration you will take under SGST, it is deemed to be taken under CGST also. In the same way, whenever your application is rejected under SGST, deemed to be rejected under CGST also. That is the point we need to remember. Okay, ma'am. Okay, ma'am. Now we are discussing about section 22 with respect to registration. Section 22 we are discussing about, ma. In that section 22, we are just discussing about the aggregate turnover. So what is meant by the word aggregate turnover, ma? All taxable supplies, exempted supplies, exports, interstate supplies, minus GST, minus RCM purchases. What is the amount we will get? It is known as aggregate turnover. If at all aggregate turnover is more than the prescribed limit, in those cases, definitely we are liable to get the registration. In those cases, we are liable to get the registration. Okay. The next point is, sir, if at all we are making supplies in more than one state, let's say for example, in AP, we are actually doing the restaurant business. In Telangana, we are doing the liquor business. The question is here, while computing the aggregate turnover, only AP turnover will be considered, which is making a taxable supply, or Telangana's turnover, which is making a non-taxable supply, that point will also be covered in the aggregate turnover. What is your answer? Not only the taxable turnover, as per the definition I already told you, even exempted supplies, non-taxable supplies, those amounts are also needed to be included. Those amounts are also needed to be included in the aggregate turnover. Therefore, while computing the aggregate turnover, AP turnover as well as Telangana turnover shall be considered. Okay. So the question is here, with respect to AP, we are having some different registration limits now. If at all you are exclusive supplier of the goods, if at all you are a exclusive supplier of the goods, then 40 lakhs is the limit. Goods plus service or supplier of service, in those cases, what is the position, ma? In those cases, what is the position? 20 lakhs is the turnover. And in the same way, with respect to Telangana, whether it is a supply of the good or a supply of service, in both cases, what is the answer, ma? In both cases, what is the answer? Definitely 20 lakhs is the limit. The question is here, sir, which turnover we shall consider here? AP turnover or Telangana turnover? Whichever is lower. Whichever is lower, that particular turnover will be considered. Next question. Sir, just now we are discussing about AP and Telangana. Na? So in AP we are doing the restaurant business and in Telangana we are running the liquor related business. The question is here, next question. In how many states we are required to take the registration? In how many states we are required to take the registration? Only one. Sir, what is this? Previously we just discussed that in how many number of states you are having the place of business, that many number of RCs you are required to take. But just now we are having the place of businesses in 2 states now. Then why are you saying that only with respect to AP you are required to take the registration? Why not Telangana? The answer is simple, ma. Registration is not required in a state from where only exempted supplies are made by the taxable person. Registration is not required in a state from where only exempted supplies are made. So in our example, in AP we are making the taxable supplies. In Telangana we are making the non-taxable supplies. Therefore, what is the position, ma? Therefore, what is the position? We are not required to take registration in Telangana, but we are required to take the registration in AP. Okay. Sir, if at all we are having the multiple place of businesses in different states, one in normal state like AP, second one is like Mizoram, which is there, some 10 lakhs limit is there. Na? In those cases, which limit shall be considered? Whichever is lower. If a taxable person is operating in multiple states and one is there in the special category state, then automatically the limit will be reduced to the limit of special category state. That is the point we need to remember. Okay. Sir, if the business is sold or transferred to somebody else, in those cases, the transferee is required to take the fresh registration, or he can continue the business under the name of old registration certificate. Answer is no. The transferee cannot continue the business in the name of what we can say, in the name of old registration certificate. Why, sir? What is the reason? Why it is not the case? The reason is simple, ma. Under GST, the registration will be based on PAN based registration. Therefore, the transferor PAN number and the transferee PAN number can be different and will be different. That's why transferee has to apply for fresh registration. Same point will be applicable to amalgamation or demerger also. In those cases, amalgamated company or resulting company will apply for fresh RC, because the amalgamating company PAN can be different. In the same way, demerged company and resulting company PANs can also be different. That is a point you should remember with respect to registration. Okay. This is all about section 22. Now we need to see 24 ma. Persons liable for compulsory registration. Sir, what is the difference between section 22 and section 24? With respect to section 22, you are required to take the registration only when your turnover crosses the specified limit. But whereas with respect to section 24, persons liable for compulsory registration, in those cases, they are liable for registration if at all those people are notified under section 24, irrespective of their turnover, they are required to take the registration. Under 22, you are required to take the registration only when your turnover crosses the specified limit. But whereas with respect to 24, you are required to take the registration only, you are required to take the registration when your name is notified under 24, irrespective of your turnover, you are required to take the registration. Okay, ma, that is nothing but compulsory registration, irrespective of your turnover. In that, what is the first point, ma? Interstate supplier of taxable goods other than handicraft goods. That means, if at all you are making any interstate supply of taxable goods, I am specifying that only with respect to goods. That too, if at all you are making any interstate supplies, that too the goods shall be taxable goods. If all these points are satisfied, then only you are covered under section 24, compulsory registration. Then irrespective of the turnover, you are required to take the registration. Irrespective of the turnover, you are required to take the registration. Okay. So, it is applicable to interstate supply of the taxable goods. Sir, what about the services, sir? Those services were given relaxation by section 23. Therefore, even though you are making any interstate supply of service, you are required to take the registration only when your turnover crossed the specified limits. Only when your turnover crossed the specified limits. That is the point we should remember. But with respect to handicraft goods, section 24 will not be applicable. That means what is the position? Even though you are making interstate supply of handicraft goods, even though you are making interstate supply of handicraft goods, in those cases, what is the position, ma'am? You are not required to take the registration as per section 24. You are required to take the registration as per 22 only when your turnover crossed the specified limits. That is point key. And second point, persons receiving inward supplies taxable under RCM. Simply, the people who are notified under 9.3 RCM recipients will be there. Na? Those RCM recipients are required to take the registration irrespective of their turnover. That means simply the people who are notified under 9 subsection 3 RCM as a recipient, those recipients are mandatorily required to take the registration even though the turnover does not cross the specified limits. Third one, NRDP. What is the full form of NRDP, ma'am? Non-resident taxable person. Non-resident taxable person. So with respect to this NRDP, what is the position, ma'am? What is the meaning of the word NRDP? The foreigner who is making a occasional supplies in India, that person is known as NRTP. For example, Nepali people selling the sweaters in winter season in India, after that returning back to their country, those people can be termed as NRTPs, non-resident taxable persons. Those NRTPs are liable for compulsory registration irrespective of their turnover. In the same way, persons supplying on behalf of the other taxable person, that is principal and agent. Simply, which type of agents will be covered under compulsory registration section 24? Which type of people can be treated as compulsory registration here. That means agents here can be divided into two types now. One is buying agent, second one is selling agent. Apart from that, which type of agents are covered under deemed supplies? Those agents are required to take compulsory registration. Which type of agents are required to take the compulsory registration? The agents. The agents who are covered under deemed supplies, or the agents who are covered under deemed supplies, or the agents who are required to take the compulsory registration. Sir, what is meant by that? The meaning is simple. If you are able to recollect the concept of deemed supplies under section 7(1)(c) supply chapter, while receiving the goods by the buying agent or while selling the goods by the selling agent, if the invoice is in the name of the principal but not in the name of the agent, then the concept of deemed supply will not be applicable. But if the invoice is issued in the name of the agent, in those cases the concept of deemed supply is applicable. Then the transaction between principal and agent will be covered under deemed supplies. That is the point we should remember. So the agents who issues invoice in their own name are covered under deemed supplies. Those type of agents are required to take the compulsory registration irrespective of their turnover. That is the point. Next one. Persons notified by government. So any other persons who are notified by the government means ECO who is notified under 9 subsection 5 is compulsorily required to take the registration. Who are the ECOs that were notified under 9 subsection 5? Anybody remembers? Transportation of passengers, hotel accommodation, housekeeping services, food aggregators like Zomato, Swiggy. These type of ECOs are notified under 9 subsection 5. Those ECOs are compulsorily required to take the registration. That is the first one. Second one, the ECOs who are required to collect the TCS as per section 52, like Amazon, Flipkart, like that. Those type of ECOs are also liable for compulsory registration. In the same way, the persons who are supplying the goods through ECOs who are notified under that section 52 to collect the TCS. That means the sellers who are making the supplies through ECOs notified under section 52 to collect the TCS, those sellers, those suppliers of the goods are also required to take the compulsory registration. Next one, CTP, casual taxable person, not engaged in notified handicraft goods. What is the full form of CTP? Casual taxable person. So with respect to casual taxable person, what is the point? The person who is having a fixed place of business in one state and making occasional supplies in some other states, then that particular person is known as CTP. These CTPs are also liable to get the compulsory registration irrespective of their turnover. But CTP of handicraft goods is not liable for compulsory registration as per section 24. He is required to take the registration as per section 22 if the turnover limit crossed. Next one, TDS or TCS collectors, that point already told you. With respect to TCS, ECOs will be covered. With respect to TDS deductors under section 51, generally whenever the government agencies or the recipients of any particular supplies, if the contract value is more than 2.5 lakhs, in those cases as per section 51, those government agencies are required to collect the TDS. Okay, that will be there in CA final. Okay, it is not there in your syllabus at present. Those type of TDS deductors or TCS collectors are also liable for compulsory registration. And another thing, even though you are taking the registration as per section 22, normal registration, but still you are required to take a separate registration as a TDS deductor or a TCS collector. Even though you are a registered person under the normal provisions, but still you are required to take the registration as a TDS deductor or as a TCS collector. In the same way, ISD. What is the full form of ISD? Input Service Distributor. In general scenario, simply when there is a centralized billing system or a centralized accounting system, in those cases, the total input tax credit will be accumulated at one place. Where generally the ITC was accumulated, from that particular place, whatever the accumulated ITC, it will be distributed to the branches, remaining place of businesses. The person who is distributing that is known as ISD, Input Service Distributor. Those ISDs are also required to take the compulsory registration, even though they are having the normal registration. Okay, as per 22. Next one, OIDR service provider to NTOR. OIDR services means online information database access or retrieval services to NTOR. NTOR means non-taxable online recipient. Simply individual for personal use or for non-business purpose, those people will be covered under NTOR. OIDR services means simply OTT platforms or cloud services. They will be covered under this OIDR service like Amazon Prime Videos, Netflix. Okay, in those cases, the service provider of the Netflix or Amazon Prime Videos, they are required to take the compulsory registration irrespective of their turnover. This is section 24. So the people who are covered under section 24 are required to take the compulsory registration irrespective of their turnover. Next one is section 23, persons not liable for registration. So who are the persons that are not required to take any registration will be covered under section 23. So what does section 23 here deals with? Persons engaged exclusively in supplying the goods or services or both, not liable to tax, wholly exempt from tax. Simply, if at all you are exclusive, if at all you are making exclusive exempted supplies, or if at all you are making exclusive non-taxable supplies, in those cases you are not required to take any registration. If at all you are making exclusive exempted supplies, or if at all you are making exclusive non-taxable supplies, in those cases you are not required to take any registration as per section 23. In the same way, point B, agriculturist limited to the supply of the produce out of cultivation of his own land. That means if agriculturist or the farmer making supply of anything which is cultivated out of his own land, in those cases also he is not required to take any registration. But keep it in mind, if at all he is selling potatoes cultivated out of his own land, there is no need to take registration as per section 23. But he purchases the potatoes from somebody else and selling them to some other parties, in those cases those people are not covered under section 23. So agriculturist who supplies out of cultivation of his own land is covered under this 23. Third one, persons making only reverse charge supplies, simply RCM supply, exclusive RCM supply, means already RCM recipient is covered under section 24 compulsory registration. Then in that case he will pay the GST. If at all you are exclusive RCM supplier, there is no logic in applying the registration, because whatever the supplies you will make on them, who will pay the GST? Recipient himself. In those cases, those exclusive RCM suppliers are not required to take any registration. In the same way, interstate taxable supplier of services up to the specified limit of 10 or 20 lakhs. I already told you. Interstate supplier of the goods is only covered under section 24 compulsory registration. If at all you are making any interstate supply of services, in those cases you are not required to take registration as per section 24. You are required to take the registration as per 22 when your limit exceeds. That is the point that was there in 23. Relaxation was given by 23. Next one, interstate taxable supplies of notified handicraft goods. I already told you this point also. Whether he is a CTP of handicraft goods or he may be interstate supplier of the handicraft goods, he is not required to take any compulsory registration. So, he is required to take registration only when his turnover crosses the specified limits. That is the point we need to remember with respect to section 23. Next point, effective date of registration. What is meant by this effective date of registration? Let's take the example. On September 1st, our turnover crossed the specified limit. On September 10th, we applied for RC. On September 15th, RC was granted to us. In that case, what will be the effective date of registration is the question. The date when you become liable for registration. From that particular date, if you apply for RC within 30 days, then even though RC was granted to you subsequently, the effective date will be the date when you are liable for registration. I am repeating once again. The date when you become liable for registration, from that particular date, if you apply for RC within 30 days, then even though RC was granted to you subsequently, the effective date will be the date when you are liable for registration. In our example, what is the date you are liable for registration? September 1st. On which date you applied for registration? September 10th. That means within 30 days or not? Yes. If at all it is within 30 days, in those cases, even though RC was granted to you on September 15th, what is the effective date? September 1st will be the effective date. Second one. Sir, when if at all instead of September 10th, we applied on October 10th, got the RC on October 21st. In that case, what is the effective date of registration? If you apply for RC after 30 days, then actual date of RC is the effective date of registration. In the second example, the date you become liable for registration is September 1st. We applied for registration on October 10th, that is after 30 days. If you apply for RC after 30 days, in those cases, what is the actual date of RC? That is the effective date. In our example, October 21st is the actual date of RC. That particular date is effective date of registration. So, if you apply for RC within 30 days from the date when you become liable for registration, even though RC was granted to you subsequently, the effective date will be the date when you are liable for registration. But if you apply for RC after 30 days, the effective date will be the date when the actual RC was granted to you. This concept is effective date of registration. After completion of effective date of registration, the next topic we need to see is registration procedure in relation to CTP and NRDP, which is there in section 27. There will be a special registration procedure with respect to CTP and NRDP. With respect to CTP and NRDP, there will be a separate registration procedure. Okay. So what is meant by the word CTP? Casual taxable person, and what is meant by the word NRDP? Non-resident taxable person. So with respect to CTP and NRDP, what is the different procedure that will be in a different manner in comparison with normal registration? The first difference will be ma, a CDP or NRDP must apply for registration at least 5 days prior to the commencement of business. That means generally the people who are going to take the normal registration, they are required to take the registration, that means either as per 22 or as per 24 compulsory registration. The date when they become liable for registration, from that particular date, within 30 days, they need to apply for registration. But whereas with respect to CDP and NRDP, even before commencement of business also, even before commencement of business also, before commencement of business also, they are required to take the registration, that to at least 5 days before. Second one is, once RC, that is the registration certificate, that is granted to the CDP or NRDP will be valid for the period specified in the application of registration or 90 days from the effective date of RC, whichever is earlier. Okay, that means what is the validity period of registration certificate that is granted to the CDP and NRDP? With respect to CDP and NRDP, the RC registration period validity will be minimum 1 day, maximum 90 days. Minimum for 1 day also you can get the RC, or the maximum time period that will be granted to the CTP or NRDP will be 90 days. The next question is here. Sir, is it possible to extend the time period of that particular 90 days? Yes, definitely it is possible to extend the time period of that 90 days for another period of further period of another 90 days. That means in the capacity of CTP or NRDP, you can do the business up to a maximum of 90 plus 90, 180 days. But whereas with respect to the remaining people, to whom the RC is granted as per section 22 or as per section 24, once RC is granted to them, it will be permanent unless you surrenders it or department cancels it. Unless you surrenders it or department cancels it. That is the point you need to remember. And the next point is, generally remaining people will pay the GST if at all they are following section 9 on a monthly basis. If at all they are following composition scheme, they will pay the GST on a quarterly basis. But whereas with respect to this CDP and NRDP, even before the commencement of our business, even before they are getting the registration certificate, they are required to pay the advance tax. When they pay the advance tax, then only they will get the registration certificate. That is a speciality of CDP and NRDP registration procedure. So in the same way, for the extension of time period is there now. That means initially the maximum time period will be 90 days. and after that further it can extend up to another 90 days. For the extension of another 90 days, for the extension of another 90 days, what is the position, ma? For the further extension of 90 days also, is it required to pay any advance tax? Yes. For further extension of time period also, you are required to pay the advance tax, then only you will get the registration certificate. So, basically the procedure can be summarized in a simple way. Generally, normal people, that means normal people means in my opinion, the people who are going to get the registration as per section 22 or as per section 24. The date when they become liable for registration, from that particular date, what they will do? From that particular date, what is the position, ma? They are required to take the registration within a period of 30 days. But whereas, with respect to CDP and NRDP, they are required to take the registration at least 5 days before. That is the first difference. Second one, for the remaining people, once RC is granted to them, it is permanent. Unless you surrender it or department cancels it. But whereas with respect to CDP and NRDP, once RC is granted to you, it is valid for a minimum period of 1 day and the maximum period of 90 days. So, is it possible to extend the time period? Yes, definitely it is possible to extend the time period for a further period of another 90 days. Okay. The third difference is remaining people generally will pay the GST after they got the registration certificate, either monthly or quarterly basis. But whereas with respect to CDP and NRDP, they are required to pay the GST as advance tax. Okay. As advance tax, they are required to pay the GST. That is the point you need to remember. Okay. Next is registration by the proper officer suo motu as per section 25. Generally, when you become liable for registration, either as per section 22 or as per section 24, definitely what is the position? You are required to apply for the registration certificate within 30 days from the date when you become liable. If at all you did not get the registration, that means even though you are liable for registration, but still you fail to apply for registration. In those cases, the department can give you a temporary registration number, that is on a temporary basis. That one is known as registration by the proper officer suo motu. That means voluntarily, without any application on the part of the concerned party. The point is, once a temporary number was given to you by the department by registering you suo motu, from that particular date, from the date of temporary registration, within 90 days, you shall apply for registration. But whereas with respect to, if you want to prefer appeal, no, I am not liable to any registration, but still that person compile me to take the registration, then you are a feeling of like that. In those cases, what is the position, ma? Definitely in those cases, if you wins the appeal, that is okay. If you loses the appeal, then from the date of that appellate, date of order of such appellate authority, within 30 days, you need to apply for registration. If you are not preferring any appeal, then from the date of grant of temporary from the date of grant of temporary registration, within 90 days, you need to apply for registration. If at all, you prefer appeal, and judgment was given against you and you are liable to get the registration, in that case, from the date of order of appellate authority, within 30 days, you are required to get the registration. That is the point you should remember. Okay. The next point is procedure for registration. Sir, what is the procedure for registration? Whereas with respect to procedure for registration, what is the form number with respect to GST registration? The form number will be REC01. That means every person who is required to take the registration need to apply in form number REC01 on the website or GST common portal gst.gov.in. Okay. So form number will be GST REC01. It will be having two parts, part A and part B. Whereas with respect to part A, previously your PAN number, mobile number, email ID are to be given and they will be validated later on. But now mobile number and email ID is not required to be given. Only you need to give your PAN number. Once you have given your PAN number in part A along with the state details, then the mobile number and the email ID that is linked to that particular PAN number will get the OTP. Based on that particular OTP, your PAN will be validated. Once the PAN is validated, a temporary reference number will be generated, and based on that temporary reference number, definitely you can fill the part B. Okay. Previously, mobile number and email ID or also should be given, but now there is no such concept. Giving the PAN details and state details itself sufficient, and the mobile number and email ID that is linked to the PAN number will get the OTP. Once you enters the OTP, in that case, what is the position? Definitely. So based on the TRN, part B will be filled. What will be the details that will be there in part B? In part B, what is the constitution of the business? What is the reason that you are getting the registration? What is the address of head office? What is the address of any branches? And any authorized signatories are there, those details. Okay. All these details will be there in part B. Once you fill the part B, at the time of filling the part B, definitely at the time of filling the part B, generally there will be option for you to link your GST registration with the Aadhaar. Simply Aadhaar authentication. Now it is optional at present. If at all Aadhaar authentication option was selected, you will be generally redirected to the Aadhaar website. Thereby, you will enter your Aadhaar number, and once you enter your Aadhaar number, your registered mobile number with the Aadhaar consent authorities will be there. Those authorities will send a OTP to the consent mobile number. Thereby entering the OTP, you are deemed that Aadhaar authentication was done. So once the Aadhaar authentication was successful, then the date when the Aadhaar authentication was done, that particular date is deemed to be the date of application. But if at all you did not like to get the Aadhaar authentication done, in that case, the date of filing of part B will be the date of application, and you will be get the registration certificate only after the physical verification of place of business. Okay. But now recent amendment is, I think that particular plan was there in Gujarat as a pilot project, that the risky people like something different, the age of the PAN holder is something more than some 80s, 90s like that. And the commodity itself is the risky commodity where the person prefers the registration and is already a registered person having some issues like not filing the returns properly. so our non-payment of taxes was there. Okay, in all those cases, definitely department will grant you the RC. First point, not based on OTP, based on your iris scan or the fingerprint scan. Second one, they will take your photograph along with that Aadhaar, your fingerprint scan and all these things. And only after the physical verification of your place of business, RC will be granted to you. That is the point you need to remember. But this particular point was on testing now in Gujarat. I think if at all it is successful, in those cases it will be implemented throughout the country. But the for the time being, except Gujarat, rest of the country, whatever the procedure just now we discussed, that will be only applicable. That is a point we need to remember. Okay. Once application one filed, you will get the acknowledgement in GST REC 02. Now the application will be forwarded to proper officer. Once the application is forwarded to proper officer and author authentication was done, successfully, then from the date of filing the proper application, if department is satisfied with your application, then RC will be granted to you within 7 working days. If at all department is not satisfied with your application, like lack of some documents, lack of some information, lack of some clarification, in those cases they will ask for some extra details. For that sake, they will issue the show cause notice to you within 7 working days from the date of proper application. For that show cause notice, you need to give the reply within 7 days. You need to give the reply within 7 working days. You need to give the reply within 7 working days. If at all you have given the reply and department is satisfied with your reply, then within period of 7 working days, if the department satisfies, RC will be granted to you. If at all the department is not satisfied with your reply or reply was not given by you, in those cases the application will be rejected by specifying the reasons. This is a procedure. The date when you applied for RC, within 7 working days, if everything is okay, RC will be granted to you. Not okay, a show cause notice will be issued to you. For that show cause notice, you need to give a reply within a period of 7 days. If at all everything is okay, from the date of receipt of that particular reply, within 7 working days, RC will be granted to you. If the department is not satisfied, if at all everything is okay, in that case, if the reply is satisfactory, then within 7 working days, RC will, the date when you give the reply, from that particular date, within 7 working days, RC will be granted to you. If at all your reply is not satisfactory, in those cases, what is the position? If the reply is not, then RC will be rejected, application will be. But if at all other authentication was not done, in those cases, the period of 7 days will be replaced by 30 days. And only after the physical verification of place of business only, RC will be granted to you. That is the point you need to remember. Okay. So if at all, within 7 working days, department neither issued the registration nor issued the show cause notice. Within 7 working days, department neither issued the registration certificate nor issued the show cause notice. In those cases, what is the position? Application is deemed to be approved. Within 7 working days, department neither issued the registration certificate nor issued the RC. In those cases, your application is deemed to be approved. That is the point we need to remember. Okay, ma'am. In the same way, from the date of show cause notice, reply should be given within 7 working days now. Reply was given within 7 working days, but from that particular date, department should say yes or no. If at all yes, RC will be granted to you. No, application will be rejected. But department has done nothing there. In those cases also, application is deemed to be approved. That is the point we need to remember. Okay. This is the procedure you need to remember with respect to registration. The next point will be amendments to RC. Next point is amendments of registration certificate. Whereas with respect to once RC was taken, with respect to that registration certificate, with respect to that any registration certificate, any particulars which are submitted in that registration certificate changes. Is there any need to apply for fresh registration certificate? Fresh registration certificate? Or present RC can be amended. Present RC can be amended. Okay, the point is here. As per section 28, definitely the RC details can be modified or amended. RC details can be modified or amended. Okay, ma'am. So here, except PAN number changes, rest of the cases, we can amend the RC by following the procedure that was specified, ma'am. Okay. So here, except the PAN number changes, rest of the cases, definitely what is the position, ma'am? In the rest of the cases, we can amend the RC by following the procedure that was specified under section 28. As per section 28, the changes can be divided into two types. One is core areas, second one is non-core areas. One is core areas, second one is non-core areas. With respect to core areas, in order to amend them, we should take the permission from the department. But whereas with respect to non-core areas, ourselves we can modify the data. So what are the core areas? Are they defined? Yes, ma'am. These are the core areas where you need to seek the permission from the department in order to modify that. Okay. What are the core areas? Legal name of the business, head office address, branch address, key managerial persons like with respect to partnership firm, partners, company directors, HUF Karta, with respect to trust board of trustees or with respect to company CEO, like that any key managerial person changes. These are defined as core areas. In order to amend these details, department permission is needed. Legal name of the business, head office address, branch address, key managerial person data. Any change occurs in these areas. What is the position? Definitely, we should seek the permission from the department. Otherwise, what is the position? Definitely, Otherwise, definitely, if the idle they are non-core areas, ourselves we can modify the data. Okay. With respect to core areas, we need to apply for the amendment of the RC within 15 days from the date of occurring of that particular change. Within 15 days, you need to submit the application. If everything is okay, within 15 days, RC will be amended. If at all it is not okay, within 15 days, a show cause notice will be issued to you. For that show cause notice, you should give a reply within 7 days. If the reply is satisfactory, in that case, what is the position, ma? Your RC will be amended. Otherwise, your application will be rejected. This is the point you need to remember with respect to amendments to RC. Next one is unique identification number, ma. Generally, with respect to embassies, consulates, UNOs like UNESCO, UNICEF, WTO, WHO, with respect to them, what is the position, ma? Definitely. Instead of generally their outward supplies are exempted, ma. But whatever the inward supplies they will receive, on them they are liable to pay the GST. Na? For the refund of the amount that is paid out in inward supplies, a special number will be allotted to them. That particular special number is known as unique identification number. Okay. And this UIN is a centralized one, ma. That means throughout the country, only one UIN is needed. That is sufficient. Okay. And but keep it in mind, the person who is having the unique identification number is not a registered person. Therefore, he is not a taxable person. To whom this particular unique identification number will be given will be decided by the Ministry of External Affairs. In consultation with that particular Ministry of External Affairs, the department will grant them this particular unique identification number in order to give the refund with respect to the taxes that are paid on inward supplies. Okay. Next point is section 29, cancellation of registration. Whereas cancellation can be divided into two types. One is 29 subsection 1 and second one is 29 subsection 2. 29.1 deals with voluntary registration. 29.2 deals with sumoto registration. 29.1 deals with voluntary registration. 29.2 deals with sumoto cancellation. 29.1, when applied by the registered person, your RC will be cancelled. That is the point, ma. What is 29.1 deals with? When applied by the registered person, your RC will be cancelled. What are the cases where your RC will be cancelled? When you applied for cancellation, there are 5 circumstances where your RC will be cancelled when applied by the registered person. First one, when the business is closed. Second one, when the business is sold. Third one, amalgamation or demerger. Fourth one, change in the constitution of the business. Fifth one, taxable supplies becoming either exempted supplies or non-taxable supplies. Sixth one, a voluntary registered person who wants to cancel the RC. In these 6 circumstances, when applied by the registered person, your RC will be cancelled. Okay. What are those 6 circumstances, ma? First one, when the business is sold. Second one, when the business is discontinued. Third one, amalgamation or demerger. Fourth one, change in the constitution. Fifth one, taxable supply becoming either exempted supply or non-taxable supply. Sixth one, voluntary registered person want to cancel his RC. In all these 6 cases, definitely your RC can be cancelled when you applied by the registered person. But whereas with respect to the cases which are covered under 29 subsection 2, even though there is no application on the part of the registered person, but still your RC can be cancelled by the department. What are the cases where RC can be cancelled by the department? Okay, what are the cases where Shumoto cancellation can be done by the department? First one, if the registered person who is following normal scheme, that means as per section 9, he did not file the GSTR 3B for a continuous period of 6 months. And if at all, he is following QRMP scheme, that is quarterly return monthly payment scheme, he did not file the so if at all is following normal scheme, then GSTR 3B was not filed for continuous 6 months. If at all they are following QRMP scheme, then that the GSTR 3B was not filed for continuous 2 quarters, then your RC can be cancelled by the department. If at all you are following the composition scheme, then GSTR 4 was not filed. Even after the expiry of the due date within 3 months, then your RC can be cancelled by the department. Generally, the GSTR 4 due date will be what is the due date of GSTR 4 ma? The due date of GSTR 4 will be financial year ending April 30th. That means within 1 month you need to file the GSTR 4. On or before April 30th. You did not file the GSTR 4 from the due date within 3 months. That means from April 30th, 3 months. That means May, June, July. On or before July 31st, also you did not file the GSTR 4. In those cases, what is the position, ma? Your RC can be cancelled by the department. In the same way, a voluntary registered person did not commence the business within a period of 6 months. Then also RC can be cancelled by the department. Third one, when RC was obtained by fraud and the department knows about that particular thing, then also your RC can be cancelled. And if at all it is a dummy company, that means he did not conduct the business from the declared place of business, that is dummy company, or issues invoice without supplying, that means fake invoices are issued. In those cases also, your RC can be cancelled by the department. And in the same way, when he violates the provisions of section 171, that is anti-profiteering measures, then also your RC can be cancelled by the department. And with if at all he violates the provisions of Rule 10A, so violates the provisions of Rule 10A. With respect to Rule 10A, what is the position, ma? Nowadays, even without bank details also, you will get the registration certificate. But from the date of RC was granted within 45 days or the date of first GSTR 3B, whichever is earlier, on or before that particular date, bank details are needed to be submitted to the department. Otherwise, your RC can be cancelled by the department. Next one. If he avails the IDC in violation of section 16, what does this mean? There are specific conditions that are prescribed in section 16. As per 16 subsection 2, documentary evidence shall be there. Goods or services shall be received. Recipient has filed the GSTR 3B. Supplier has made the payment to the government. If all these conditions are satisfied, then only you will get the registration certificate. But whereas, if he violates the 16.2 conditions, but still he claimed the ITC and department knows about that particular thing, then also your RC can be cancelled by the department. Next one is, whatever the details of outward supplies that are furnished in GSTR 1 is more than the details that are declared in GSTR 3B. Simply, the sales data that was there in GSTR 1 is more than the sales data that was there in GSTR 3B. In those cases, department knows about that particular thing, then also your RC can be cancelled by the department. And if he violates the provisions of Rule 86B, which is in relation to ITC, if at all in any particular month, the taxable supplies value is more than 50 lakhs. In those cases, what is the position? Definitely you need to pay only 99% of the ITC can be utilized and remaining 1% shall be paid in cash. If anybody violates that particular provision, then also your RC can be cancelled by the department. That is the point we need to remember. Okay, these are the things you should remember with respect to section 29, procedure for cancellation. There ends chapter number 7, registration. Okay, ma'am. After completion of chapter number 7, we are going to discuss about chapter number 8, tax invoice, debit notes, credit notes, and e-way bill. With respect to tax invoice, debit note, credit note, and e-way bill, what is the thing we need to keep focus on is the major areas, because it is a lengthy chapter. We may not be able to cover each and every aspect, but what are the most important things in this particular chapter? I am going to cover those particular areas. Okay. So in this particular chapter, what is the thing we are going to discuss? So in this particular chapter, we are going to discuss about what are the various documents that are going to be issued under GST regime. Under what circumstances they are going to be issued will be dealt by this particular point. Okay, so the point will be with respect to this. First point will be tax invoice. Who will issue this particular tax invoice? Supplier will issue the tax invoice. Why this tax invoice will be issued? To maintain the transparency. Okay. And why in tax invoice is required with respect to recipient in order to claim the ITC. Okay, for the sake of transparency as well as for the sake as evidence of payment of tax, this particular tax invoice is needed. So there must be some particulars with respect to tax invoice as per rule number 46. Generally, there is no prescribed format for tax invoice. There is no prescribed format for tax invoice. But what are the contents that are there? In rule number 46 are there, then only it will be treated as a valid tax invoice. Like supplier name, address, GST number, serial number, date of the issue. And this point is important from the examination point of view, recipient details. If at all it is a B2B supply, then name, address and GST number of the recipient is mandatory. Whereas if at all it is a B2C supply, it depends upon value. Value more than or equal to 50,000 rupees. Value more than or equal to 50,000 rupees. Name and address of the recipient is mandatory. Whereas value less than 50,000 rupees, then if the recipient demands or request, then only the details will be there. If at all it is a B2B supply, name, address, GST number is mandatory. If at all it is a B2C supply and the value is more than 50,000, name and address is mandatory. Value is less than 50,000, then name and address can be requested by the recipient. And apart from the description, total value, tax rate, if at all it is interstate supply, place of supply, address of delivery, RCM applicable or not, signature, HSN code. HSN code is also important. It can be asked in MCQs or something like that. What is meant by the word HSN? It is a classification code in relation to the goods. And SAC means Services Accounting Code. It is a classification code with respect to services. With respect to goods, the HSN code will be of 8 digits. With respect to services, the classification code will be of 6 digits. That means these 8 digits or 6 digits should be there mandatorily. Answer is no. It depends upon preceding financial year turnover. If in the preceding financial year turnover, if the aggregate turnover is less than or equal to 5 crores, if the aggregate turnover is less than or equal to 5 crores, then 4 digits is mandatory. With respect to B2B and B2C, it is optional. If the aggregate turnover is more than 5 crores, then whether it is B2B or B2C, 6 digits are mandatory. If the aggregate turnover in the preceding financial year is less than or equal to 5 crores, then B2B 4 digits are mandatory, B2C optional. If the aggregate turnover is more than 5 crores, with respect to that B2B or B2C, in both cases it is mandatory, 6 digits shall be specified therein. Okay. And with respect to manner of issue of invoice, that means how many number of copies we are required to issue. If at all it is with respect to goods, 3 copies are required to be issued. If at all it is with respect to services, 2 copies are required to be issued. With respect to supply of the goods, why 3 copies are required, ma? Original is for the recipient to claim the ITC. Duplicate is for the transporter. Duplicate is for the transporter for the sake of transit check. Third copy is the supplier for filing GSTR 1. With respect to services, 2 copies are required, ma. Original for the recipient, duplicate for the supplier. Okay. There is no requirement of transportation, that's why it is not required. Okay. Our next point is revise the tax invoice. This point is in link with registration, effective date of registration. If at all you are able to recollect the concept of this revise the tax invoice, effective date of, what is meant by effective date of registration, ma? From the date when you become liable for registration. From the date when you become liable for registration. From that particular date, if you applies for RC within 30 days, then even though RC was granted subsequently, the date when you become liable for registration will be the effective date. But if you applies for RC after 30 days, then the date when the RC was granted, that will be treated as effective date of registration. Okay. Let's say for example, on September 1st, the liability arises to get registered. September 10th, we applied for RC. September 17th, RC was granted to us. Even though RC was granted to us on September 17th, the effective date will be September 1st, the date when you become liable for registration. But the point is here, you comes to know about you are a registered person on September 17th. But actually you are a registered person from September 1st. Therefore, whatever the supplies that happens between September 1st to September 17th, we again need to issue a tax invoice, ma. That particular tax invoice is known as revised tax invoice. So, revised tax invoice is issued for the taxable supplies that are affected between effective date of registration, that is in our example September 1st, up to the actual date of RC, that is September 17th. In between these dates, whatever the supplies that happens, we again issue the invoice. That particular invoice is known as revised tax invoice. Okay. And So, sir, the question is here. What is the time limit for the issue of this revised tax invoice within 1 month? From which particular date this 1 month is needed to be counted? This revised tax invoice shall be issued within 1 month from the date of issue of RC. In our example, from September 17th, within 1 month, we need to issue this revised tax invoice. Okay, ma'am. The next point is with respect to invoicing. Only this point is important. Already we comes to know that there is no prescribed format for tax invoice in our GST. But whatever the particulars that are there in rule number 46 are there, then only it will be treated as a valid tax invoice. But to whom this invoicing concept is applicable? For them there is a prescribed format, ma, INV01. In this INV01, what is the thing we need to do, ma? We need to issue the revised tax invoice. Sir, we need to issue the invoice. Okay. So, what are the cases where this invoicing concept is not applicable? Every registered business whose aggregate turnover based on the PAN exceeds 10 crores in any financial year which is starting from 17-18 onwards, for them invoicing concept is applicable with respect to B2B supplies. Every registered person whose aggregate turnover is more than 10 crores in any financial year starting from 17-18 onwards is there. In those cases, with respect to B2B supplies, invoicing is mandatory. But for these people, even though their aggregate turnover is more than 10 crores, but invoicing is not required. What are the cases where even though the aggregate turnover is more than 10 crores, but still invoicing is not applicable? In that, the first one will be special economic zones. Already we know that with respect to special economic zones, there is a privilege. Once an area has been notified as special economic zone, it will be treated as outside Indian territory for all taxation purposes. That's why with respect to special economic zone, what is not there, this invoicing concept will not be applicable. In the same way, insurance, bank, financial institutions, NBFCs, generally they will undergo huge number of transactions. I think that's why with respect to them also, invoicing is not applicable. In the same way, GTA, unorganized business, passenger transportation, huge number of transactions, multiplex movie theater, huge number of transactions, government departments, local authority. Okay. With respect to them, what is the position? Definitely. With respect to them, what is the position? Even though the aggregate turnover is more than 10 crores, invoicing is not applicable. That is the only point you should remember with respect to invoicing. And without invoice, generally when the invoice is generated, one thing you need to remember is this point. GST invoice will be valid only with a valid invoice reference number. Once invoice is generated, along with QR code IRN, invoice reference number will be generated. Without a valid IRN, this particular invoicing is not a valid one. Okay. Once you follow this invoicing, there is no requirement of triplicate or duplicate invoices. And in the same way, there is no need to carry the physical copy when invoice is issued. These are the important points from the invoice point of view. Next point is dynamic QR code. With respect to dynamic QR code, what is the position? This dynamic QR code is applicable to the B2C supplies to a registered person whose aggregate turnover exceeds 500 crores. Starting from 17-18 onwards, definitely they are required to generate a dynamic QR code. So, this point is applicable to B2C supplies when starting from 17-18 onwards in any financial year, the aggregate turnover is more than 500 crores, this dynamic QR code concept will be applicable. Okay, why this dynamic QR code is there? To encourage the digital payments. And the advantage of this dynamic QR code is scan and pay in one go is possible. That means once you scan that particular QR code, directly the seller details will be displayed along with the amount that is needed to be paid. Therefore, scan and pay in one go is possible with respect to this dynamic QR code. And to whom this dynamic QR code is not applicable, even though the aggregate turnover in any financial year starting from 17-18 exceeds 500 crores, like insurance, bank, NBFCs, GTA, passenger transportation, multiplex movie theaters, OIDR service providers. With respect to these people, they are the exception to dynamic QR code, even though their aggregate turnover is more than 500 crores. Insurance, bank, NBFC, GTA, passenger transportation, multiplex movie theaters, OIDR service providers. With respect to them, what is the position, ma? Dynamic QR code is not required. Next point is bill of supply, ma. When this bill of supply is required, generally in two cases a bill of supply is required, ma. One is if at all you are making either exempted supplies or composition supplies. In those cases, what is the document we need to issue, ma? Bill of supply. If at all it is the exempted supply or a composite supply. In those cases, what is required, ma? A bill of supply is needed. Okay. Generally, whatever the contents that will be there in a tax invoice, except the tax details, all those details will be generally there in bill of supply. Okay. The question is here, sir, to a single person, we are making both taxable supplies as well as exempted supplies. In those cases, a single document can be issued or if separate documents are needed to be issued. That means with respect to taxable supplies, tax invoice, with respect to exempted supplies, bill of supply is needed to be issued separately or a single document can be issued. It depends upon which type of supply it will be. If at all it is the B2B supply, business to business, then even though you are making the supplies to a single person, separate documents for taxable supplies as well as exempted supplies is needed to be issued. If at all it is a B2C supply, in those cases, what is the position, ma? With respect to B2C supplies, a single invoice bill of supply can be issued, but it should contain both the details of tax invoice as well as bill of supply. If at all it is a B2B, separate documents are needed to be issued. If at all it is a B2C supply, a single invoice bill of supply can be issued. Next point is receipt voucher. Generally, whenever a registered person receives any advance from the recipient, as a token of that particular advance, receipt voucher will be issued by the supplier. As a token of advance, a receipt voucher will be issued. Sir, sometimes already we know that in case of time of supply, any advance in relation to goods is received, there is no need to pay any GST. But any advance that is received in relation to service, definitely we are liable to pay the GST. Definitely we are liable to pay the GST. Okay. Definitely we are liable to pay the GST. But at the time of receiving the advance, the rate of tax is not determinable. Then what is the rate of tax we need to apply, ma? 18%. If the nature of supply itself is not determinable, in those cases, definitely it will be treated as interstate supply. So, simply whenever any advance is received, as evidence of that, what is the document that will be issued, ma? Receipt voucher. But once the advance is received, due to any reason you are unable to make the supply and the tax invoice cannot be issued, in those cases, whatever the advance that is received from the recipient, definitely you need to return it. In those cases, what is the document that is needed to be issued? Refund voucher. So, in order to issue the refund voucher, majorly 3 points are required to be satisfied. First one, advance has already been received from the recipient and a receipt voucher was already issued. But due to some reasons, we are unable to make the supply and the invoice cannot be issued. If all these three cases are satisfied, then a refund voucher is needed to be issued. Okay. Next one is DC. Generally, what are the cases where a delivery challan can be issued? So, when a delivery challan is needed to be issued, generally in three cases a delivery challan is needed to be issued. First one, supply of the liquid gas where the quantity at the time of removal is not known. Okay, with respect to liquid gas, when it is going to be transported through pipelines, how much quantity that is going to be delivered is not known at the time of transporting the gas through pipelines. In those cases, instead of tax invoice, what is the document we need to issue? DC, delivery challan. In the same way, transportation of the goods for the reasons other than by way of supply. Simply, whenever there is a physical movement of the goods involved, definitely what is needed, ADC, a delivery challan or a tax invoice is needed. Whenever there is a physical movement of the goods was there, in all those cases, what is needed, either tax invoice or a delivery challan is needed. If at all it is a supply, always there will be a tax invoice. If at all the physical movement is for the reasons other than supply, like branch transfer, hire purchase, in those or sale or return basis, in those cases, definitely instead of tax invoice, what is the document that should be there, ADC, delivery challan. In the same way, when the goods are moving for job work, principal to the job worker or job worker to the principal, in those cases also it is not a supply. That's why what is the document that should be there, DC, delivery challan. Okay. In the same way, how many number of DCs shall be issued? Just like the goods, triplicate, 3 copies we need to issue. That means with respect to goods, 3 copies are required. Generally, with respect to services, there is no concept of DC. Okay. Whenever DC is issued, it should always be serially numbered. At the time of removal of the goods, it shall be issued. That is the point we need to remember with respect to delivery challan. Okay. The next concept we need to see is debit note and credit notes. Generally, with respect to credit note, it is required to be issued in 4 circumstances. First point is, who will issue this credit note? Supplier will issue this. And there are 4 circumstances where a credit note can be issued. First one, invoice value is more than actual value. The amount indicated in the invoice is more than actual supplied value. In those cases, a credit note is required to be issued. That means initially we ordered for 100 cement bags or 100 items. Invoice was already generated. But while sending the goods, we requested the supplier that please don't send 100 units, only send 80 units. In that case, invoice was already generated for 100 units. But whereas actual supplied value is 80 units only. In those cases, what is the position? For that 20 that will be there, what is the document we need to issue? A credit note is needed to be issued. Next one. Tax charged in the invoice is more than actual tax payable. Tax indicated in the invoice is more than actual tax payable. Okay. So, tax indicated in the invoice is more than actual tax payable. Let's say, for example, Instead of charging 18%, we charged 28% by mistake. What is the tax that was indicated in the invoice? 28%. What is the actual tax payable? 18%. Therefore, for that difference of 10%, a credit note is needed to be issued. Third one, sales returns. Already we know. With respect to sales returns also, a credit note will be issued. And a deficiency in the goods. In all these four cases, a credit note will be issued. First one, invoice value is more than actual value. Second one, tax indicated in the invoice is more than actual tax payable. Third one, sales returns. Fourth one, deficiency in the goods. In all these four cases, a credit note is required to be issued. Next one, a debit note is needed to be issued in two cases. A debit note is needed to be issued in two cases. What are those two cases where a debit note is needed to be issued? Invoice value is less than actual value. Tax indicated in the invoice is less than actual tax payable. Invoice value is less than actual value. Tax indicated in the invoice is less than actual tax payable. In those cases, definitely a debit note will be issued. Sir, who will issue this debit note or credit note? Supplier. Okay. The question is here. It's for each sales returns or each cases where invoice value is less than actual value, a separate debit or credit notes are needed to be issued, or a consolidated debit or credit notes can be issued is the question. Yes, a consolidated debit or credit notes can be issued in respect of multiple invoices issued in a financial year without linking them with their individual invoices. That means a consolidated credit note or debit note can be issued. So, is there any time limit with respect to debit note or credit note, ma'am? Yes. With respect to debit note, there is no such time limit. But with respect to credit notes, there is a time limit, ma'am. What is the time limit with respect to credit notes? The same time limit that was there in 16 subsection 4, the maximum time limit to claim the ITC. What is the time limit, ma'am? Next financial year, November 30th, or date of annual return, whichever is earlier. Next financial year, November 30th, or date of annual return, whichever is earlier. This is the point we need to remember. Okay. Next point is e-way bill. Generally, when e-way bill is required to be generated, we need to see that. E-way bill is required if at all two conditions are satisfied. That means the circumstances for creating the e-way bill. If at all two conditions are satisfied, in those cases, e-way bill is required. First one is, the first point is, there should be physical movement of the goods. Second one is, the consignment value is more than 5,000. If at all these two conditions are satisfied, then e-way bill is required. First one, physical movement of the goods shall be there. Second one is, the consignment value is more than 50,000. If at all these two conditions are satisfied, in those cases, definitely e-way bill is compulsorily required to be issued. Sir, if at all there is a sale or if at all there is a supply, then only e-way bill is required, or in other circumstances also e-way bill is required. I already told you that e-way bill is required whenever there is a physical movement of the goods. The physical movement reason can be supply or the cases other than supply. In both cases, definitely e-way bill is required to be generated. Okay. So, when e-way bill is required, ma'am? First condition, physical movement of the goods shall be there. Second one, the consignment value is more than 50,000. If these two conditions are satisfied, then e-way bill is required. But in two cases, even though the consignment value is less than 50,000 rupees, but e-way bill is required. What are those two cases? Even though the consignment value is less than 50,000 rupees, e-way bill is required. First one, first case is with respect to the job work. Second case is handicraft goods. First case is job work. Second case is handicraft goods. In those two cases, even though the consignment value is less than 50,000 rupees, if at all it is an interstate physical movement, what is required, ma? E-way bill is required. That is the point we need to remember. First one is job work. Second one is handicraft goods. With respect to those two cases, even though the consignment value is less than 50,000, if at all it is an interstate physical movement, what is required, ma? E-way bill is required. The next question is, what is meant by the word consignment value? Consignment value means the goods value determined in accordance with section 50, declared whether in the invoice or bill of supply or DC, and includes central tax, state tax, integrated tax and cess, and excludes the value of exempted supply. Simply, consignment value means transaction value less GST minus exempted value. Consignment value is equal to transaction value plus GST minus exempted supplies value. What is the amount we will get? It is known as consignment value. If the consignment value is more than 50,000, then e-way bill is required to be generated. Next point is, sir, what are the modes where e-way bill can be generated? There are different modes to generate the e-way bill, like by using the official website of ewaybillgst.gov.in or through the mobile app, Android app, through registered mobile number through SMS. And if at all you want to generate bulk e-way bill, separate softwares will be there. By using them also, e-way bill can be generated. Okay. Once e-way bill is generated, to whom it will be communicated? It will be communicated to three parties, supplier, recipient and the transporter. So, any details that are entered in the e-way bill is not correct or entered by mistake, in those cases, is it possible to modify the e-way bill? Answer is no, ma. Except Part B details can be updated. Rest of the cases, once the e-way bill is generated, it can't be modified. The option that will be left to you is to cancel it, ma. The time limit for cancellation will be within 24 hours from the time of its generation. Sir, with respect to e-way bill, if at all there is a other party, then also he can also reject the e-way bill. Let's say supplier generates the e-way bill. Then is it possible for the recipient to reject it? Yes. In the same way, sometimes recipient may generate that. Supplier has the option to reject that? Yes. The acceptance or rejection shall be communicated within 72 hours from the date, from the time the details are made available to him. The maximum time limit will be 72 hours. Okay. He can accept or reject it. If nothing was done on the part of the party, then it is deemed to be accepted by him. Okay. The next point is, sir, who is required to generate the e-way bill? Generally, with respect to e-way bill, the form number will be GST EWB 01. With respect to GST EWB 01, it will be having two parts, Part A and Part B. With respect to that, it will be having two parts, Part A and Part B. With respect to Part A details, generally majority cases, those details will be of invoice details, and Part B details. With respect to Part B details, what is the position, definitely? With respect to Part B details, what is the position, ma'am? Okay. Generally, Part A details will be filled by the consignor or consignee, and Part B details will be filled by the transporter. The question is here, who is required to generate the e-way bill? The person who is causing the physical movement of the goods is required to generate the e-way bill. The person who is causing the physical movement of the goods is required to generate the e-way bill. If the physical, what is meant by the word physical movement, ma'am? The person who is arranging the transport. If the consignor is arranging the transport, he is required to generate the e-way bill. If the consignee is arranging the transport, he is required to generate the e-way bill. But sometimes supplier or recipient, only one of them is registered. Then automatically the registered person is required to generate the e-way bill. If the supplier is a registered person, recipient is an unregistered person, in those cases, supplier being registered, he is required to generate the e-way bill. If the supplier is an unregistered person, recipient is a registered person, in those cases, recipient is required to generate the e-way bill. So, generally, who will fill the Part A details, ma? Like invoice details, the consignor or consignee will fill the Part A details, ma. Now, it will be assigned to the transporter. Practically, transporter will fill the Part B. But, if at all authorization was received from the consignor or consignee, Part A details may also be furnished by the transporter or the ECO or by the courier agency. Generally, who will fill the Part A details, ma'am? Consignor or consignee. But if at all prior authorization was received from consignor or consignee, Part A details can also be filled by the transporter or the ECO or the courier agency also. Next, Part B. With respect to Part B, once the Part A was generated, in order to fill the Part B, 15 days time period will be there. But once Part B is filled, then only it will be treated as a valid e-way bill. Okay. And Part B will be filled by the person who is transporting the goods. But if at all it is our own conveyance, then Part B will also be filled by consignor or consignee. If at all it is the own conveyance, then there will not be any transporter. Na? In those cases, the consignor or consignee will himself fill Part B details also. So, there is a change in the vehicle once the transportation was started. In that case, is there any requirement of generating the new e-way bill or old e-way bill can be modified? Already I told you that Part B details can be updated any number of times. Part A details can be updated any number of times. Okay. So, where the goods are transferred from one conveyance to another conveyance, there is no need to generate the fresh e-way bill. Old e-way bill can be modified. Old e-way bill can be modified any number of times. That means the Part B vehicle details can be updated any number of times. But the point is, once you fill the Part B, then only valid e-way bill is generated. But there are two exceptions to that. That means even though Part B details are not filled, but still it is a valid e-way bill. What are the two exceptions where Part B is not required to be filled? Where the distance is up to 50 kilometers from consignor place to transporter place or from transporter place to consignee place. Consignor place to transporter place or transporter place to consignee place. If the distance is up to 50 kilometers, there is no need to generate the Part B. But Part A is required there. Okay. And in the same way, another important point you need to keep focus is, ma'am, if the consignment value is more than 50,000, neither the consignor nor the consignee generated the e-way bill, then it is the transporter responsibility to generate the e-way bill. Keep it in mind that point also. there is a physical movement of the goods and the consignment value is more than 50,000, but neither the consignor nor the consignee generated the e-way bill, then it is the responsibility of the transporter to generate the e-way bill. Our next point is simply consolidated e-way bill. That means if at all the transporter is carrying the multiple consignments, initially you need to generate the individual e-way bills. But for the sake of transport convenience, the transporter can consolidate all those e-way bills into a one trip sheet like document. That one is known as consolidated e-way bill. But before consolidated e-way bill is generated, their individual e-way bills are required to be generated. That is the point we need to remember. In the same way, the next point will be validity period of e-way bill. Here the cargo was divided into two types. One is over-dimensional cargo and second one is other than over-dimensional cargo, that is normal cargo. If at all it is a normal cargo, then what is the validity period of e-way bill? It depends upon distance generally. If the distance depends upon distance, if at all it is a normal cargo, what is the validity period of e-way bill? For every 200 kilometers or part thereof, 1 day validity period will be given. If at all it is a normal cargo. Let's say 600 kilometers distance is there in relation to normal cargo. What is the validity period of e-way bill? For every 200 kilometers or part thereof, 1 day validity period will be there. Based on that, 600 kilometer means 3 days validity period will be there. What is the next one? If at all it is a over-dimensional cargo or a multimodal shipment where some part of the journey was involved in ship. If at all it is a over-dimensional cargo means heavy vehicles, or it is a multimodal shipment, that means the goods are transported through different modes of transport and some part of the journey was there through ship. It will be equal to over-dimensional cargo. Whether it is a over-dimensional cargo or a multimodal shipment where some part of the journey involved in ship, in those cases, how to calculate the validity period of e-way bill? For every 20 kilometers or part thereof, 1 day validity period will be given. If at all it is a normal cargo, for every 200 kilometers or part thereof, 1 day validity period will be given. If at all it is a normal cargo, every 200 kilometers or part thereof, 1 day validity period will be there. If at all it is a over-dimensional cargo or a multimodal shipment where some part of the journey involved in ship, then for every 20 kilometers or part thereof, 1 day validity period will be there. Okay. Next point is blocking of e-way bill generation. When e-way bill generation can be blocked, these are the cases where e-way bill generation can be blocked by the department. First one, when you are there in composition scheme, CMP08 was not filed for continuous 2 quarters. If at all you are following normal scheme, then GSTR 3B was not filed for continuous 2 months. And if at all GSTR 1 was not filed for any 2 months, when your RC was suspended. In these 4 circumstances, e-way bill generation can be blocked by the department. What are the cases where e-way bill generation can be blocked? With respect to composition scheme, CMP08 was not filed for continuous 2 quarters. With respect to GSTR 3B. Okay. It was not filed for continuous 2 months. Whereas with respect to GSTR 1, if at all it was not filed for any 2 months. And your RC was suspended. In these 4 cases, e-way bill generation can be blocked by the department. So these are the important topics with respect to chapter number 8. Okay, the next chapter will be with respect to payment of tax. With respect to payment of tax, not that much important area we need to keep focus. Generally, with respect to payment of tax, with respect to payment of tax here, the payment will be done in different through different ledgers. In our GST, there are three types of ledgers. One is electronic cash ledger, electronic credit ledger, and electronic liability register. With respect to electronic cash ledger, credit ledger, and liability register, generally, electronic cash ledger, just like our Paytm wallet, because there will not be directly any money, we need to transfer the money from our bank account. We need to transfer the amount from our bank account. Okay. With respect to that, whenever we deposit the money in our electronic cash ledger, it will be reflected in the credit side of electronic cash ledger. When we use that particular amount for the payment of any tax, it will be reflected in the debit side of electronic cash ledger. When we deposit the money, it will reflect in the credit side. If we use the money for the payment of tax, it will be reflected in the debit side. And in the same way, with respect to e-credit ledger, that means it will reflect, credit side will reflect the ITC availed and debit side will reflect the ITC utilized. Okay. And with respect to electronic liability register, debit side will reflect the payable amount and credit side will reflect the amount paid. Okay, this is the overview. But in electronic cash ledger, there will be four major heads, IGST, CGST, SGST or UTGST and cess. Every major head is divided into five minor heads like tax, interest, penalty, late fee and others. Every major head will be divided into five minor heads like tax, interest, penalty, late fee, others. Okay. Electronic cash ledger, it will be having four major heads, IGST, CGST, SGST or UTGST and cess. Every major head was divided into five minor heads, like tax, interest, penalty, late fee and others. Okay. The question is here, sir, how to deposit the money in electronic cash ledger? There is no physical chalanas, you need to generate chalanas online. And for all the heads, all the major heads or minor heads, there will be single challan for the depositing the tax. Once the challan is generated, it is valid for 15 days. Within 15 days, you can use that particular challan for, what we can say, a payment of taxes. Okay. The question is here, how to deposit the tax in electronic cash ledger? There are different modes of depositing the tax in the electronic cash ledger, like internet banking, debit card or credit card, NEFT, RTGS or IMPS, UPI, or over the counter through cash, check or DD. But there is a limit with respect to OTC, over the counter, less than or equal to 10,000 rupees per challan per tax period. These are the modes for depositing the tax in the electronic cash ledger. Internet banking, debit card or credit card, NEFT, RTGS or IMPS or UPA. By using those modes, without any limit, we can deposit the money in electronic cash ledger. But whereas with respect to this NEFT, RTGS, IMPS, without any limit we can deposit. But with respect to OTC, over the counter, we can deposit the money up to 10,000 rupees only. Sir, if at all we need to pay more than that, you are having the other modes of depositing the money, you can utilize them. Okay. And with respect to exceptions to OTC, over the counter, that means even though there is a limit of 10,000 was there, we can deposit in excess of 10,000 through OTC. Those are called over the counter exceptions. In that, the first one is when GST is needed to be paid by the government department itself. Let's say AP Tourism is going to deposit the GST with the GST department. In those cases, what is the position? Definitely. In those cases, what is the position? even though it is over the counter, we can deposit more than 10,000 rupees. And with respect to this next case, during the recovery proceedings, any movable or immovable properties were sold. In those cases also, we can deposit the money over the counter more than 10,000 rupees. In the same way, the third case will be any ad hoc deposits are going to be made. Any temporary deposits are going to be made with respect to this any investigation. In those cases also, you can deposit over the counter more than 10,000 rupees in the electronic cash ledger. In rest of the cases, if you want to deposit more than 10,000, definitely you can use the other modes other than over the counter. Okay. The next point is, sir, if at all you are paying through check, let's say for example on September 17th you have given the check and the amount was deposited in the government account on September 20th. The question is here, what is the date of deposit of tax? Check issue date, that is September 17th, or the amount credit date, that is September 20th, whichever is which date shall be taken into account. The date when the amount is credited in the date when the amount is credited cash ledger, sorry, in the government account is deemed to be the date of deposit of tax. The date of deposit means the date of credit of the amount in the account of government. Sir, by mistake, I deposit the money in IGST. Is it possible to transfer the amount to CGST? Yes. Sir, I am having the surplus balance in interest column. Can I transfer it to the tax column? Yes. That means cross utilization of the funds across major or minor heads is possible. The form that will be used for transferring the money between multiple major and minor heads will be GST PMT 09. Okay. Sir, within the same unit we can transfer, that is okay. But the question is here, within the same organization, from one unit, surplus electronic cash ledger balance can be transferred to another branch electronic cash ledger. Answer is yes. A registered person can transfer the surplus amounts of electronic cash ledger to another unit of the same organization, but the condition is the registered person should not have any unpaid liability. That means, what is the tax liability of this particular person who is transferring it? That means the transferor taxes are fully paid, then only he can transfer his surplus cash balance to another unit of the same organization. Okay. But keep it in mind, generally, electronic cash ledger balance is there, IDC balance is there. But there is a restriction with respect to IDC balance. IDC available can be used to pay tax amount only. It can't be used to pay any interest, penalty, late fee, etc. That means by using the IDC balance, only tax amount can be used. By using the IDC balance, only tax amount can be used. Okay. But whereas with respect to other cases like interest, penalty, late fee, definitely what we can't do, we can't use ITC to pay that. Okay. But sir, in which way we can make the payments with respect to that? We can make the payment with respect to those tax other than tax like interest, penalty and late fee by using the electronic cash balance. Okay. So with respect to this ITC balance, it can be used to pay only tax only. But whereas with respect to electronic cash ledger balance, it can be used to pay tax, interest, penalty, late fee or whatever the amount that was there in relation to, that particular electronic cash ledger. Balance can be used to pay any amount in relation to GST. That is the point we need to remember. Okay. Sir, with respect to order of discharge of the tax, in which way we can discharge our tax liability? Whatever the IDC balance or whatever the electronic cash ledger balance we are having with us, definitely that particular balance can be used to pay in the order of this particular order. First, the amount can be used for any previous tax period amounts. Till surplus balance is there with you, it can be used to pay any self-assessed tax. In the same way, still surplus balance is there, 73, 74, show cause notice amounts also, we can utilize that particular amount. What is the order of discharge of the tax? First one, the amount can be used to pay any previous tax period amounts. Still surplus balance is there, it can be used to pay current tax period amounts. Any surplus balance is there, it can be used to pay 73, 74 department demanded amounts. Okay. This is the order of discharge of liability, what we can remember. Okay. Okay, ma'am. Along with the order of discharge of liability, the next point we need to see is interest on delayed payment of tax. So, with respect to interest on delayed payment of tax, section 50 deals with interest on delayed payment of tax. So, when generally interest is needed to be paid, whenever there is any delay in payment of the tax, interest is needed to be paid. Whether it is self-assessment or whether it is demanded by the department. In both cases, the rate of interest will be 18% per annum. Okay. The rate of interest will be 18% per annum. So, on which amount we are liable to pay the GST? Is it will be there on the gross amount or it will be there on the net amount? What is your answer? With respect to gross liability and net liability, what is meant by the word gross liability? Before deducting the input tax credit, the total output tax liability that is there is known as gross tax liability. What is meant by the word net tax liability? After deduction of IDC, what is the remaining amount that will be there? That is known as net tax liability. Okay. So, with respect to this, if return was filed but short payment is there, then you are liable to pay the interest on the gross amount. Return was filed belatedly as well as tax is also paid belatedly. In those cases, you are required to pay the tax on, you are required to pay the interest on net amount. I am repeating once again. Return was filed within the due date, but there is a short payment of tax. In those cases, you are liable to pay the GST on, gross amount. Return was filed belatedly as well as tax is also paid belatedly. In those cases, you are liable to pay the GST on net amount. Okay. But whenever department demands any amount, in those cases, always pay the tax, always pay the interest on the gross amount. Whenever the department demands any amount, in those cases, you are liable to pay the interest always on gross tax liability. Okay, ma. And sometimes interest is needed to be paid for the wrong availment of IDC also. In those cases, from which date you are liable to pay the interest? When IDC was wrongly availed or when the wrongly availed IDC was utilized. You are required to pay the interest when wrong IDC was utilized. Interest shall be calculated on the amount of IDC wrongly availed and utilized for the period starting from the date of utilization, not the date of availment here, from the date of utilization till the date of reversal of payment of tax. Definitely you are liable to pay the interest. Okay. Sir, from what is meant by date of utilization here? the date when your ITC closing balance falls below the amount of ITC wrongly availed in that particular month, it is deemed that the wrong availment ITC that was there previously, now it was utilized. In that case, from which month you are liable to pay the interest? The month in which the ITC closing balance, electronic ledger closing balance, falls below the amount of ITC wrongly availed. Okay, in those cases, it is said that in that particular month, ITC was utilized. From which date you are liable to pay the interest? With respect to that particular month, the date when GSTR 3B was filed or due date of the return, whichever is earlier, from that particular date until the interest is paid, until the wrong availment of ITC was reversed, up to that particular period of time, you are required to pay the interest. In all other cases, when the amount is debited in the electronic credit ledger, when there was a debit entry in that electronic credit ledger, that particular date is deemed to be the date of utilization. Okay, this is a point you need to remember with respect to our chapter number 9, payment of tax. So the next point will be, the next chapter will be chapter number 10, returns under GST. In this also very few points we need to discuss here. So with respect to that, with respect to normal taxpayer, that means with respect to the regular taxpayers, that is who are following section 9, they are required to file 3 returns, GSTR 1, GSTR 3B and GSTR 9. GSTR 1, what is this GSTR 1? It is a monthly statement of outward supplies. Who are required to file this? Every registered person, including the CDP. What is the due date of filing this GSTR 1? Next month, 11th month. With respect to September month, what is the due date of GSTR 1? October 11th. But if at all you are following QRMP scheme, that is quarterly return, monthly payment scheme, in those cases, quarter ending next month 13th. Say for example, with respect to first quarter, April, May, June, July 13th will be the due date. July, August, September, with respect to that, what is the due date, July, August, September, October 13th will be the due date. So with respect to GSTR 1, with respect to GSTR 1, what is the position, if at all GSTR 1 is going to be filed on a monthly basis, GSTR 1 is going to be filed on a monthly basis, then next month 11th, whereas with respect to GSTR 1, QRMP scheme, if at all they are following, then quarter ending next month 13th month. And with respect to GSTR 3B, if at all it is a monthly return, next month 20th, that means with respect to September month, October 20th will be the due date. And if at all it is a quarterly return, in that case, what is the position, with respect to QRMP scheme? With respect to QRMP scheme, if at all you are following that, then 22nd or 24th, depending upon the state, you need to file the GSTR 3B. And what about GSTR 9? With respect to GSTR 9, it is the annual return. Every registered person other than ISD, TDS deductor, TCS collector, NRDP, these people, except these people, rest of the people are required to file this annual return. The due date will be next financial year, December 31st. So, the people who are following the normal scheme, they are required to file on a monthly basis 2 returns. One is GSTR 1 and second one is GSTR 3B. And annually he is required to file GSTR 9. And the people who are following this composition scheme, generally they are also required to file 3 returns. One is on a quarterly basis, 2 returns on yearly basis. With respect to CMP 08, it is a quarterly statement for the payment of self-assessed tax. Form number will be CMP 08 and the composition supplier is required to file this. And what is the due date of filing this particular CMP08 quarter ending next month 18. With respect to first case, with respect to first quarter, I mean to say April, May, June, July 18th will be the due date. With respect to second quarter, October 18th will be the due date of CMP08. Third quarter, January 18th will be the due date. Last quarter, April 18th will be the due date. And this CMP08 consolidated data will be filed in the form of GSTR form. It is a yearly once return. This is required to be filed on or before April 30th of next financial year. And just like the normal scheme person, the composition supplier also required to file GSTR annual return. It is known as GSTR 9. The due date remains the same next financial year, December 31st. And another one is GSTR 5, which is required to be filed by the NRDP. It is also a monthly return. And what is the due date of this GSTR 5? Next month 20th, or the date when RC expired. From that particular date, 7 days, whichever is earlier. Let's say, for example, on September 1st, with 15 days validity, RC was granted. September 1st, 15 days validity, RC was granted. In those cases, what is the position? What is the due date of this GSTR 5? That means October 20th with respect to September, or the date of expiry of RC, September 15th is expiry of RC. From that particular date, 7 days means September 22nd or October 20th, whichever is earlier. September 22nd will be the date of filing of this GSTR 5. Next one is GSTR 10. It is the final return. Whenever your RC is cancelled or surrendered, in those cases, GSTR 10 is required to be filed, and due date will be within 3 months from the date of cancellation or date of order of cancellation, whichever is latter date. And these two are the Chalanasma. PMD 06 is for the payment of GST for the first 2 months when you opted for QRMP scheme. The date will be next month 25th. PMD 09 is for transfer of balance between major or minor heads of the electronic cash ledger. GSTR 2A and GSTR 2B. GSTR 2A generally reflects the purchases, whereas GSTR 2B will reflect the IDC balance there. GSTR 2A is a dynamic document. It will be updated on real-time basis. GSTR 2B is a static document. It is made available once in a month, only on 14th of next month. Okay, apart from that, the things we need to remember is here. What are the details that are needed to be uploaded in GSTR 1? That means scanned copy of the invoices or invoice details are needed to be uploaded in GSTR 1. Invoice details only. So, if at all it is a B2B supply, that means supplier and recipient both are registered. In those cases, whether it is intrastate supply or interstate supply, in both cases, you are required to upload separate invoice-wise details. If at all it is a B2C supply, then it depends upon whether it is intrastate supply or interstate supply. If at all it is intrastate supply, consolidated details. If at all it is interstate supply, depends upon value. Value less than or equal to 2.5 lakhs, consolidated. Value more than 2.5 lakhs, separate invoice-wise details are required to be uploaded. Okay. This is the thing you need to remember with respect to GSTR 1. Say this. Scanned copy of the invoices are not required. Only invoice details are required to be uploaded. Sir, in a particular month, we did not make any supplies. In that month also, you are required to file GSTR 1? Yes, ma'am. Yes, ma'am. Definitely, you are required to file GSTR 1. Even though no supplies affected in that particular month, that return is known as nil return. Sir, if the previous month GSTR 1 is not filed, Then is it possible to file the current month GSTR1? Answer is no. In order to file current month GSTR1, we are required to file GSTR1 for the previous month. Then only you can file this GSTR1 for the current month. Okay. Next one, due dates of payment of tax with respect to composition tax payer. What is the due date of payment of tax? Quarter ending next month, 18th. If at all you are a normal taxable person other than QRMP scheme, where you are paying the GST on a monthly basis, then next month 20th. If at all you are opting for QRMP scheme, then first 2 months, 25th of the succeeding month. Last month due date of payment of tax will be 20th of next month. But whereas with respect to CDP and NRDP, they are required to make the advance payment of tax. Okay, that is the thing you need to remember. Remaining things are not needed. Next one is with respect to that quantum of late fee. Whenever the tax is not paid on or before the due date, in those cases definitely you are required to pay the late fee. With respect to GSTR1, GSTR3B, GSTR10, GSTR10 final return, with respect to them, if at all there is no outstanding liability, that means if at all it is a nil return, then per day 10 rupees subject to a maximum of 250 will be the late fee. If at all it is a normal return, then what is the late fee will depends upon previous financial year turnover. If in the previous financial year turnover, if the aggregate turnover is less than or equal to 1.5 crore in the preceding financial year, what is the late fee? Per day 25 rupees subject to a maximum of 1000. If in the previous financial year, if the aggregate turnover is more than 1.5 crore but less than or equal to 5 crores, in those cases per day 25 subject to a maximum of 2500. If at all your aggregate turnover is more than 5 crores, in those cases per day 25 rupees subject to a maximum of 5000. Okay, these are the rate fees, but whereas with respect to annual return, one amendment was also there. We need to see that amendment. So this is late fee with respect to annual return. It is also depends upon turnover. If at all in the preceding financial year, if at all in the preceding financial year, if the aggregate turnover is less than or equal to 5 crores, then per day 50 rupees or 0.04% of the turnover, whichever is lower. If at all your previous financial year turnover was 5 crores but up to 20 crores, in that case per day 100 rupees or 0.04% of the turnover, whichever is lower. If at all previous financial year the turnover is more than 20 crores, per day 200 rupees or 0.50% of the turnover, whichever is lower. Okay, here this 50, 100, 200, in that it will be CGST and SGST equivalent amounts will be there. There can be the late fees with respect to annual returns also. These are the most important areas in our chapter number 10. These are the most important areas you need to keep focus on. There ends chapter number 10 also.